Yeah. Oh.
NBC Plus.
What hotspot Meta is now in talks with a number of crypto companies as it considers introducing stable coins as a way to manage payouts. This is coming from a new report in Fortune magazine. It comes years after Meta's earlier attempt to remember how a cryptocurrency blew up. Fortune saying that Meta's recent outreach to crypto companies focuses on the ability of stable coins to pay individuals in different regions without the high fees that would traditionally associated with other forms of payment. It also says that Meta has now hired a new vice president of product with crypto experience to help move those discussions along. So remember that whole adventure that they went on, that ultimately Libra, that didn't make it, but this may be the next incarnation.
You remember I got a lot of play when I said this is like the dumbest thing ever. It was centralized. It was compared to Bitcoin. There was nothing Libra had to offer. I said it the day it was announced, and nothing did come. Coming up, President Trump looking at hiking taxes on some of the richest people in America. Details on that story next. And as we head to break, here's a look at yesterday's S&P 500 winners and losers.
AI meeting agent.
Good morning, everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. The futures this morning are a bit higher. Dow futures now indicated up by over 50 points. You've got the NASDAQ up by 75 and the S&P futures up by about 17. If you take a look at the treasuries this morning, you'll see that right now the 10-year is at 437. The 2-year is a little lower of a yield at 386. Cryptocurrencies have been on the rise. Bitcoin is above 103,000 this morning. And then you've got Ether that has picked up sharply. It's up by about 11.6%.
Yeah, that got hit much more than
Yep.
back, we're down like 1,700 or something. Expedia shares tumbling. The company cut its full-year outlook for gross bookings as well as revenue. Saw weaker than expected travel demand in the first quarter from U.S. domestic travel and international travelers coming into the U.S. First quarter results missed estimates. Second quarter guidance was also lower than expected.
Meantime, shares of Pinterest are sharply higher. The company's earnings missed estimates, but revenue came in higher than expected. Monthly active users of 570 million, topping estimates. Second quarter sales guidance coming mostly higher than the street was expecting. Now, the company said small pockets of spending had been impacted by tariffs in recent weeks, including Asia-based e-commerce retailers cutting back on digital ads.
And news from Japan early this morning, Panasonic saying that it plans to slash 10,000 jobs as part of a push to boost profitability by cutting non-growth operations. Half of those cuts will be in Japan and the other half at its overseas facilities. Panasonic is a major battery supplier to Tesla. Among the businesses that it's going to be trimming, industrial devices and televisions, and that stock right now up by just over 2%. We've got the latest CNBC SurveyMonkey Small Business Survey out today. It shows that confidence has declined in the quarter, down to 51 points from 56 in the previous quarter. 30% of small business owners describe the economy as good or excellent. That's a drop of about 10%. The views vary sharply, though, by political affiliation. Only 8% of Democrats say the economy's in good shape, compared to 51% last quarter. Optimism among Republican small business owners is up to 52%, and that's a jump of 21 points. So much of this influenced by your political perspective on all of it. Inflation and tariffs are the top concerns for small business owners. 70% believe that the U.S. is headed towards a recession. 59% are worried about the ongoing impact of tariffs on their businesses. And one more note for you, women small business owners are less optimistic than men about the economy. 21% of the women say that the economy is excellent or good, compared to 34% of men.
Coming up, a CNBC investigation revealing the shadowy world of foreign criminals trying to cripple the U.S. supply chain, a crime costing the cargo industry $1 billion or more a year. End of the road is next. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll come right back. CBC investigation revealing how criminal gangs in foreign countries are exploiting the very technology meant to protect the U.S. supply chain. They're targeting companies with cyber attacks, crippling freight, and stealing fortunes in cargo at the same time. Here's Courtney Reagan with End of the Road.
America's supply chain under attack. Thieves brazenly breaking into a truck. A hooded criminal loading stolen items through a hole in a warehouse door. Flash mobs hitting trains. It's grand theft cargo.
CHP search warrant. Open the door.
Merchandise ending up in black market stores where stolen goods are sold after being hijacked. Inside, it looks like a retail store, except the racks are stocked with stolen Lululemon and other apparel. Police say the suspect advertised the store on social media, and you could make an appointment to go there and shop.
The product is supposed to go to stores, it never made it, and it's being sold online.
Here, suspects swipe $500,000 worth of Meta's Ray-Ban glasses and Oculus headsets from this Texas warehouse. Nike shoes are another favorite target. More than $300,000 worth of its Air Jordans found in this truck after being swiped from a train in California. Criminal networks here and abroad are exploiting technology meant to improve supply chain efficiency and using it to steal truckloads at a time. Armed with doctored invoices and an army of fraudsters ready to pick up the phone and impersonate the staff of legitimate companies, according to law enforcement.
This needs to be taken seriously at the national level and regarded as one of many national security threats we're facing right now.
How serious is cargo theft right now?
It's at an all-time high. We've never seen it this bad since we've been tracking data since 2009.
In 2024, the company had 3,798 reported incidents, representing a 26% increase from 2023. Industry experts say losses are close to $1 billion or more a year. Companies fighting back with technology to track trucks and sound the alarm to potential heists. What's happening in that room back there?
As I say, that's the kind of the Jason Bourne aspect of what we do. We do use a lot of technology to provide the outcome we're looking for.
At Overhaul, a supply chain security company, employees in Austin and Mexico City are tracking a truck that just left Texas headed to New York.
The device is getting light at the same time that the shipment is no longer in motion. It's also stopped in a red zone, which is the first 200 miles after departing origin, which is historically one of the riskiest areas for a shipment to stop.
Do you think it's going to get worse before it gets better?
I don't know. I hope it gets better, but when there's very little risk, but the reward is very high, the return on investment, it's almost 100%. Why would you stop?
Lululemon told us it's taking decisive action against cargo theft. Meta declined to comment, and Nike did not respond to repeated requests for comment. To see the full story, go to cnbc.com/end of the road. This is just about 1/10 of the full story, so there is so much more. Just go online to see it.
So, hold on though. How does this type of fraud actually occur?
Okay, so what we're largely talking about is called strategic cargo theft. It's like catfishing, somebody told me. A bad guy goes online and impersonates a legitimate person in the supply chain, saying, hey, I'm a broker. And they've done that by
I'm a
phishing
broker
their
looking
credentials.
for...
So brokers connect the shippers of the goods to the truckers.
Right.
And so the brokers will say, put a big post up on this website called DAT. And it's sort of like jobs, right? And so the truckers can go on and say, ooh, I'll take that job. And so then the trucker gets the information, goes to a pickup point, picks up the goods and delivers it. So we actually saw in real time this happen where sort of a bad guy, these criminal networks, were impersonating this brokerage. And they made all these listings online. And so they got legitimate truckers to go to Amazon warehouses, pick up legitimate goods, and drop them off at a location that they were directed to drop off, but it wasn't
So it's
the
not the truckers,
legitimate.
it's the but
most of the time it's not, but it can be.
Don't these places work with brokers that they know?
Yes,
that they have
and that's the thing. It was a
track
legitimate
records?
broker in name, and so what had happened was basically the bad guys fished the credentials and got an employee to give them their login information. You know, it was sort of a, hey, I need you to verify And the employee said, oh yeah, I'll verify, my login credentials. Well, that was a phishing attack. And so many of these individuals are in countries overseas. We talked to someone that said, look, we've tracked them to 32 countries. And there are certain countries that can be hotbeds. Pakistan was one example where they have a lot of legitimate companies that are operating there in the United States supply chain, but they also have a lot of illegitimate companies, and so it makes it very difficult.
Wow.
But a lot of it has to do with just impersonating a legitimate carrier or trucker in some cases in the system. And then once you sort of figure out how the system works, I hate to say it, it looked pretty easy.
But
I feel like I could
it's not
probably
like
do it
they're
now.
pulling these truckers over at gunpoint or something. They just tell them, drop it at this location.
Well, what's funny is that most of the time, the vast majority of the time, nonviolent crimes. And a lot of the times, the truckers have no idea.
Right.
Because they're just following their instruction, and then all of a sudden, they never get paid. And then at some point later, the shipper of the goods said, hey, where did that truckload of stuff go? And so that's another problem because it's very underreported. It takes a really long time in some cases to figure out what happened, where it went, at what point it went missing.
I thought they had better ideas of what was happening in the supply chain and better ability to track
It's
it.
wild. All of this technology that was meant to make things more efficient can be hacked pretty easily, it turns out. And the average loss per shipment is $203,000. So it's nonviolent, and it's a very high return.
And they're doing it from outside the country. So
A lot of cases they are. And they're sort of like ghosts, right? They disappear. They're never actually the physical people doing the work. So the bad guys are getting the good guys to do the dirty work for them.
How did you first learn about this?
That's a really good question. How did I first learn about it? Because when you look at actually the public companies' transcripts, it is like hardly a mention anywhere. That's a great question. I cannot remember how I first learned about it, but when we were embedded with the California Highway Patrol doing our organized retail crime piece, it was the last day of shooting. I remember asking one of them, do you do a lot of cargo theft? And they said, well, we do actually, and there's a whole separate task force, and yes, it is sort of like retail crime, but it's very different in how it's done, what's stolen. And so then I started looking into it a year ago, and then once we really dug in, it's been 6 months in the making.
Well, thank you. We will all go watch
The
it.
piece
Check
is
it out.
great. I really
Check it out.
can't encourage you to look at it enough. Thank you.
We did catfish, no, and now I see that we get you got catfish.
Oh, yeah.
What did it say? You're grinding before the and then you say, meanwhile, you should buy this stock.
Right.
I know, I get
constant
and
impersonation.
it's whack-a-mole.
It is.
Do you get
That's exactly
catfished?
I don't know if I get catfish.
I'm sure you do.
I get constantly that people
Pretending to be me.
Pretending to be
Yes, yes, yes.
So that's what this is.
like
Yes.
whack-a-mole.
There's
So
all
they're
those people.
pretending to be legitimate companies.
But if you look at it, it's so crazy. Like, no, I'm not telling you to buy Bitcoin or buy this
Right.
company
Of
or buy
course.
this penny stock. No.
Yours is pretty obvious.
So we're legitimate people.
Yeah.
Yeah, you're not the bad guys. You're the legitimate players.
Good to know. Thank you.
All right, when we come back, President Trump is pressuring lawmakers to raise taxes on some of America's highest earners. We're going to take you live to Washington, D.C. next. That's a topic that we will also tackle later in the show with White House economic advisor Kevin Hassett. Squawk Box will be right back.
Trump administration now reportedly considering, once again, raising taxes on some of America's highest earners. Emily Wilkins joins us now from Washington. There are some twists to the new proposal, Emily.
There are lots of twists, Joe, and we're following them all. The latest news, yes, is that Trump's ramping up pressure on Congress. He had a call with Speaker Mike Johnson asking him to raise taxes on the highest earners in that upcoming tax package. We have the details of the White House proposal. They're asking for a 39.6% tax rate on individuals making $2.5 million or more. Of course, the current rate, 37%. The proposal from the White House would also include a carve-out for small business owners who count the income from their business on their personal taxes, and that addressed some concerns that lawmakers had. They did not want small businesses to be penalized by a higher tax rate. Now, GOP leaders in the House, we've discussed this before. Previously, they cast doubt on this idea. They didn't think it was viable. But right now, lawmakers really need to find revenue raisers in order to pay for not just extending that 2017 tax law, but all the other things that Trump wants, like no tax on tips. And this package is going to cost a lot. The Peter G. Peterson Foundation estimated that extending the 2017 law and then giving Trump most of the items he wants could cost more than $9 trillion, and that's one of the middle-of-the-road estimates. We've seen estimates that have gone higher. The top tax writer in the Senate, Senator Mike Crapo, told Hugh Hewitt yesterday that he is actually not a fan of this higher tax proposal, but he notes that other lawmakers in the House and the Senate do support it, and he said if Trump really does weigh in and push this, it's going to have a major impact, in suggesting that there is a path forward to get this into the final bill. Now, Republicans are still fighting over the details of the tax bill. A proposal to raise the SALT cap to $30,000 for both individual and joint filers was shot down last night by 4 House Republicans. All New Yorkers, they said in a statement that the proposal risked derailing the entire bill, calling a higher SALT cap not a luxury but a matter of fairness, and suggesting they'd vote against a package if they didn't see a higher cap. And of course, these small margins in the House, it means that those 4 lawmakers could sink the bill if there's not a change. We're going to expect to see a few more details soon on the tax package. It's expected to get its first vote in the House next week on the Ways and Means panel. We're expecting that to begin Tuesday, and a lengthy markup expected to go into the night. And that will be the first hurdle that this tax bill is going to clear, but certainly not the last. Guys?
Yeah. I've been against that all along. The carve out for small businesses makes a big difference. The top marginal rate that was cut from 39.6 used to start at what number, Emily? Like much lower than $2.5 million. It was down in, and they weren't much high. Yeah, especially in certain states, they weren't high earners at all. That when it went to 37, so going back to $2.5 million and $5 million for joint filers wouldn't be the end of the world necessarily. If you're doing it does redistribute which segments of Americans are carrying what type of load for taxation. So I can see how you could almost make a case for it. I think Trump is going to go with it. That's what I'm hearing. Anyway,
Trump is already behind it. The question is, will they get the votes in the House?
Well, he wasn't behind it, but when you go to 2.5 to 5, and then you carve out small businesses, that makes it different. And you're doing all those other. What was interesting what you said, Emily, was that the 30,000 cap. It's not that they're saying no, we can't. We can't blow out the deficit with more giveaways with the SALT cap. They don't like it because they want the cap is too low.
Yeah.
So they wanted actually higher than that, which would be even more costly to make that cap higher.
And this is the balance, Joe. This is the balance they're having to deal with. If they want to do things like a higher SALT cap, if they want to do things like no tax on tips, benefits for seniors, all this other stuff that's been proposed, all of that costs, and they have to. The way that they've structured their framework that got passed the other month, they can't go over a certain limit. They have to find some revenue raisers somewhere.
And carried interest too, right?
Yeah.
That's right now they'll say everything is on the table. I've heard some pushback on carried interest, folks saying it just doesn't go far enough, it doesn't bring in enough revenue. But at this point, I would say it is absolutely still on the table, and something that the White House does appear to be pushing for.
Yeah, I read yesterday the White House was behind.
I know. some conversations where it's definitely something. Yeah.
I guess the question is whether it's still going to be enough in terms of raising revenue to ease the deficit hawks.
You're going to have to say growth. You're still going to have to fall back on the growth.
And are there Republicans who have been deficit hawks who will go along with that to rely on the growth?
Depends on how much you credit the 2017 cut in the rate to the growth that we saw. Was it individuals? Now they're getting, at least they won't do it to businesses. It's a little better, but George H.W. learned no new taxes. It didn't work for him. Thanks, everyone. We'll talk to Senate Majority Leader. He may have some comments about this. John Thune. I think he's in studio. But once again, we'll all feel short. That's at 8 a.m.
Coming up, we are going to talk more about this weekend's trade talks in Switzerland between the U.S. and China. What's at stake, and will President Trump be ready to lower tariffs on Beijing? Please don't go anywhere. We've got a lot more coming up on Squawk Box. 2 big hours ahead and a lot more on the trade-China discussion.
Xfinity.
All right, Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer will meet their Chinese counterparts in Switzerland this weekend for trade talks. There is a first sit-down that this will be taking place since President Trump hit 145% tariffs, hit China with 145% tariffs. The president saying that he expects substantive negotiations this weekend. And joining us right now to talk more about it is Michelle Carusa Cabrera, MCC Global Enterprises CEO and a CNBC contributor. She's just back from nearly 3 weeks in China as part of a Brookings foreign policy delegation. And Michelle, what'd you learn on the ground there? Were you able to get a real view of what people in China think about this?
So a couple of things. First, the economy's weak. There's been deflation. Things are so cheap compared to I think all of you went to China during the heyday. Yeah. Difficult to get a hotel room, everything expensive. That is not the case anymore. The other thing that surprised me was not one bad word about President Trump, not from people on the street, not from people in the government. They were very quick to criticize Joe Biden. Mm-hmm. I think that's because Joe Biden's not in power anymore, so that's easy to do. But I think there's also this expectation that Joe Biden was going to be different on a China policy.
But he kept all of the tariffs in place.
Introduced export controls, right? So they're discovering that the attitude towards China is very bipartisan. But I think
from the United States having a strong kind of hawkish.
Absolutely.
There's no undercurrent of not liking Xi yet. Is there that we're hearing about?
I got no evidence of that. Nobody referenced.
I'm not blaming him for anything.
You think that they would say that to a Brookings delegation?
No, I know, but with no body language,
nothing. No.
Did you think your hotel room was bugged?
I worried about that, sure.
Did you bring a separate burner phone?
Of course I did. I brought separate burner phones and stuff. So by the way, I mean, it's like if you want to go on vacation, it's extremely cheap, okay? Except for the hurdle of having to replace all your technology.
It really looks bad over there, like the economy.
I mean, it's relative, right? So if you went back when the growth was crazy and the cranes were everywhere, things were more expensive, it was harder to get things done. Harder to get into hotels and things like that. Now, you're in the beautiful hotel in Beijing and it's very quiet in the lobby, etc. There's just less to do there because their economic wounds, remember, are self-inflicted. They're starving the private sector, right? And as a result of starving the private sector, they do overinvestment in real estate, they subsidize exports, which is why their consumers don't have the level of consumption that we would like and would help, balance of payments in the world. So, you see all of that really play out there. Now, because of CNBC, I've traveled to most of the great autocracies in the world, and I would say it's the one that, except for North Korea, for example, that's where you're going to see the far most Gucci, Prada, etc. There's commerce there for sure in a way that you don't see in Tehran, that you don't see in Cuba. It's not like that. But no, there's no evidence of discontent, but I didn't expect to find any.
So Chanos used to come on and talk to us about the ghost cities that were there, the buildings.
He'd never go over there.
15, 16 years ago.
I wouldn't go.
If you ride the bullet train from Beijing to Shanghai, which I did, which, by the way, compared to Amtrak, is a really incredible experience. You see those places, all this massive growth that happened along that corridor. That's obviously not being. Now, the other important data point, there's a reporter there from the FT who's done great work looking at the restructurings there, and especially when it comes to real estate, and the recovery rates on the restructurings that they've done 0.6 cents. I mean, that is horrendous.
So not even pennies on the dollar.
Not even pennies on the dollar.
Right.
Okay, and those are restructurings done out of Hong Kong, right? Not out of the mainland. And so they've got issues. Now, they've got capital. I'm not predicting their collapse. It's just when it comes to leverage, I think we have more. They have an economy that has been reliant on investing in real estate and exports. Real estate's done.
That's what they have,
and exports.
But we have to respond to press criticism and the suffering of our people. They don't have to do any of that.
The pride and ego are rather large.
Right. But
we have more leverage, but she doesn't have to be reelected.
That is his one point of leverage. He doesn't have to answer to the markets, and he doesn't have to answer to the
If they're suffering, doesn't have to care.
It doesn't matter, right? So high levels.
So what is more? We obviously. So much more do we use than we export there.
Here's the one thing I would say is that, remember, in democracies you have your fights out loud and in public. You don't think the knifing, in the back of other people is happening over there. Of course it's happening in there. It just happens behind closed doors, right? And those battles are happening there as well. We're just not privy to what's...
Who can last longer?
I think we can last longer.
We can.
Yeah, we have a much
Even
more
though they don't
dynamic
care what
economy.
happens.
We have a much more dynamic
I know,
economy.
but they don't have to worry about the well-being of the populace, do they? Not yet.
Until
And they're used to
until
it.
a certain
Until you
point,
do.
until you do, right? Remember how we turned on a dime when it came to COVID, right? They weren't gonna, they had the lockdown, they had the lockdown, then there were protests, boom, disappeared the next day, right? So,
But they did go through that for a lot longer.
right.
So what do you think anything happens this weekend? We go to 50.
Oh, I think the message this weekend is that when it comes to the markets, we are now in a period of de-escalation when it comes to trade rather than escalation.
Mm-hmm.
Right?
Are they,
The
are they
market's
going
priced
to
in
be,
the worst.
Are they going to be eager to get to that point so we can bring things back down?
Oh, I think both sides are eager for de-escalation, for sure. The bigger issue, I think, for the United States is what is our goal here? We have national security concerns, and they are connected to trade. How are they going to bring those two issues together without all what we saw happen in April, right?
Yeah. So what the hell are you? Are you a Democrat or a Republican now? Can you?
I am a centrist who believes in free markets and personal liberties, and that should not be dominated by one party. That should be the value of both parties.
What was the name of your book?
There you go.
What was the name
More
of your book?
prosperity, less government.
You know I'm right.
You know I'm right.
Are you? Is the sequel You Know I'm Left?
No.
Okay.
No.
Okay.
No.
Michelle, thank you.
It's always a pleasure to
It is
Yeah.
just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. On today's top story, shares of buy now, pay later provider Affirm, they're lower this morning. The company giving a weaker than expected revenue forecast. And we're going to have an opportunity to speak with Affirm's CEO, Max Levchin. That's going to happen at about 7:50 a.m. Eastern time. We'll get a sense of what's going on in that business and also what he's really seeing within this sort of consumer world and the strength of that consumer. Meantime, shares of Lyft, they're moving higher, a lot higher this morning. The ride-hailing company's revenue jumping 14% from just a year ago. Lyft also increasing its share buyback plan to $750 million. The stock up now over 10%, close to 12% this morning. We're going to talk to that company's CEO, David Risher, at 8:45 a.m. Eastern time. And then NVIDIA reportedly planning to release a less powerful version of its popular AI chip for China after the U.S. placed export restrictions on the original model. Reuters now saying that NVIDIA is looking to debut a downgraded H20 model in the next 2 months. It's already told major Chinese customers, including top cloud providers, that chip is a coming.
All right, let's run down some of this morning's market action. The futures are up again. This morning's been a pretty solid week. You can see nothing that significant yet, but we'll wait for additional news, maybe something on India. I don't know whether that's today, but we're hearing something that maybe an offer is forthcoming, which would be a lot more significant probably than the UK, I would think, depending on some of the details. Treasuries, I haven't really paid attention today. 438. We were at 415 not too long ago, so there has been a little drift back up. And then this has been more than a drift with Bitcoin all the way back now to 103, up another 2% today. And we have a full slate of Fed speak this morning, kicked off in the last hour by Fed Governor Michael Barr. Steve Leachman joins us now with more. Hey, Steve.
Good morning, Joe. Fed Governor Michael Barr in a speech this morning expressing concern about the possibility of persistent inflation from tariffs and suggesting, at least from his point of view, a reason for the Fed to stay on hold longer. Barr saying tariffs may put the Fed in a difficult position confronting both rising inflation and higher unemployment. His concern is that tariffs could lead to a disruption to the global supply chain like we saw during the pandemic, and that would create persistent upward pressure on inflation. He said, quote, business failures could further disrupt supply chains as we saw during the pandemic. Such disruptions can have large and lasting effects on prices as well as output. So not much leaning there in terms of the one-time tariff impact. Barr said he's especially concerned about the impact of tariffs on small businesses. And he said it's still unclear what economic impact these tariffs will have, but the current Fed policy in a good position to adjust as conditions unfold. Read that as being on hold. Separately, while markets, they have really cheered the UK trade deal and this weekend's China's talks. That was not the case with several trade economists I spoke with. Josh Lipsky of the Atlantic Council saying the outlook is worse because the 10% tariff stays and there's more sectoral tariffs coming, and very few countries have the same relationship, the bilateral trade surplus that the UK has with the US. A 10% across the board tariff and higher sectoral tariffs would make the US still one of the most protectionist advanced countries out there. But the deal with the UK and the possibility that these China tariffs end up being lower could reduce inflation concerns, and Joe have obviously eased the tension. But the question is, what's your baseline now? Is it the April 2nd tariffs, or it was before April 2nd?
Or is it, the dread? We'll see how many deals get done between now and, do you remember the date? What was the pause? The pause does end.
We're about halfway through.
About halfway through.
April 9th was the pause. Yeah, April 2nd was the...
When does it come back?
We're almost 45
July
days.
2nd.
July 2nd.
Yeah.
I think it's July 2nd.
Okay.
But,
I mean, you know what? Maybe we'll finally get the definitive labor, unemployment report by then, or inflation report, or maybe we'll have something by then. What is it? What month is it? May? I got that right? They go so fast. We'll have more.
If it doesn't come by then, it's not coming, Joe, right? I mean, I think that you gotta. I'm surprised it hasn't shown up in the jobless claims. I think there's a certain resilience out there that may help us through. But look, you have to. What I'm hearing from these folks is that a 10% across the board tariff is still not good. It's still triple what we had before. It's still a negative for the economy. But maybe it's just a slowdown number rather than a recession number, depending upon the ultimate impact.
Too bad, the GDP number would have been, but there are so many, as you pointed out, even before it came out, that it wasn't going to be something we could use because there was so much noise, or whatever you call it.
And now you see Atlanta Fed is back. It's back to 2.3 because you're going to get that rebound in the lack of imports, we think. And I'll do another rapid update, I don't know, another week or so. Maybe I'll give it some time after the retail number comes out, and we'll get another across-the-board view. I'm also interested in whether, what happens this weekend and whether people are lowering recession probabilities.
Yeah. There's also some NBA games, Steve. I just, not for nothing, but, I mean, the Knicks.
I'm so excited.
You're excited about the Knicks.
And they're coming back to the Garden.
Like they got their number.
It's unbelievable. You know what the ticket is, Joe? It's $500 just to get in line to buy popcorn to get into the arena. Unless you know people, Joe.
You're probably not joking. All right, Steve Leisman, thanks. See you later.
See you.
When we come back, we've got some new data on whether American consumers are still spending. We will get a real-time read from Bank of America. That's next. And in the 8 o'clock hour, we will talk to White House economic advisor Kevin Hassett. Squawk Box will be right back.
WashBuzz.com.
Bank of America is out with its newest consumer checkpoint, and it shows that consumers are still spending, but at slightly lower rates. Check this out. You see, for the month of April, the spending on debit and credit cards was up by 1%. In the month of March, it was up by 1.1%. Joining us right now for a closer look at that data is Liz Everett-Chrisberg. She's the head of Bank of America Institute. Liz, this is a slowdown, but there's still an increase in spending.
You're exactly right. So despite all the commentary we've been hearing about the consumer retreating, about how the March numbers were really just boosted because of pre-tariff buy-ahead, the fact is that our data is showing that consumer momentum is continuing. It is continuing at a more moderate pace, but it is still moving forward. And the other thing that we're seeing is for most households, their financial condition remains solid. And I think the key to understand that, right? How do we?
That's counter to what we hear in so many different places.
Absolutely, and that's why it's so important to look at the data. And I think the most important data to look at that really helps explain it really nicely is the labor market. So we look at wage growth going into households, what's happening, and what we're seeing there is the same trend, that there is still momentum in terms of household wage growth, but that's also moderating. So higher income household wage growth in April was up 2.3%. That actually was a slight pullback from 2.6 in March. Lower income households increased to 1.5%, but they're still near almost 8-year lows. So you've got, again, growth, but it's more moderating. The other thing that's really a factor in this moderation is there is still, inflation is slowing down, right? You've got, with gas, you've got disinflation, but it's not just the pricing. We actually looked at the number of transactions, and what we found there, again, transaction growth is still growing, but it's growing at a slower rate. And in particular, it's slowing for what I'll call kind of high-value services. So airlines and lodging, we saw a big decrease in those services.
But it doesn't sound like numbers you would see for an economy that's on the verge of a recession.
I would say that when you have positive momentum, when you look at kind of 3-month spending growth, the 3-month SAR, it's at 1.6%. So no, that doesn't seem like a recession. Now, the other things to keep in mind, the other questions to think about, are there other temporary boosts here? How much of this is a continuation?
Taxes, if people get their tax returns.
And of course, right now, we're in April, you did see tax returns. And in the 2025 season, what we saw was there was a temporary boost there in terms of the average tax return was up by a little over 2% for households. So that did provide a boost. And one of the things we look at is what are people spending their tax returns on? There were surveys that said that most people were shifting it and a big uptick into paying down debt or into savings. There was half of the people, less than half, who said that they were going to spend it. But when we looked at our data, what we actually saw was in the 3 weeks after people got their tax returns, we saw the same uptick in spending on clothing, the same uptick in spending on durables, the same uptick in paying off debt. So no real changes there, even though people said that they were going to change their behavior. They are still spending. That is still a boost. Question is, how long does it last?
You don't see an increase in credit card debt that's not being paid off then? It sounds like if they're shifting to pay that down.
No, and that's, that debt, another debt. But yeah, we're not only are we not seeing that, we're not seeing people levering up to continue to spend. We actually, when you look at the share of our credit cards that are paying off, they're carrying a balance, that ratio has came down again in April. It's the lowest level it's been in 3 years, much lower than the pandemic, right? The other thing, we mentioned this kind of 2 weeks ago, but if you look at 30-day delinquencies have continued to come down since October. Now, we are seeing, if you look at the number of households that are making a minimum payment, so that would imply that they are stressed, that did take up just a little bit, but it's still a relatively small number.
I mean, it sounds like on every metric here, this is not an economy that's in a recession based on consumer behavior.
Our data is showing that the consumer is, it's moderating a bit, but the consumer is still moving ahead.
Liz, thank you.
Thanks.
Okay. Next, travel stock on the move this morning, plus Affirm CEO Max Levchin. He's going to join us at 7:50 a.m. Eastern Time to go behind the company's earnings report and the health of the consumer and so much more. And ARK Invest Kathy Wood joins us in the next hour on her latest investments, the performance of ARK's ETFs, Tesla, chip sector, and yes, Bitcoin, which is now broken back through $100,000. Squawk Box, come right back.
Time now for today's Aflac trivia question. How many states does the Appalachian Trail traverse? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. How many states does the Appalachian Trail traverse? The answer, 14. The trail covers roughly 2,190 miles from Georgia to Maine.
Straight over to Frank Holland this morning. He's got a look at this morning's pre-market movers. Frank.
Hey, good morning, Andrew, Joe, and Becky. We're starting off with an earnings mover. Shares of Expedia, you can see they're falling 10% right now after earnings where the online travel company missed on revenue but beat on EPS estimates. The CEO said there's weak consumer sentiment and demand here in the U.S. where the company gets about 2/3 of revenue. Expedia also giving some soft guidance that really appears to be the reason for the stock decline. For the current quarter, Expedia's guidance for revenue growth of 3.5% compared to estimates of over 5%. Some other color from the CEO, adding that Canadians and Europeans, they're shifting their travel away from the U.S. Shares of Expedia falling just about 10% right now. Also getting the shares of Cloudflare after earnings, shares spiking right now. You can see they're up double digits. After earnings where it beat on revenue and was in line with profit estimates, the web application and security provider also offered current quarter and full-year EPS guidance that was just a tick below estimates. However, Cloudflare also announced its biggest contract ever, an over $100 million deal. Again, shares of Cloudflare, they're up over 10%, up over 10.5% right now. Also, a check on Coinbase after earnings. Also some crypto-related stocks. We're going to start off with Coinbase. Take a look at Coinbase shares. You can see they're pulling back about 1.5%. Coinbase lower after a miss on revenue. We're not reporting the profit. It's not really clear if it's comparable to estimates. Coinbase also reported investing $150 million in crypto assets for the quarter, and it says its portfolio is now valued at $1.3 billion. Shares of Coinbase pulling back nearly 1.5%. Also looking at crypto-related stocks, After Bitcoin hit a 3-month high, Bitcoin above 100,000 a coin right now. You can see it's at about 103 right now, up about 2% right now. Check and Strategy, those shares up over 2%. Riot up nearly 2%. Robinhood up over 2.5%. Back over to you.
Okay, Frank Holland, thank you for that.
President Trump had some investment advice for Americans as lawmakers work to craft a bill to enact his tax agenda.
That bill is, I believe it's the biggest bill of its kind ever in the history of this country. And Speaker Johnson and Leader Thune have done an incredible job. I mean, I'll let you know we have to get a vote, but we have a lot of support for that bill. And if that happens on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now.
Senate Majority Leader and Senator John Thune will join us at 8 a.m. Eastern with an update on the budget deal talks and tax bill. Squawk Box returns in just a moment.
Welcome back to Squawk Box. Nice shot of the White House right there. Investors waiting for some new details from this weekend's meeting in Switzerland. It's going to take place between Treasury Secretary Scott Bessent and Trade Rep Jameson Greer and their Chinese counterparts. President Trump just posting on Truth Social about China. He says the following. He says, China should open up its market to USA. Would be so good for them. Exclamation point, exclamation point, exclamation point. Closed markets don't work anymore. And this morning, Bloomberg also reported the White House now weighing a dramatic tariff reduction during this weekend's talks, perhaps below 60%, as a first step that China could then try to match. So we'll see whether this begins some kind of thawing, at least of the talks, that could then maybe progress to something more.
Be nervous if I the Treasury Secretary's got to bring something back, it seems like. Right?
Yeah, I mean, it's a high stakes negotiation, but I'm really glad that it's Scott Bessent who's doing it. You need someone at that level of his caliber, and he's very serious about this. He's talking about de-escalation, but he's no pushover.
He's also got that poker face that, like, whenever he's on here, when we're asking him anything, I'm like looking for a reaction and never comes. Coming up, President Trump reconsidering raising taxes on high-income earners, adding another challenge for the GOP to deliver on the president's fiscal agenda. We're going to get into the latest tax hurdle, really hurdles, next. Squawk Box returns in just a moment.
NBC Plus.
President Trump again now, just posting on Truth Social. Here it is. 80% tariff on China seems right. Seems about right. Up to Scott Bessent. Scott B., the Treasury Secretary. And President...
But that, I mean, that's hugely important as you head into this weekend. If he's already saying, okay, we could lower it to 80%.
80's now 140.
80's now 145 or whatever.
80's still...
relatively prohibitive.
Totally.
But it's a thawing. If you could start that to get us moving back to where we were a month ago.
Right.
See some progress.
I don't know if you call it a joke, but it's probably kind of a pseudo joke, quasi joke.
Well, I would say maybe a starting point.
Starting point.
Right.
President Trump is pushing a higher tax rate for top earners while Congress continues to debate raising the state and local cap on SALT. Join us now to talk about this. Budget Lab President Natasha Sarin. She's also a Yale professor and the Heritage Foundation's Richard Stern. Natasha, it's good to see you. I'm going to talk about the latest about raising tax. I don't think you've seen a tax increase you don't like. So I'm going to start with basically, right? I mean, sort of. And I'm not even sure Richard is against this one. You're probably not thrilled with raising the higher rate, but if they got, if small businesses were excluded, and if it was $2.5 million and $5 million for joint couples, could you go along with that, Richard?
It's still better, but absolutely not. Look, this is the tax we should not increase. I want to see as much pro-growth tax cuts as possible in this bill, and I want to see them reduce deficits by cutting the wasteful spending, getting rid of the fraud and the overreach of the government.
And that's you divide the two parties, Natasha, and it comes really down to that, whether we cut spending or whether we raise revenue. If you were, let's say you could write the tax bill, Natasha, what would you do right now to try to raise more revenue?
So a bit of what I would do is actually responsive, I think, to Richard's point, which is the challenge that's before members of Congress right now as they're looking at this bill is a pretty simple math issue, which is that we're talking about somewhere in the range of $8 to $10 trillion of tax cuts. Plus, if you try to think about SALT, that's about another $1 trillion of tax cuts. And there really just isn't any way to come up with revenue or spending cuts that is going to get you anywhere close to that number. And even if you're looking at this tax on high earners, which I would be supportive of, but Josh Hawley said he's supportive of it, and maybe there's like 1 or 2 members of the caucus who are as well. So these are hard tax cuts, tax increases to get done. That's raising you something like maybe $400 billion over the course of the decade. So we're not getting anywhere close to the type of revenue increases we need. And I frankly don't think that we can afford trillions of dollars of deficit finance tax cuts. So you're in a bit of a challenge from a legislative perspective.
And it's as plain as, all you got to do is look at it, Richard, and you come to that conclusion. Would you just say, but Natasha, we're going to get so much growth from these cuts that it's the CBO, they can't actually know exactly what net it's going to be. Would you fall back? It's kind of like fuzzy math. Would you, let me ask you this, would you have another end to the cuts? Could they expire in 5 years like they did last time to make it more palatable? Is that on the table?
So I think you can read my mind a little bit. I would say that that's part of it for sure, is that we're going to have deregulation. A lot of the tax cuts themselves, because they take the boot off of entrepreneurs and investors, will get you growth, and that will cover some of the deficits. I do agree it's important to keep deficits as low as possible. They are another form of tax, but actually, to your point about expiration, what I would say is the vast majority of the expiring bill is actually balanced on a 10-year basis and balanced past the 10-year mark. That part of the bill, which is all the stuff about the deductions, both standard and itemized, child tax credit, 199 Cap A for small businesses, all the expensing provisions for both large and small businesses, you could make all those permanent. You could make those all permanent today with essentially no deficits. And then as Congress cuts spending, as we're confident we're going to get revenues from deregulation and other pro-growth elements, use those to extend the rest of the bill for as many years as possible. The last thing I would say is it's only $10 trillion. It's only that huge number. If you go all the way out to Trump's fullest talking points on some of the new tax cuts he's throwing out the door. But the truth is, the variants that he's worked on with Congress are probably only a few $100 billion, not a few $1 trillion, because they're smaller than a lot of the memeing that's going on. So all in, we probably could get 6, 7, or even 8 years of temporary tax cuts in that space and really make the vast majority of the bill just permanent overnight with the spending cuts Congress is thinking.
Let me just ask Richard one more thing. I'll get back to you, Natasha. Entrepreneurs, if they excluded small businesses and it went to $2.5 million is where the top rate would begin, $5 million for couples, you really think that different? I mean, those are pretty high net worth or high income individuals, and you exclude small businesses. You think you could actually see the damage being done to entrepreneurship from doing that? Richard,
I do think so. Yeah, I mean, so all these things have indirect costs that are hard to pin down, but they're there. So even if it's not a business owner you're taxing, they're an investor. They make money available to mom and pop restaurants around the corner. So if you tax high net worth earners, even if their income is passive, they don't feel it. If they've got enough money, it doesn't change their lifestyle. It just restricts capital, frankly, to new entrepreneurs, to startups, to people who are more in the 100 grand income range, who own 1 or 2 restaurants. So that's actually why I'm so passionate about keeping taxes low across the board. It's to make sure capital gets to people who need it to start new businesses.
Natasha, you'd probably like to go well below the 2.5 million, I guess. What other, so specifically, where would you raise taxes? What would you do to generate a lot more revenue, Natasha?
So one thing I just want to be clear about in Richard's response to you, and then I'll tell you about some tax increases, is this idea that somehow extending the expiring provisions of the Tax Cuts and Jobs Act is something you can do without having an impact on the deficit. That's just frankly not the case. If you look at every congressional scorekeeper who has estimated the impact of the TCJ extension, it's somewhere in the range of a $4 trillion impact. I realize there's a lot of conversations happening about baselines and what baseline to use, but there's no real way to wish away the fact that even just the extension without any of these new tax changes that we're talking about is a $4 trillion cost that we need to come up with a way to pay for unless you want to do a massive deficit increase. And those growth impacts definitely do exist, but they're quite small relative to that price tag. That's what the empirical evidence tells you. So you have a ways to go with respect to trying to come up with revenue. I do think there are some razors that should be on the table and part of the conversation. Obviously, I'm supportive of these ideas, particularly for high earners, allowing the Tax Cut and Jobs Act rate cuts to expire or even go to a higher rate. I'm also very supportive of something I've gotten to talk to you all about, and I know Andrew is interested in it as well with respect to trying to get rid of things like the carried interest loophole, where there actually is real money there, and it's not just real money, it's also incredibly distortionary, and as a matter of fairness, just doesn't make a lot of sense. There's also a lot of scope, I think, with respect to trying to undo some of what has been done by this administration over the course of the last few weeks, with trying to make it easier for the Internal Revenue Service to be able to collect a lot of the taxes that are owed. Right now, we're missing out on about $700 billion annually, and that's in taxes that are owed under the tax code today, not new taxes that you have to collect.
Are you okay, Richard? I mean, are you figure his face would be all red? There might be some smoke coming out of your ears. What about? Is any of that okay?
I'll save the heart attack for after we're done with the interview. But okay. Yeah, look, there's a few things that everybody should certainly play by the same rules, but at the same time, I don't think the carried interest really is a loophole. Now, I think we should pare down the SALT giveaway for sure as a revenue raiser. But at the end of the day, every dollar the government spends is a dollar stolen from the American public. You don't want to raise revenue by raising taxes. You want to deal with the deficits by cutting that government spending, by featuring pro-growth policies. The other thing I'll say, and I certainly appreciate if you look at the CBO and JCT tables on all of the provisions of the expiring bill, sure, you get $4.5 trillion in deficits over 10 years. But the truth is those deficits come from 2 provisions. It's the AMT exemption and it's the individual rate cuts. That's the part that all the deficits are coming from. Literally every other part of the bill is actually balanced together if you do that part of it. And so again, at Heritage, we've talked about is we can make all of those parts of dozens and dozens of provisions, all the ones that are, good for middle-class families directly, that are good for small, large businesses. That part you could make permanent and have $600 billion of deficits during the 10-year window, but actually be running surpluses after it. It's really just the individual rate cuts and the AMT. That's the part you need pay fors for. That's the part that probably should be a temporary extension as Congress finds pay fors in our opinion.
All right. Well, this Andy says it a lot. In this case, this really is a longer conversation. There's no.
It is. It is a longer conversation.
Both right, and it's cordial and everything else. But I didn't really try and get things going that much. Maybe next time. Natasha's ready anytime to spar. And Richard, I think too. But thank you both. We appreciate it. We'll do it again. Thanks.
Always a pleasure. Thank you.
Thank you.
When we come back, we're going to talk more taxes, trade, and lots of other things with White House National Economic Director Kevin Hassett. That's coming up at 8:30 Eastern Time. But right after this break, we have the CEO of a firm, Max Levchin, will join us right here on set. We're going to get his view of consumer spending, the company's guidance for the current quarter, and where the buy now, pay later model is headed. Squawk Box will be right back.
AI meeting agent.
Welcome back to Squawk Box, everybody. We're watching the futures, and right now the Dow futures are up by about 60 points. NASDAQ futures up by the same amount, and then the S&P up by about 16. For the week, the Dow is actually up. The S&P and the NASDAQ are down as of yesterday's close, but we'll see what happens today. In the Treasury market, it looks like the 10-year this morning has been sitting right around 4.37%. The 2-year still at 3.85. Oil prices are higher after several weeks of declines. You'll see that WTI is up 2%, back above $61 a barrel. ICE Brent is just under $64 a barrel. And then gold prices, which continue to hit new highs this morning, are up another $30, $3,335 an ounce. Bitcoin is back above $103,000. That's right. And you can see the chart there, right there. It's been a very steep move over the last several weeks.
Meantime, check out shares of Buy Now, Pay Later, the platform Affirm, moving lower this morning after the company provided, he's sitting right here, so it hurts me to say, weaker than expected revenue guidance. Joining us right now with more on the quarter and beyond, Affirm CEO Max Levchin. Good morning to you.
Good morning.
Okay, so let's understand what's going on in the last quarter, and then let's try to understand what's going on with the guidance and what you're actually seeing.
Last quarter, judge for yourself, 36% year-over-year volume growth. Revenue growth also 36%. RLTC, which is a fancy term for profit measure that we prefer, 53% growth. It's pretty good.
So pretty good.
Pretty good. Guide forward, I think really strong numbers. We think we're, going into uncertainty, we are offering our shareholders a sense of we're going to do just fine.
And you think that just the market, to the extent that the market's not even open, but obviously down 6% as we're looking at it in the futures?
I cannot pretend to understand how the market thinks. I can tell you that it took consumers and merchants and sort of the universe about a decade to figure out what we are and just how different and important what we have found to work really is. This whole buy now, pay later thing. 13 years ago, people were telling me not charging late fees is nuts, not compounding interest is crazy. When you say 0%, you're supposed to have an asterisk where there's the fine print, that's where the business model lives, and we said no such thing. And it was slow for a while and not all at once. And my plan or my wish for the market is to eventually wait a second, this is really good.
What is your sense just of the strength of the consumer right now?
It's pretty good. I think there's a real inconsistency in the vibe where people are stressed out about the economy, yet they're shopping, they're buying, and they're paying their bills. At least they're paying their bills back to us on time. Our credit print actually from last quarter, and you can see it every month because a lot of our credit results are reported every month, is really solid, very, very consistent with our expectations, not rising.
That's really interesting. We heard from Bank of America Institute this morning, and they said the same thing based on all the data they see from their customers. Do you think that this is the consumer worrying about things, but they're not changing their behavior at this point? Our guest this morning tied it back to the idea that there's still a very strong jobs market and that wages continue to rise.
That's exactly right. So the only metric that I really care about running a credit business is employment. If employment is strong, everything's going to be just fine. And employment has been really strong. The last job print was fantastic from my point of view anyway. And so I don't see anything in the water yet that makes me
Is
worry.
there any shift in terms of the kind of purchases that people are making, the amount of money that they're spending? Are they are they upgrading from a 75-inch TV to an 85-inch TV, or are they downgrading from an 85-inch TV to a 65-inch TV? To the extent that means anything.
We delve into this data every single day, and the short answer is we saw really strong growth across every category. Yesterday, somebody asked me on an earnings call, so where did you see particular strength? And I was scrambling through numbers, everywhere. The number from this morning, I think you quoted 1% increase in credit card and debit card spend, 36% increase in Affirm spend. There's some difference here.
But it's also that you're stealing market share.
Absolutely. We are helping people understand that not paying interest, revolving interest excessively is a good thing. And yes, we're taking share from credit cards. But right now, the economy appears to be on solid footing.
Can I ask you it's sort of a crypto-related question of sorts, which is in a stablecoin world or crypto world, how does that ultimately affect you, and what do you think how will that change your business if you think that the world moves in this direction?
You and I have been on stage together talking about crypto a little while ago, and my views remain about the same. I think Bitcoin in particular is a fantastic store of value. I think that's proven to be the case, and today's numbers are one good proof point. Stablecoin has really nailed this exceptional use case of very fast foreign, cross-border money transfer, and I think that's very useful. And as a company that's now expanding internationally, we just went live in UK, went live in Canada a little while ago, so it becomes more and more relevant to our business. In terms of folks paying for things, I think we're still very heavily dollar-centric here, and I'm not sure that's going to change.
But will that whole universe ultimately break the banks and put you into a position where all of a sudden you are the credit? You are trying to be the credit card. Right?
We're trying to replace the credit card.
Trying to replace the credit card. But I would assume that would accelerate in a sort of stablecoin-oriented universe.
Insofar as people become more comfortable with tools that don't look as traditional as the things that work for their parents, yes, I think the secular trend is towards using things like Affirm to replace credit cards.
And in terms of merchants and just bringing more merchants on board, the idea of who's exclusive to you, who's not exclusive to you, how that even works. Obviously Klarna's playing a big role in the universe. I don't know what's going on with Walmart. Maybe you can explain. But I think we're all trying to get a sense of this.
So merchants are also doing quite well. I think a fair number of them are posting really strong results, and part of those results is the fact that the consumer is really choosing Affirm at the point of sale. Done really well. The thing we highlighted actually on the call yesterday and last quarter, merchants are really leaning into 0% promotions where they are essentially paying the interest that consumers would have been otherwise paying. And so it's a true, it's a great value. You're paying for something that is quite expensive over time, but not paying any interest on it at all. And even if you are late by a day or miss a payment, you're still not paying any penalties. That was a huge driver of growth for us both last quarter and the one we just reported. Many merchants have reached out to us and said that really worked for us over the holiday season. Let's do it again. That's a fair amount of the growth that we saw comes from that. Certainly not my place to comment on competitors, but we seem to be growing, somewhere between 50% and 100% faster than just about anybody else in the industry. So I think we're doing really well.
Max, who is your customer? What are their demographics? Because I think of like an Amex customer. They've got a pretty high-end customer who doesn't tend to feel the pinch as quickly as a lot of others. But I get the sense that if I'm doing buy now, pay later, maybe it's a customer that's not quite as wealthy. Am I just wrong in thinking that?
I think that's a misconception that it skews lower income, lower credit. It's actually much more middle of the road. Do you imagine sort of a 10 styles of American consumer? We start helping folks that are about a third of the way up the credit and run out of things to say by the last 10 styles. So if you're independently wealthy, you may not care whether you're paying interest or not because you're just settling out of your...
Or maybe you're paying cash for the most part, or using a credit card that you pay off immediately.
Exactly. But vast majority of our consumers are what's called prime, near prime. We actually pointed out that last quarter's growth, a fair amount of it came from prime and super prime because of these 0% promotions. So folks...
So they're getting a bargain.
People, you don't have to be poor or rich to realize that not paying interest over a long period of time is actually pretty great.
Smart, right? I guess my question would be, do they get their credit score improved by paying off stuff on time with you too?
Great prompt. So we just announced a couple. So we've always reported credit results on our longer term transactions. So monthly transactions is something that we felt was really important to report to the credit bureaus, exactly to help folks build their credit history and ultimately improve their credit score so long as, of course, they pay on time. We just expanded that program with Experian and TransUnion, delivering basically all the information we have on consumers about their repayment, precisely because we really care about credit history building.
For those folks who are just thinking about what this company looks like 3 or 5 years from now, in your mind, what is it? How does it change beyond just simply growing across the board?
It's going to grow. I feel pretty good, pretty confident in that. It's a payment network. You will see more Affirm logos, not just on your favorite website, but also on a hopefully convenience store door. It'll be online and offline. It will also be a feature or a functionality provider to other debit cards. We have our own debit card that's been growing, better than doubling year over year, really taking off. It's a great product that just very, very happy with. We are now starting to talk to people embedding Affirm in debit cards that are issued by other folks. So you may yet, 3 years from now, have a debit card issued by your bank or your favorite fintech with Affirm functionality embedded in.
All right, and one you can use question. Do you use Affirm?
Absolutely, every single day.
How so?
Buy a cup of coffee with my Affirm debit card. Oh yeah, absolutely. It works both.
And you
for
pay it off when?
So Pay Now settles against my bank account.
Right.
If I take a couple of friends to a really fancy dinner, I sometimes test the functionality of paying for that expensive dinner over time, and from 6 weeks to 6 months.
Okay.
But every single day.
Curious. Thanks. Max Griff, thank you for coming in.
Thank you.
Appreciate it.
Coming up, Senate Majority Leader John Thune is going to give us an update on the budget battle, President Trump's agenda. Squawk Box. We'll be right back. means everything.
It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin.
I'm here, reading.
Leading down.
No, I'm reading the president's latest, I swear he's watching.
He's
like responding to everything we're talking about.
We're going to talk about that in just a moment. In the meantime, though, let's give you an update on today's top stories. First up, Reuters reporting that India has offered to slash its tariff gap with the United States to under 4% from nearly 13% under a potential trade deal. The report says that India is asking the Trump administration for an exemption from all current and future tariffs, and it's ready to give preferential access to 90% of U.S. goods. We'll ask Kevin Hassett about that trade deal coming up in just 30 minutes' time. We're also watching shares of Coinbase this morning. First quarter sales rose from a year ago, but it missed analyst expectations. Transaction revenue fell by 18% sequentially, but that follows a 130% revenue surge in the fourth quarter. That stock right now off by about 1.3%. And ARK Invest CEO Kathy Wood joins us in just a bit. Coinbase is one of her top holdings. Also, shares of BP rising after the Financial Times reported a number of rivals expressed interest in a possible takeover. Among the names being reported as interested, Exxon, Chevron, Shell, and France's Total Energies. You can see right now BP shares up by 3.1%.
All right, this is the most fascinating post, and Senator Leader, you're going to hear it for the first time here from President Trump just moments ago. The problem with even a tiny tax increase for the rich, which I and all others would graciously accept in order to help lower and middle-income workers, is that the radical left Democrat lunatics would go around screaming, "Read my lips."
Which you said that about 10 minutes ago.
I said it about 10 minutes ago. I don't think he's calling me a radical lunatic left. I hope not. The fabled quote by George Bush the Elder that is said to have cost him the election. No, Ross Perot cost the elder Bush the election. In any event, Republicans should probably not do it, but I'm okay if they do.
He just washed his hands of it. Does that mean the tax increase for the
and let's talk about it.
Is off the table?
Senator, I understand the rationale to some extent. And did you see Senator Cruz, I'm sorry, joining us now. If you don't know Senator Thune, then that this is the majority leader of the whole U.S. Senate of South Dakota, Leader Thune. Thanks for joining us. Anyway,
thanks, Joe. Pleasure to be with you.
Jumped the gun, started
no worries.
Like everybody knows who you are, which I think they do. When Senator Cruz was on yesterday, Senator Ted Cruz from the great state of Texas, I'll do everything. He said there are factions in this administration. There are populist factions and there are less populist factions at this point. And the president wants to help, I think, working class people. Look at the tariff, look at all these things. The case could be made that maybe some redistribution or some movement on who pays the lion's share of taxes, maybe you could reallocate some. Is this the right way to do it, to go back to 39.6 on high earners?
Well, I don't want to see taxes go up on anybody, Joe. I mean, we're all about lowering taxes, not raising taxes. But I do think the president, he's not a conventional president. People didn't vote for a conventional president, and I think his policies reflect that. And I think the people around him understand what he's trying to achieve here. And that is, if you look at what he's proposing, there's particular emphasis on working Americans. Hence, no tax on tips, no tax on overtime, trying to lower taxes on people who are on Social Security. The people who are out there trying to make a living in this country. And I think a lot of his tax policies will reflect that. All these things that are being proposed right now, and of course this is going to originate, this all starts in the House of Representatives, they're going to have to figure out how to dial this and to make it fit within the parameters that are out there. The one thing you want to make sure you do is on the business side, make sure that those, bonus depreciation, interest deductibility, R&D expensing, the president's proposed expensing for factories, for domestic manufacturing, which would be very stimulative, get growth in the economy. And that was the whole goal in 2017, lower rates, faster cost recovery, and I think it worked. And I think that's what we want to do now. And I think it's important that those provisions at least be made permanent so that businesses can plan around them.
My main problem was that so many businesses, there's only 5% of businesses are C Corps. So if you raise the personal rate back to 39.6, you're hitting all the small businesses, or many of the small businesses. But if you were, is it possible to exempt small businesses from a raise in the top rate? If you could do that, I like you would be less.
Well, and if you do, what does that mean for the revenue that you bring in as a result? How much money do you?
When you're all the way up at $2.5 million instead of, in the, when they lowered that top rate, what was the top rate, 300,000 or something? I mean, now we're all the way up to 2.5, 5 for joint.
Yeah, I've seen 2.5 and 5. I've seen 5 and 10. I've seen different proposals out there, but I do think that you'd have, and they're talking about if they this were to happen, carving out pass-through businesses. As you point out, they're 96% of the businesses in this country. The one thing, of course, pass-throughs want is they want to keep their 199A deduction, the 20% deduction that was written into the 2017 bill. But as you look at what's currently in law, all of it expiring at the end of the year. On the business side, what you want is growth. You want pro-growth policies. When the economy is growing and expanding, it's creating better paying jobs, people are making money, taking realizations and paying taxes, and tax revenue goes up and goes up dramatically. So on the business side, that's what you want to see. On the individual side, I think what the president's trying to achieve, again, is to help working Americans who are out there every day trying to just take care of their families.
And Senator, what you're talking about is extending the current tax cuts. So we're already living in a world where these lower tax rates are in place for the most part. You're talking about some new add-ons that go to help working Americans, but the growth that you're going to see from that, from just extending it, is probably going to be limited to some extent because we're already living under that tax regime. And second of all, you have a lot of people in your party who are very concerned about the deficit getting blown out. We're already in a situation where we're spending 7 percentage points more than we're taking in revenue.
Yeah.
What happens if you lower the tax money that you're taking in? And again, you want to help working Americans, but that's where the money is too, because that's where the broad portions of the population are. How do you manage all of that and not look like you're blowing out the deficit even further?
Right, and I think the answer to that, Becky, is if you look at what is being proposed, and what I would argue is the thing that's different is permanence. If you do this on a permanent basis, Tax Foundation, for example, says you get another 1.8% GDP growth out of that, and that's a huge impact on government revenues. So you get more growth, you get more revenues. For every 1% increase in gross domestic product, the standard rule of thumb is about $3 trillion in additional tax revenue. So you got to have pro-growth policies to deal with deficits and debt, and then you've also got to deal with restraining federal spending, which is the other objective, or one of many objectives in this bill that we're working on.
But you can only do so much in the skinny budget where you don't deal with some of the long-term legacy issues like Social Security, Medicare, and Medicaid.
And Social Security is not eligible under the law for reconciliation.
You can do so much with Medicaid.
President's taken Medicare off the table, but if you look at where the spending is, general fund spending, because both Medicare and Social Security have payroll taxes. About half of Medicare is general fund, about half is payroll tax, and most of Social Security is payroll tax revenue coming in. But net of payroll taxes, the big driver of federal spending is Medicaid. Yeah. And a lot of that's because the states have figured out how to game it. And when you did the expansion...
The states were suggested and incentivized.
They were incentivized to do it.
Obamacare, it's out of control, and that's where the money is.
But a lot of those are red states where
they
are on those rolls.
There are red states for sure, but you take a state like New York or California, they have really figured out how to game this. They do things like provider taxes that they use to leverage to get more federal revenue, federal money coming in, then rebate the taxes to the providers. There are a lot of games that are played, but I think there are things that most people agree on that are reforms like work requirements. I think that's something that generally, not just Republicans, but I think most people say makes sense.
But I'm sorry, Joe has used this statistic pretty frequently from the Wall Street Journal earlier, that there are $10 for able-bodied men versus $1 for women and disabled.
Pregnant women and disabled. There are so many able-bodied people that don't. There are no work requirements that are gaming the Medicaid. But the rap is that Republicans don't have the intestinal fortitude to face the Democrats that are going to demagogue it and say you're cutting Medicaid and pushing, once again, you're pushing grandmother off a cliff in her wheelchair. That's what you're going to hear.
Yeah, and they are going to demagogue it. I mean, that's what they do. And, when they had unified control of government, House, Senate, White House, they did 2 reconciliation bills, which increased spending by $3 trillion. And we have now, for only the 5th time in the last century, unified control of the government, House, Senate, and White House. And by the way, on 4 of the 5 times we've had it's only lasted 2 years. So you really have to maximize your opportunity. But we have a chance to do something meaningful about spending and about this $38 trillion debt, which is not sustainable. And we've got to start slowing the growth of spending. And you can do that without hurting beneficiaries. And I think work requirements is a good example of that. That saves you, over $100 billion. And there are some other reforms in Medicaid that I think you do as well. But you got to look at other areas of the budget and try and find let's start bending the curve down. You start bending the curve down, you get growth in the economy, more revenue coming in that way, and pretty soon this thing starts to look manageable. And I think that's what this exercise and process ought to be about. And we ought to use the opportunity we have in front of us to do something meaningful to get the country on a more sustainable fiscal path.
How often you talk to the speaker?
All the time.
Is he going to go along with this raising the higher rate, you think? I heard he was pushing back and...
Yeah, I mean, I don't like.
President sounds meh.
I don't, and I'm not saying I don't think anybody's endorsing that at this point, Joe. But I do think
as
they look at this, there are decisions that have to be made about how to accommodate some of the things the president wants to do, some of the new things, and how to accommodate making some of these policies permanent. And I think, frankly, as I mentioned earlier, permanence is something that the economy would pick up on and say, this is pro-growth. This will create jobs and generate growth in the economy.
So, Senator, what I'm hearing from you is you are going to go after the idea of making the existing cuts permanent before you are going to take on the new promises that the president made on the campaign trail to give back taxes for tips. All of those things would be things you'd give up before you would give up the permanence of the 2017 tax bill.
There are interactions there. And the House doesn't have as much headroom because of the way they crafted their budget process as we do in the Senate.
The way they crafted that majority?
Well, I mean, and look, I mean, the bottom line is, and I've had great sympathy for the Speaker, and I think he has sympathy for us. He has to get 218, we've got to get 51. And that's the math. And so ultimately it's about that. And yes, I would like permanence, but yes, we need to figure out a way to accommodate some of the things the president wants to do. Now, some of these policies are dialable, and you can tweak and dial.
Salt, you dial down.
He's got to fit it within the House Ways and Means Committee when they mark this up, has to fit it within the parameters that their budget resolution allows for. And when it comes over to the Senate, we'll have a fresh look at it. And
can you just lay out what the big sticking points are between the two? What are the issues that you're spending the most time on?
Well, I think that the question of permanence, particularly on the business tax extenders, there are some things on the
That's
individual
harder
side.
to get through the House than it would be to get through the Senate?
I believe it is, simply because they don't have as much headroom to work with. I think there are issues that are, for example, the SALT tax, or the SALT deduction, is something that's predominantly a House issue.
They want it, you don't.
And there's some people in the Senate who care about it, but it's not an issue that drives. And but in the House it is. You got to figure out how to wait it.
I got 3 questions for you. Carried interest. What are you going to do?
Well, I mean, I'm not a fan of taxing carried interest, but I know again that's something that has been talked about. Well, I think these are the people that are out there investing and creating jobs, and I think that there's a.
And you want to give those people a tax deduction?
Well, they already have. They pay at the capital gains rate as opposed to.
Right. No, I'm saying you believe that the people in the private equity industry that are in that business, because it's not the investor, it's not their money, they're the allocators. You believe need an incentive to do what they do, otherwise they wouldn't do it?
I think they're the ones that are going out there and getting the deals.
But
to your point, I mean, this is an issue that's one of many on the table.
Right.
And the president has some views on this, and the House, the Speaker, I think, and some of his folks have some views on this. But
I'm just curious why you think that, though.
Well, I mean, I think that again, you would because.
Is there any other industry in the world that you think should have that incentive?
Well, I think that paying capital gains tax rate on the carry versus paying at the individual rate is something. If you're an investor, if you're a passive investor, you're paying the capital gains tax rate. The people who are going out and getting the deals also sometimes have a piece of the deal,
right,
and they get a carry on that. And so all that simply means is they're going to pay at the capital gains tax rate.
That's how they get paid, though.
That is how they get paid.
But what about people who get paid a commission or get paid a bonus every year?
Well, I mean, those are people who they have their own deals. I mean,
but it can't be constructed the same way. right? A banker or a real estate agent, do a real estate agent, or just anybody who gets a commission. Here we are talking about, we think that people who are waitresses should have lower tax rates. Teachers can't get that rate. Most people can't get that rate. And so what I'm trying to understand is that that's how they get paid. That is their compensation. It's the only way they get
Do
compensated.
you think the industry would be, the argument is the industry is such a great thing for the country and we're the leaders. Would that put a
It's the
damper?
only industry that we
I know,
incentivize
but
that
would
way.
it put a damper on what is
it
a
just
great, kill the goose that lays the golden
It
egg?
drives a ton of investment.
But how,
and
can
it
I ask a question when you say it drives a ton of investment?
Creates better paying jobs and higher wages for the very people that you're talking about.
But what I don't,
that.
yeah, but what I don't
We want growth in the
I
economy.
understand, but what I don't totally understand about this is the money, the investor isn't changed. The investor is a pension fund or an endowment or a wealthy person who's paying the carried interest, right? They're getting the they're getting the capital gains rate. It doesn't change whether they invest their money or not. We're talking about the people who are allocating, people who are basically managing other people's money. You believe should actually get a lower rate because of what they do for a living. It's a very specialized job that nobody else could either do or would otherwise want to have because it doesn't get paid
We've been
enough.
talking about this for years.
No, I know, but
it is a longer conversation.
It is, and listen, I can argue this both ways, okay?
Okay.
And he's
but I'm
gotta
just
go.
saying, I think the incentive there, these are people who are going out there, making investments, finding the deals, and helping grow the economy. Now, whether or not they ought to be at the capital gains rate, that's a debatable point.
It's a budget. My one other budget question. It's a USAID question as it relates to Doge. I just was seeing this yesterday. I don't know if you saw. Bill Gates came out yesterday and said that the removal of USAID is, quote, killing the world's poorest children, and says that effectively 2 million lives will be at stake because of those the change in what Doge has done. So my question to you is, as somebody who I think cares about people's lives, 2 million lives. If that's true, and I have no reason not to believe it, do you have any ambition to change the way USAID is spending money?
Well, I would argue that not every USAID program is created equally, and that's why you have to be selective and targeted when you figure out where do we want to find savings. I think every one of these government programs has waste, fraud, and abuse in it. And that's why the scrub is long overdue. Now, that needs to be done in a way that evaluates what's mission critical and what's not. And I think that's why you want to have agency heads and department heads in place, and why we move so quickly to get them confirmed in those positions so they can discriminate and make those decisions. But clearly there are programs that are impactful in changing the lives, and frankly I would argue have national security implications for the United States.
No. All right, Senator. Thank you. Leader, thank you for all your time this morning. We appreciate it.
Right with you all. Thank you.
Thank you.
Happy Friday.
Coming up, ARK Investment CEO Kathy Wood on the market's latest move and where she's putting her money in tech. And then reports this morning that India has offered to slash its tariff gap to under 4% from nearly 13%. That's under a potential deal. We'll talk about what it all means. National Economic Council Director is going to join us on that news and the deal announced yesterday with the UK and much more after this. Welcome back to SwapBox. ARK Invest CEO Kathy Wood recently adding to her existing stakes in NVIDIA, AMD, and CRISPR Therapeutics. And for more on some of those names and others in the tech sector, Kathy Wood joins us right now. Kathy, it's good to see you. I'm curious about how you've been thinking about investing just over the last month or two, given that we've been sort of in this very volatile market. The tariff issue has sort of weighed over everything, but clearly a lot of the market has come back even in the past month and a half.
Yes, President Trump certainly has an interesting way of negotiating, and our thoughts from the beginning is what he's looking for, and what I think we learned about with India today is to reduce tax rates as much as possible around the world, high tax rates, especially on the United States, to reduce non-tariff trade barriers. And I think we're beginning to see more and more of that prove out here. This is a global tax cut. This is a good thing. So we think the headwinds associated with what seemed to be chaotic decision making are beginning to clear.
And are you therefore a believer that there's a sort of a big, I mean, we've already had a rally, or I mean, off the lows. How does the rest of the year play out therefore in your mind?
Well, we have been saying, actually, I just put out a letter talking about the rolling recession we've been in for the last 3 years since the Fed jacked up rates. We got a negative quarter in the first quarter, potentially in the second quarter as well. And I think more and more people are getting concerned about an extended recession and amid all the uncertainty. We actually think we're at the end of this rolling recession, and that we are moving into a period after all of this uncertainty of much greater productivity. And interestingly, if you look at the government sector, we're seeing unbelievable productivity moves taking place. There's a video out there between the FDA, the new head of the FDA, and the new head of CBER, and they're talking about generative AI in reviewing studies, medical trials, that cut work from days to minutes. So there's a lot of productivity, I think, evolving in the ecosystem. I think companies are now enterprises. We see from Palantir that that this is now a strategic decision for companies. So I think we're going to see a lot more productivity-driven growth, which means inflation is going to be much lower than expected, which is going to be very capital friendly.
You've talked for a long time about Bitcoin getting to $500,000 a coin, depending on the time frame. I think you were hoping for it to be there now. We are back up over $100,000 now. We're back to $103,000. To the extent you have a thesis about this, what is it at this point, and what would your new target be?
Yes, so we have always had a 2030 target, the base case in the 700 to 750,000 range, the bull case in the $1.5 million range. David Puel, our analyst and our on-chain analyst, put that piece out recently, and you can see the building blocks, how much share we expect Bitcoin to either take from gold or grow that store of value market. Institutions moving in, and they've barely moved in. We have 1 million more coins, roughly, to be minted ever, and institutions are just testing the waters right now. And then there's the emerging market use cases as well. So we think we have miles to go, yes.
Tesla.
Yes.
Where are you on Tesla at this point? You've been a bull for a very, very long time. We're at $287.
Yes, well, as we have put out there, our target in 5 years, so 2030 again, is $2,600. And our confidence in that number has gone up now that Tesla is commercializing robotaxis in August, in June. What we don't have in that number, and what is happening faster than we expected, and as you know, we're very focused on learning curves and how quickly new technologies are going to evolve. Humanoid robots. And Elon has been talking about that market being bigger ultimately than the robotaxi market. And he talks about Tesla being number one globally when it comes to humanoid robots, and also says that China is number 2 at 10. So we have to get moving on that score as well. We think that's a $26 trillion revenue opportunity split between home and industrial in the next 5 to 10 years. It's going to be a huge market. And the reason Tesla is ahead of the game is we're talking about the three platforms it's already innovating on. Robots, robotaxis are robots. Energy storage, they will be electric. And AI. Those are the 3 technologies in the humanoid robot movement as well.
I wanted to ask about Palantir, because I know that you were a big Palantirian, if you will. I think there's a different word for Palantirunian. What's the phrase they call themselves? And I know you sold some shares before the quarterly report, and want to get your reaction to that report.
So the report was fantastic. What we're seeing is, as I said, this sense of urgency, both in the government, especially in the United States, and now in enterprises. Their commercial business is on fire, up 71%, I think, in revenue. Now, a lot of good news has moved into this stock in the last year. It's gone from 10 to 100 plus. And so, according to our valuation, the rate of return expectation accordingly has come down over the next 5 years. It is still in the top 10, but if we're wrong, how are we wrong? It is that Europe actually starts moving more aggressively into AI. Now, Palantir is on record, Alex Karp, saying, Europe has been hopeless in this regard, but in their defense, their new defense spending, AI is featuring prominently, and Palantir with Maven is helping. So we may see an upside surprise there. And as I said, the sense of urgency that we're seeing out there is provocative, and I think it's going to mean it'll be a huge boon to economic growth and to much lower than expected inflation. And I think that's where we differ from a lot of investors out there.
Kathy, on the AI front, what do you think of the Google news earlier this week that we learned sort of from Eddie Q just about folks using sort of classic Google, the blue link economy, and to the extent you think that all of the big large language models take some kind of market share from Google?
Well, we've been calling for that for quite some time, ever since ChatGPT, so it's not surprising to us. Google came back and said, yeah, but those searches are not the commercial ones. They're for research. They're just asking simple questions. We disagree. Nick Gruss and our team on consumer AI, they're envisioning a world where personal assistants are going to be doing a lot of the walking for us or the searching for us throughout the internet, and will not be using Google as an intermediary. No surprise. And it's interesting. What we have been fighting over the last 4 years are 3 headwinds. One of them has been this concentration in the market towards the Mag 6. If we're right on truly disruptive innovation, and AI certainly is that, it's going to disrupt the traditional world order, some of which includes the Mag 6. And then the other 2 headwinds quickly we've been fighting that are changing are interest rates. We think they're going to come down, and valuations. Our valuations, as everybody noted, after 2020, very high. According to a metric, enterprise value to EBITDA adjusted, we've worked with the S&P, we've moved down to close to a market multiple in terms of disruptive innovation, truly disruptive innovation. So pretty excited about that as well.
Kathy, I want to thank you. Have a great weekend. Appreciate it.
You too.
Fascinating.
But still to come, National Economic Council Director Kevin Hassett joins us to talk about trade deals and what investors can expect from this weekend's talks with China. And then investors are riding shares of Lyft this morning following its latest quarterly results. CEO David Risher is going to join us. Squawk Box will be right back. Because it can't defend.
Meta says that its Threads platform will start testing video ads. That's a move that will make it look more like its rival X. Meta says that a small number of advertisers will display ads in between pieces of organic content in the Threads feed. The company recently said that Threads has more than 350 million active users. Meta's shares this morning up by about 0.75 percentage point.
All right, up next, Kevin Hassett now on this weekend's trade talks with China, the deal with the UK, possible deal with India, maybe some other issues as well. Squawk Box will be right back.
woodsroadbeauty.com.
The United States and China is set for preliminary trade talks tomorrow in Switzerland. Joining us right now to discuss it and much more is White House National Economic Council Director Kevin Hassett. Kevin, thank you for being here today. Let's talk through what we've heard from this framework, first of all, from the deal with the United Kingdom, on how you think this is going to impact the economy. Obviously, not one of our largest trading partners, but this perhaps provides a framework for what we might anticipate to see in some other trade deals as well. What are the key points here that you see?
Yeah, I think it absolutely is a framework for the deals that we're going to see ahead. It's got a 10% rate that's kind of a ring around the country with respect to UK goods, but with respectful exceptions like the quotas for autos. And I think in our view that makes it so there's a lot more revenue coming in that the U.S. can use to make American workers and American firms more competitive. And the other thing is that we put a high priority on advantaging American farmers. And so if you look at this deal, go look at the press release that the beef producers put out as soon as the deal was signed. We know that it's been a tough time for farmers in the U.S., and a big reason is that they've been treated so poorly by our trading partners. And getting the UK, which has been a country that's been pretty reluctant to let our beef and other products in, come to the table and open up their markets to U.S. farmers is a big, big win.
We did hear, though, from the policymaking group for the United States automakers that they were disappointed by this news, to hear that UK autos that are made in the UK and maybe have zero parts that are made in the United States can come in and get a better deal than those that are compliant with USMCA and maybe contain half of their parts from US autos having a much higher tariff rate. How do you address that?
Well, there's a 100% way to address any divergence in these things, and that's to make sure that the parts are more made in the U.S. And so onshoring of production has been a key objective of President Trump's. If you look at the jobs data and the capital spending data in the first quarter, where we saw a 20% boom in equipment investment, you can see that it's working. But yes, there's going to be some adjustment. That's the purpose of the policy.
No, but the cars that are made in the UK can come in without any parts made in the country with a lower tariff.
That would be a bigger concern on an economic front if there weren't a cap on how many cars were coming in. So it's just capped at about what was coming in before, so that U.S. producers don't have to worry that they're suddenly going to lose their market compared to what's been happening in the past.
What impact will this have on the greater U.S. economy to have a trade deal like this in place?
I think it's going to be an enormous positive because now people see what the next deals are going to look like. And, congrats to Secretary Lutnick and Jameson Greer, who are leading this effort. And I can tell you that I've been briefed on about 24 other deals that are this close to being resolved. And what that's going to do is it's going to be very settling for markets because they're going to understand what the rules are. They're going to see that the rules advantage American producers and American workers and aren't horribly disruptive like some of the Wall Street firms have been saying they would be if you look back a month or two.
Kevin, how much money should the Treasury expect to be bringing in annually as a function of tariffs once these deals are remedied or negotiated?
The problem with that question, it's a really smart question, and the problem with that question is it depends on what happens with the negotiations. It depends what happens with the negotiations with the Chinese in Geneva this weekend. And so if I put a number out, then in some sense it's upending the negotiation because we're saying, oh, well, that's what the U.S. position is. I can say that I spoke as they were getting on the plane with Jameson and Secretary Bessent last night, wishing them Godspeed, and everything that's been going on with the meeting in Switzerland is very promising to us. We're seeing extreme respect, treating both sides with respect. We're seeing collegiality and also sketches of positive developments. And so I think that as we move forward and remove, hopefully, uncertainty on China and get deals like the UK, then people understand what President Trump's trade policy has been all about, and then we can move on to the thing that I've been working hardest on. I was just in the Roosevelt Room with the Speaker of the House and the Majority Leader and Scott this week negotiating the tax bill, which is going to be the biggest tax cut ever. So there's a lot of positive stuff going on.
Can you also speak to just what I imagine are these favored nation clauses that are being put into these contracts or agreements around tariffs, meaning that the UK obviously wants certain things, wants to have better terms than others. You're going to have India, I imagine, to the extent they want to do a deal with the U.S. They're going to want to have better terms than China can get. How is that all going to work?
Well, I think that in the end, there's going to be a lot of similarity between the people that come to the table, make the concessions that the president wants, and then agree to be treated well, as the UK is being treated well right now. You know, I think that what every country comes to the table with is a list of the things that they care the most about. And as I look at all the negotiations and how they're progressing, the one thing I can say is that that's a much harder thing for the EU to do than for everybody else. That's why we're moving so fast with so many countries. Because at the EU, you got lots of different countries, so the countries disagree amongst themselves about what the priorities would be. But yeah, I'm very confident that in the end there's going to be very similar treatment, but on different things, because different countries care about different things.
But Kevin, you said that you don't think these trade deals the tariffs are going to be as disruptive as a lot of Wall Street firms have predicted. Right. Is that because you think that these tariffs are going to come down dramatically as trade deals are cleared in rapid fire?
Well, we'll see what happens, but I think the UK success happening so fast is a model of what everybody's shooting for. And the fact that even before Liberation Day, at the beginning of the year, negotiations were already ongoing with Jameson Greer and Howard Lutnick. And so there's a lot of progress made, and yeah, I think you're going to see a lot more deals like the UK deal in the coming weeks.
We're quoting you that these trade deals won't be as disruptive as some people, but I think you've said and at least meant that the tariffs won't be as disruptive. The trade deals, I think everyone agrees, would be helpful if it brings down the high tariffs that had been proposed on April 2nd.
Well, it's really the non-tariff barrier, the huge positive shock of getting rid of these non-tariff barriers. That's the thing that I think is why markets are celebrating this deal, even though there's a 10% tariff.
Let's talk a little bit about taxes and where you think the progress is being made with that. We did just have Senate Majority Leader John Thune on set talking about some of these things. One of the things he pointed out is that he's dealing with different math in the Senate than the House Speaker is in the House, and that it's a little complicated to work the math because each of those bodies has something slightly different that they'd like to see. Right. The leader himself said that, look, he'd prefer to see all these tax cuts that exist right now made permanent rather than maybe taking on some of the new promises that President Trump was laying out on the campaign trail. How do you score all of these different things for the economy?
Well, first, it's going to score to be a big positive for the economy, a much bigger positive for the economy even than the Tax Cuts and Jobs Act of 2017. But the way to think about what's going on is that it's really easy to understand, but in some sense, there are moving pieces. The reason it's easy to understand is that the president said throughout the campaign what his high priorities are for taxes, like no tax on tips, no tax on overtime, and so on. Interest-free auto loans. Those things are his priorities. Those are the things that he insists are going to be in the bill. And then the House and the Senate, they have some of their priorities are different, and they're working it out amongst themselves. And President Trump is clear that he has some things that absolutely red line have to be in the bill. And he also understands that in the end, as they work it out, there'll be things that one side or the other forces the other to do that not everybody agrees about. That won't necessarily be in the top 10 list of the president's priorities. But that's very collegially being discussed in the Roosevelt Room and up on the Hill with Scott Bessent, me, and the leader and the speaker. And we're meeting almost every week right now to make sure that it works out. We had a great meeting this week with an incredible amount of progress moving forward. I expect that you're going to hear from Jason Smith sometime today of what the schedule for the tax bill will be, and it'll probably be really accelerated given what I'm hearing.
You think the rate's going back to 39.6, Kevin, that can make room for some of the other provisions from the president? The president said he'd be okay with it, but he's not. He was kind of like, sounded like
he's not thrilled. He's not thrilled about it. He understands the argument. It's one of the things that the Senate and the House has to work out. I think I saw what Senator Thune was saying on your show, and he felt like there might be some scenario where he would consider that, but no, it's not high on the president's list. He even tweeted about it this morning again.
The president also on Truth Social just said many trade deals are in the hopper. All of them, there it is, all of them good or even great ones. So
it's true.
Okay, you might be listening.
I've seen him. It really is true, yeah.
Okay, he might have been listening. Maybe he found out from you, from watching what you just said.
Sometimes he does. Often not.
Yeah. All right.
Kevin, thank you very much.
Thanks, guys.
Okay, coming up next, we've got a lot more on Squawk Box. Ride-sharing platform Lyft rising after the company reported better than expected gross bookings. We're going to speak with CEO David Risher. We'll do that after the break. Take a look at futures, though, at this hour. Still just about 45 minutes before the open, and it's going to open higher on this Friday, rainy Friday morning in New York. 125 points higher on the Dow. NASDAQ up about 87, 88 points. The S&P 500 up about 21.5 points. The Squawk Box returns in just a moment.
What's ahead?
Welcome back to Squawk Box. Lyft shares moving higher following the quarterly results, and gross bookings now jumping better than expected, 13%. The company also raising its share buyback plan. Joining us right now is Lyft CEO David Risher. Good morning to you, sir. Stock, as we just mentioned, it's up now over 10% on the back of this news. So congratulations to you.
Thank you.
If the chart it's gotten a lot better as the years progressed. Obviously, it wasn't on an overall basis. We can contextualize it. But my question to you is: we talked to Derek Khosrowshahi earlier this week just about the consumer and what they're seeing. It seems like everybody's saying the consumer is much stronger than all of the worries out there. Is that your feeling?
Yeah, similar. I really think that's right. Look, Lyft is a pretty important, part of people's lives every day. We give over 2 million rides. People make, literally billions of dollars on the platform. And services, as you know, tend to do well even in times of uncertainty. So far, we're not seeing anything to worry about. In fact, sort of the opposite. As you said, we've been growing. It's our 16th consecutive growth quarter, which is amazing. Rides are up over 16%. So we're feeling pretty good about what we see.
In terms, though, of what the business looks like longer term, and the international piece of it and everything else, how should investors think about that now?
So, I've been in the job for about 2 years now, and my focus from the beginning has been the same, which is customer obsession drives profitable growth. And that's what we've been seeing in the US for now quite a long time. We're profitable, we're generating cash and so on and so forth. And we're growing in Canada as well, which is super exciting. We're actually doubled in Canada year on year. So as you know, when we talked a couple weeks ago, we've decided to acquire FreeNow, a company overseas, and that helps us kind of diversify, our revenue base. Obviously, it sort of de-risks things, gives us some diversification. I think what works here in the United States is going to work well overseas, and vice versa. We're going to learn a bunch, so hopefully create an even stronger company as a result.
But what's the investment ultimately going to look like, do you think, in terms of just CapEx spending?
Low on CapEx. I mean, we're an asset-light business. It's kind of amazing, actually. I mean, we have 1.5 million people who drive on the platform, and yet we own almost no cars. We own very, very light assets. So I actually think from a CapEx perspective, we're super efficient. It's a good business. That's why our cash generation has been it's over $920 million in the trailing 12 months. So feeling good about it.
Lyft shares are up today sharply, David. They're up year to date as well. But if you're looking over the last year, they're down by about 25%. If you compare that to Uber shares are up 21% over that past period of time. What do you think the market is seeing? And do you what's the difference they're putting on valuation in Uber versus Lyft, and why?
You have to ask the market on that one. I don't know. What I can tell you is, and this is the old Ben Graham quote, that in the short term, the stock market sort of measures in the long term in ways. We're really building a company for the long term. And as I say, I've been in the job for a couple of years now, and I've really, really focused on customer obsession, on operational excellence. Our team is stronger than it's ever been. So I think and then the consumer demand is absolutely there. And remember, there are 160 billion rides that people take in the U.S. alone every year in their private cars, and only 3 billion on rideshare platforms. So I think maybe the bigger story is sort of how new still this industry is and how much growth there is overall, rather than sort of just the competitive dynamic, which I think day by day, week by week, it's kind of hard to know how that plays.
And David, how important is it just to be in the mobility business versus ultimately in food or other kinds of delivery?
So I'm a big fan of focus. I really am. I think customer obsession works best when you really have a target audience. I'll give you an example. We just launched a feature a couple of days ago called Lyft Silver. It's actually very personal to me. I don't know if you've had the conversation with parents about giving up the car keys, but every time that happens, it doesn't go well, and the world gets a little smaller because older folks, kind of start to get a little isolated. So we're super excited. This is all about getting older folks out. We've had great early reaction. I'll tell you, I don't get hugged very often as a CEO, but literally a neighbor of mine hugged me yesterday for the feature. So I think, and it's because we're obsessing over customers, we're able to do that instead of, focus on other things.
So that leads to the question about autonomy, ultimately, because, in a perfect world, we'd all just get in a car and the car would drive us. How do you think about the competition long-term from Waymo, from Tesla, and to the extent that some of these guys are going to plug into your networks, some may ultimately not, they're going to create their own networks. How does that ultimately play out in your mind?
I think you've described it super well. I think there will be a world, and let's call it 10 years down the road, where buying a car without autonomous is sort of like buying maybe a manual transmission car. You're like, they're fun to drive. I got one myself. I love it. Zip down, this sort of thing. But most people will find that having other either robots or people drive them is preferable. And so we're working super hard to be the best way for autonomous partners to plug into our network so they can use our fleet management, our demand generation, our marketplace mechanisms. We're actually launching first live in just a couple months in Atlanta with a partner, May Mobility, and we're super excited. Obviously, really early days, but it's absolutely going to be a gigantic opportunity for rideshare platforms for sure.
We got some headlines I wanted to ask you a little bit about. Engine Capital withdrawing a nomination of candidates for election to Lyft's board, and saying that Lyft's board has taken important steps by committing to significant share repurchasing. Is that what led ultimately to this repurchase announcement?
No, sort of the other way around. We announced a $500 million repurchase at the beginning of the year that the board had authorized. And then looking at the cash generation, as I say, we're generating nearly $1 billion in cash a year. We looked at that again, the board looked at that again and said, you know what, let's increase the authorization to 750. Let's commit to do the 500 over the next 12 months. So that's super good. And we've been engaging with shareholders on this for some time now.
Okay, David, we're going to leave the conversation there. Thank you.
Very welcome. Always a pleasure.
Good to see you.
Thanks, y'all.
You bet. Thanks.
All right, up next, a look at some pre-market movers. We're coming right back.
money in. All right, welcome back, everybody. Let's get over to Frank Holland. He's got a look at some of this morning's pre-market movers. Hello, Frank.
Hey there, Becky. We're going to start off with Expedia. Shares down almost 10%. The company, online travel company, missed on revenue, but it beat on EPS. The CEO said there's weak consumer sentiment and demand here in the U.S. Also, additional color that Canadians and Europeans, they're shifting their travel away from the U.S. Piper downgrade this morning as well. New price target 135, obviously below where the stock's trading. Moving on to Affirm, reported in line of revenue, but a beat on EPS. But the buy now, pay later company's revenue guidance for the current quarter, that was below estimates. You can see shares are down about 6.5%. The CEO talking with all of you this morning about that decline in the stock, saying in a time of uncertainty, he believed that the guidance was actually telling shareholders the company would be just fine. Again, Affirm shares down 6% right now. Also, Microchip Technology moving higher after a beat on revenue, EPS in line with estimates, guidance also beating expectations. Company said it saw no tariff impact and also sees demand improving. Bank of America also upgrading the company from underperformed to neutral. You can see shares are up almost 10%. Joe, Becky, Andrew, back over to you.
Very good, Frank. Left us plenty of time to say goodbye. It is Friday. Friday. Happy
So
Friday.
long, farewell.
Auf Wiedersehen.
Good night.
Yeah. Good night. Make sure you join us on Monday Squawk on the Streets, coming up right now.
Dun, 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 dun.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli at Post 9 of the New York Stock Exchange. Kramer has the morning off. Futures mostly green, above those April 2 levels still. As we head into this first weekend of U.S.-China trade talks, President making some conciliatory remarks in advance. Meantime, tons of Fed speak today and consumer earnings. Our roadmap begins, though, with Wall Street's China trade talk expectations as the president now floats cutting tariffs on China to 80% ahead of tomorrow's meetings.
Plus, we'll have the latest read on the health of the consumer. Expedia, Pinterest, Affirm, all those stocks are on the move following the company's quarterly results. And gold is up, continuing that record run. We're going to discuss that with the CEO of Barrick Mining. That'll be right here at Post 9 in just a few minutes.
Let's begin with the markets as we wrap up yet another volatile week for stocks. On Wednesday, Mike, the president was asked whether he would roll back some of those 145 tariffs on China. He said no. Today he says 80 seems right in his words.
80 seems right. Reports maybe it gets below 60. I mean, I think it really does sort of accentuate the somewhat absurd moment that the market finds itself in trying to handicap these things, which are, you know, kind of not really a process. They're just kind of educated guesswork. Yesterday's action was pretty interesting. You know, market sort of attempted to celebrate this UK deal, up 1.5% in the S&P at the highs, kind of faded through the afternoon. I don't know if it was a rethink of the terms of the deal or what it means for other trading partners, but what it does show you is that, look, under 5,000 in the S&P, which is where we were at the lows a little over a month ago, all you needed was anything but worst case scenario, washed out sentiment, everyone was desperately panicky, and anything but mutually assured destruction, you got a snapback. 5,100, that was one of those hurdles. I think you had to start to see the makings of a deal. You had to sort of see gestures toward de-escalation and rhetoric. And now, I think the stakes are pretty high for the China talks this weekend, both because of where the market has gotten to and because it's kind of the ball game in terms of whether we're going to you know, continue to have this standoff indefinitely or if we're going to, you know, dial it down. And, you know, it's not the only thing that matters for this economy by a long shot, but it's the only thing that matters in the moment for the market in terms of pricing in the incremental trajectory of what we can expect for earnings and the consumer and everything else.
When it comes to the economy, it may become a bit clearer in terms of the impacts.
Yes.
We've seen the numbers out of China in terms of exports to this country in April. They, as perhaps not unexpectedly, plunged. That said, they increased for China to much of the rest of the world. And then the UK deal, I mean, it's still 10%.
Yes.
And, you know, I have spoken to a number of people this morning who are like, well, I don't know, what was that deal? You know, what exactly does it all amount to? And I think JP Morgan, their desk on the trade deal, talking about it grabbing the headlines, but looks limited in scope. And, you know, still leaves the UK worse off compared to the trading relationship prior to Liberation Day, less enthused by recent deals. But it does come back, guys, to this. It looks like we're going to have 10% at the very least with virtually everybody. What will the impact of that be?
Yeah.
I don't know. You know, and we'll try and figure that out at some point.
It's interesting because going into the April 2nd announcement, 10% across the board, I think, was sort of maybe the baseline of the way the market was pricing things. And the market was, 8% off of its high. We already had a pretty weak, let's say a few weeks before that. And so it's not as if it's blindsiding the market. We don't really know the impact. We really also bought ourselves a few months before the impact hits because of all the front loading. Inventories are full. Everyone has tried to do what they can. Companies aren't laying off in anticipation. And so you have this weird suspended animation moment in the economy. Earnings are finished up mostly. And we know what we're dealing with there in terms of a starting point. So I think it's tricky. The way the market is now raced back to just below its 200-day moving average, it feels like a little bit of a potential decision point.
NASDAQ got there.
NASDAQ 100 especially did touch it yesterday, and it's up 20% from the lows. And the other piece that I think is working in the market's favor in this last little bit is people re-risking and feeling like, okay, we have to participate. The lows are in, fine, the lows are in, but guess what? If you go back to the lows, it's going to hurt, even if you retest part of that. But the rest of the world rallying, new highs. Look at the ACWX, everything in the world besides the U.S. at a new high. Bitcoin at a new year-to-date, just about year-to-date high. So it's almost as if it's the reverse of what was going on for the past couple of years, where U.S. mega cap was kind of setting the pace and floating the rest of the world's risk assets. And this time, we're just kind of benefiting from the fact that they're holding in there.
Yeah, the same with currencies too. Asian crisis in reverse was the headline out of Reuters earlier in the week, especially when you look at Taiwan. Bitcoin, by the way, highest since January 31. Ether's up almost 30% for the week.
Yeah.
It's the best week in 3 years.
And I think it speaks to a couple things. One is that sort of muscle memory. This is now, kind of a high beta risk asset that you want to grab if the markets are feeling better. And two, it's the retail trade again. I mean, I keep coming back to that, and it's not really stalled. If you look at a lot of the data on the retail order flow, it's gotten very active again. And, that's both good and bad.
On the retail investor overall, they seem to have done a lot better than the professionals over this period. Not just Bitcoin, I'm talking about the market itself.
To this point,
Many not having sold during all of that tumult, as opposed to, of course, so many of the hedge funds that drastically reduced their risk and did sell. And only to try your point, try and catch up now to a certain extent.
Yeah.
Whereas retail, it appears at least, just kind of held on.
It's true. And, part of it, the instinct is to say, well, there's this kind of quasi-gambling aspect of the single-day options trading and the levered ETFs and the Palantirs and the Teslas and the kind of story stocks. But I've spoken to so many wealth managers and investment advisors who are like, on April 7th, it was all to buy. The clients were like, they remember the pandemic experience. They remember it was a flash crash, basically, 35% down in a V bottom. And it seemed as if, maybe it's somewhat political, feeling like it's going to work out in the end because we have good things coming. Or maybe it's like one massive head fake and they were insufficiently attentive to risk. We just don't know.
Yeah.
Meantime, let's get more on the China side ahead of these talks in Geneva over the weekend. Turn to Eunice Yoon in Beijing. Eunice, interesting to see how the backdrop is getting painted there. The Journal's got a piece about China perhaps using rare earths as a bargaining chip as they go in.
Yeah, that's right. And it's really interesting seeing how each side is messaging as they posture ahead of these talks. From President Trump, he just posted on Truth Social moments ago and had said that 80% tariff on China seems right, up to Scott B. Treasury Secretary Scott Bessent has previously said that the point of these talks is about de-escalation. So the indications that we're getting from the U.S. side is that the hope is that we would see a reduction or maybe a suspension of some of these tariffs. But on the Chinese side, the signaling has been that China will remain tough. And a lot of this messaging is for the Chinese audience. So this is meet China halfway, treat China as an equal in talks, and don't expect us really to go to these talks and fall over. They're saying that if you try to coerce us, we will walk or refuse. And then on top of that, the point of the rare earths. The Chinese are saying that we can hit you back where it's really going to hurt. The Commerce Ministry today announced a crackdown on rare earth smuggling and blaming it in part on foreign entities. And then the social media account that's linked to CCTV, which is very closely followed for its commentary on U.S.-China trade, has been mocking the U.S. for what they've described as rare earth shortages. So the expectations right now of anything meaningful coming out of these weekend talks really isn't there. But of course, people are hoping that we will see some negotiations down the line. And in fact, that's what Bessent has said, that this is really more of an initial discussion before we see some hard negotiations down the line.
Meantime, David mentioned the Chinese export data that we got for April. Exports to the U.S. down 21, but to Vietnam up 23, up to Thailand up 28, to Indonesia up 37. Are they finding other homes for these goods?
Yeah, no, the way that these numbers have been painted here is very much falling into what China has as a narrative, that it's now not as in relying as much on the U.S. market as before. So what was interesting was that there was a surge of 8.1% for these numbers. But at the end of the day, though, of course, China does still rely on exports and does want to keep selling to the U.S. So a lot of this is also just feeding into their narrative.
Meantime, I wonder what they thought of the UK gaggle in the Oval yesterday. The Journal's got some reporting that the president actually called Starmer while Starmer was watching an Arsenal soccer match. Starmer was not planning to have an announcement on Thursday, but the president sort of, I guess, talked him into it, according to the Journal's reporting. Is there a sense that the U.S. is trying to gin up some wins?
I didn't hear the last question that you had said, something about ginning up something, but in terms of when you look at the way that President Trump would approach the UK, an ally, and the way he would be seen in China is really, really different because these are such different countries. And of course, like, the political systems are quite different. So, you would see that President Trump would be coming under pressure politically much more than the Chinese. And also what I find interesting is just the political messaging and the pressure that President Trump is under. In fact, it looks as though, at least from here, that his political success is very much tied to getting these trade deals done. Whereas President Xi is just all about, standing firm and making sure that China doesn't get treated badly. So I think at the end of the day, if the Chinese walk away with nothing, then it really doesn't matter from a political standpoint. But for President Trump, I wonder if it would matter if there wasn't any movement there, and what would happen with the markets.
Yeah, that is going to make Monday morning very interesting, depending on the headlines that we get by Sunday night. Eunice, thank you. As always, Eunice Yoon in Beijing today.
Yep.
When we come back, the CEO of Barrick Mining on gold's record run and a lot more. We'll get to some of the Fed speak today, and then a ton of earnings. Expedia, Lyft, Pins, Coin, DraftKings, Paramount, and more when we return.
Barrick Mining, it formerly was Barrick Gold, ringing the opening bell today. It will trade now under the new ticker symbol B. And the company was out with an earnings beat this week, getting a boost from higher gold and copper prices. Joining us now at Post 9 is Barrick Mining CEO Mark Bristow. Good to have you here, Mark. In honor of the new name, I'm going to start with copper instead of gold, because it's an interesting time. I mean, a lot of unsettling things potentially in the global economy, and yet copper has been kind of moving up and showing some strength. I'm curious as to what you're seeing and whether you're puzzled by it.
Yeah, I certainly am puzzled by it because, you know, normally copper follows the global economy, and right now it's moving against the trend. And that's important because we've all been talking about tightness in the supply side and also a big demand coming. Everyone's been hesitant to bet with that because the economy's been iffy. And I think what's interesting is that we're starting to see that, and it couldn't be a better time for Barrick as we bring in new production. And we lead the industry in new build gold, copper production.
Right. So that tightening is obviously helpful.
Very helpful.
All right, let's talk gold as well. You said on the call, I believe, you've got, and I don't want to misquote you, but I'm reading a transcript, very little inventory left ahead of us, constantly buying assets. So for those who would think, well, it's just great, gold's going up, you know, on the discovery and production side, sort of give us a sense as to what you're seeing when you say that about inventories.
I think if you look back to the turn of the century, the gold industry really hasn't replaced what it's mined through the drill bit. What it's done is unlocked lower quality gold deposits because the gold price has just kept rising. What we've done in Barrick, of course, is we've invested in our future, and what you see is a significant growth looking forward to the end of the decade. We are now guiding a 30% growth in our production of both metals. We call it gold equivalent ounces.
Well, how does the cost of that production shake out? I mean, are you having to go farther afield and spend more to get it out of the ground?
I think what we've seen is that there's a lot of harvesting going on because of exactly that. The higher gold price unlocks gold inventory that's in your resources, moves it to the reserves, and so that adds to production. But it doesn't build runway in the industry. And what we've always done, and what I've done my whole career, is focus on that runway. Long-term viability.
I'm thinking of some of the energy companies we've heard from this week, given what's happened to crude. I mean, they're talking more about efficiency than production increases. Can you imagine an environment where that comes to your space anytime soon?
Yes, Colin. I mean, we saw it in 2015, remember? We had that big rush of M&A from 2011 to 2013, and then we had that decline in the gold price and everyone landed in a bad place, but we became more efficient as an industry. I think the oil and gas industry is leading in being able to manage the market because they invest way ahead of themselves, and I think that's a big lesson for the metals industry, the mining industry.
All right, the big question, what's going to happen to gold? I mean, this move is historic. Correct me if I'm wrong, Mike, but I think over the last 20 years now, you would have rather owned gold than the S&P, or very close to it. Can it continue? Is this a new base? Are we going to go to, what, 6,000, the way at least some JP Morgan says is a possibility?
You know, David, the one thing that you can bet on is that the predictions are wrong. I've been in this industry for my whole career. But what's real is that gold is measuring a chaotic global economy, and it is chaotic. And when if you can address the chaos, there's still an embedded financial issue about, and we've seen de-dollarization of many of the emerging market central banks, and gold has taken a new place in the world as a currency, a currency that no politician can print. And it's been reinforced because these central banks have been using their gold reserves to buy, using their dollar reserves to buy gold, and the gold price has gone up, so their balance sheets have improved. And so It's an interesting time, and I think I always say to people, try and imagine what it will take for us to get the world back to 1999. That's a long way away from where we are today.
You mean in terms of global debt?
In terms of global peace, of a global economic community, of supply chain efficiencies, every aspect of our everyday life was a lot better then than it is today. We're in a chaotic phase of the global economy.
Well, what's your view?
I'm
of
here.
tariffs then, especially given what you're seeing from your end customers in terms of
I'm
the impact
here.
of tariffs as well, on whatever you're providing to them and they're selling.
So I think that look, we've got to manage it. We've used to managing dynamic situations in the mining industry. You wake up every day to a crisis, and there's another few in the afternoon after that. But for me, the risk is still on the upside for gold. It's very pleasing to see copper starting to tighten and adjust, and because that'll bring some more investment into the sector.
Marco, is appreciated.
Thank you.
Thank you for being here, and congrats on the name change. Barrick Mining CEO Mark Bristow.
Take a look at the pre-market here as we wrap up this final day of trading for the week. We'll get to some earnings, and then we'll be flooded with Fed speak all through the morning, afternoon, even into tonight. Right now, S&P futures implied open up about 23. Stay with us.
Look.
NBC Plus.
Great chart out of Goldman today. The percentage of companies that have talked about tariffs on earnings calls this quarter. You want to guess, Mike?
89.
89%. I know you saw it.
Wild guess, yeah.
All the more reason why you got to watch the headlines today, this weekend, and we'll talk about what it means for trading first thing Monday morning. Meantime, opening bell in just about 5.5 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
You know, you guys, CNBC, you've been wrong about the tariffs. You've been wrong about the interest rates. And you're going to be proven wrong again. There's not going to be no recession or depression or stagflation. You're going to be wrong. Good morning, retail traders. How are we doing today? It's good morning to all the people, all the beautiful people out there. Good morning, Jake Paul. I've been waiting. Good morning, Will S. on YouTube. Good morning, Mannequin. Good morning, Robert. Hit that like button. Let's get rid of CNBC because I don't want to listen to their bullcrap.
You know, you don't want to be up.
And you all seen the charts this morning. My support today will be 561.98 to 563.38 for low support. Pivot point, we broke out of the box, 565.08, 566.42, and resistance channel 568.05 and 569.10. We'll see what happens. You can always copy and paste that. We got 2 minutes left. I'm gonna go get my tea going. I'll be right back. Drinking this jasmine tea has really helped me out a lot because I've been getting kind of tired lately, and I don't drink caffeinated coffee anymore. It kind of gives you a little bit of, I don't never really got a push off of it ever, and it puts you to sleep after a while. But this jasmine tea, the caffeine in it, it's good caffeine, I think, if there is a thing called that. Oh, Funky's on mic. Are you there?
Yeah, you watching the
Bell's open. I only got one shoe off. Right now we're at support.
That's what I was saying.
Top of that there pivot point on that. Oh, I didn't. I'll take this other shoe off first. Today's Friday. Oh boy, what a Beautiful morning. Beautiful day today. I mean, perfect. We've not a cloud in the sky. We haven't seen that all for months, 8 months at least. Feel like I'm living in Oregon. I lived in Oregon. Oh, I don't need that. What I do need is this. Yesterday I had a good day until that last trade. Today's the 9th. SPY 569 calls for right now, or the 570s. Now we had a long leg doji yesterday into close. So these 569s. Let's see if we break out of this triple top on the 1 minute candle. Right there around 93. We can come back and hit the 2, but I grabbed these here at 93 for right now. We're just scalping it real fast. I'm not moving up that much. Wait until we establish something before you jump in the trade. Strikes 569 at 93. Let's see what color I want to use today. Let's use a yellow. I'm not breaking, so I don't know. I don't know if it wants to. So far we got 3 bullish candles. You might jump out of this real fast if this thing don't break out here shortly. Top of them wicks.
Good 3-minute candle though. You got a huge bottom wick.
There we go. Ain't going up much. Not much movement on these at all. Yeah, I'm gonna get out. Come on, break. We're at 102. Get one more penny out of it, and I'll have $100. Yeah, I'll get out of it. I'll take my profit at 101. Now she's going to break out probably. Well, broke the ice. There's the 102 right there, damn it. I could have got 102 maybe. So I'm going to set an alert right above the 63. There's 102. I probably could have got 102 out of it. So I got an alert set above the 63, which would be a Head and Shoulders. There it is, 103. I could have got that too. Dadgummit. That'd been 20 extra bucks. 104. U.S. Treasury could force Trump to slash tariffs. Huh? They didn't care about how high inflation went up during the Biden years. They just didn't care. It was great for Wall Street. And 105, 106. Okay, I'm going to raise my alert up just a little bit above that 63. We got a rising wedge. Let me look at the SPX after I get this drawn out here. I have a feeling them IRS people ain't there. Did we trigger it yet? No. They're not happy about having to go back to work. Okay, we're back at 93. See, I'm not in favor of the working at home deal myself. But if you're a government employee, it's a good thing. Okay, we just triggered my alert. So let's see if we hold this support right here at 88 cents. So I changed it, got in at 88. Let's see if we can keep this momentum going here. Oh. There's 3 black crows. Can we hold it? Can we hold it? Can we hold it? There's some risk on this trade here. But I like his candle here. What do you think, Funky?
You hit a support zone on ES. I mean,
Sue's active this morning.
if you do drop, you're not going to drop very far. You might hit the bottom of the orb.
I got 215 for. What's up with Tesla? It's got the autopilot thing coming out June 6th, I think. I got a $300 target on it. 301.44. Okay, we're at the 200 on SPY here. Just got to hold this double bottom or we're going to have a good drop. Double bottom on SPX. Let me look at it. I need to get some thing for my tea here. It's 67.66. Nope. I'm gonna get 10 contracts of more SPY. Maybe 20. I only got 5 right now. There it is. Go, baby. We're at the VWAP. .68. I'm looking good. I'm even right now. I got 20 contracts at 73 cents. Under $1,500. Oh, don't look too hot. There we go. Break it. The 569s, I'd be careful. It's not Richard. I'm not quite convinced yet, but we're above the VWAP. Okay, SPX pulled back to the 63 here, right ahead and shoulders, so I'm going to jump in one of them. Today, ooh, ninth, the 57.15s. Let's see if we can maintain this support. I'm about ready to stop out of here. Yeah, just be a little careful right now. Come on. We maintain, let me set /ES what it's up to. Five minute. Yeah, we're up pretty good on it. Just right below the 200. Got a new girl here on it. Some of these traders look so young. They haven't been through what I've been through. Mara's up 8%. Another 60 cents, damn it. I'm going to do what I did yesterday and buy a bunch of contracts and then sell them for 800 or 900 and then end up, could have made 10 grand again. So I'm going to raise the 57.15s up to 57.10 or 5,700 period and just get one. SPX, the 5700s at $700. There's 830. Come on, baby. I'm back to even. Damn, I should have grabbed them. I knew I should have grabbed them at that triple bottom. So you're back to the 63 again. We've got a megaphone pattern. So if we break to 63, we're going higher. I should have grabbed him. I knew I should have grabbed him. $860 on my other one. I'm going to take profit here off the SPX. We hit the 21. If we break the 21, we're going to go a lot higher. We could get a grand off this. So this is the 63. EMA needs to break right now. So you got a megaphone. I'm even on the SPY. I got 870 on the megaphone. I mean on the SPX. It's a double top. It's also a megaphone. We're squeezing between the 9 and the 21. So this is the top of that support. And let me see how far. I'm going to extend these out. Let me see here. There's 76. Oh, 930. All right. To the 200s right here now. It collides with my other support. That's the SPY's at 77. Now I got 20 contracts of this. So, you know, it's there's 80, 81. So I'm going to take profit here. There's 10, there's 1,000. So you're at the 200, and I'm selling these right now at 990, and I sold these at 80. So I'll take that. Not bad. I got 990 on my SPX. Yabba dabba doo! My magnificent. Sue's on top of the world. What are you in there, Richard? Tesla? I'm not getting on to anybody. When anybody posts an alert in the room, be sure to capitalize your tickers so I can see what you're in and I don't have to ask. Go-Go's up 44%. Trade Desk is up 25%. Mara's up 10. DraftKings up 6. Listed's even up today. Now, Listed I should have been watching because I called low twos. There we go. We're breaking out. Son of a gun. These things are at 82 now. That adds up, especially when you got 20 contracts. 83 cents. That's $60. Coin, we got a target of 215 to break. You know, I've traded with a lot of traders. I like how Funky and I have a lot in common in our trading strategy. So we need to encourage Funk to get in here and do his shit.
I'm in here.
There's $10 on the SPX.
Right now.
Good morning, Spyro. I'm glad you're in here for a second day. The market's up green, all sectors are green. So I'm going to extend all these out. So I can keep an eye on them. And I got to thinking about what Funk said yesterday. You know, he likes to stick to his strategy and his little support lines. And I don't look at mine I don't go back and look mine at enough. So I need to look at them more often. And I think that'll help me sometimes. No, it's not the purple. Let's get rid of these here. Okay, I'm getting back down on my numbers here, so we're going to have to get back in here again. That's the 5 minute. That's the 3 minute. Megaphone pattern. Actually, it's more of a... Damn it, I missed it. $8 for them 5700s right there. We could have got. There's a 1, 2, 3. Now this is on the 3 minute, so let's look at the 2. a small megaphone on the 2 minute. I might be switching around from that 1 minute to the 2 or the 3. That 2 minute looks a lot different than the 3 minute. We got more bodies down here, so I kind of like that one a little bit better, the 3 minute. But then you don't have the megaphone bullish look here. You know, we're at a resistance. We just broke a resistance on the 3 minute, kinda. Back to 10. There had been $200 on them 5,700 calls. IWM's at resistance. Looks like it might have broke it. Nope. No break. Or it did break. What the hell's going on here? There we go. It broke. Okay, we're getting back down again on the SPX. Go give this to Milky. I got a new girl trader that I like. Zach's girlfriend. Better watch out. I might pick up on her. Take her away from him. What do you call that again? It'll be peace in the valley for me. Okay, well, we kind of broke a head and shoulders. I mean, we hit a head and shoulders. Now, why did I put that there? I was on a different time frame. Okay, we're pulling back again. Get ready.
AI names out there.
She's showing some cleavage again today. That's good. On cleavage day, we do pretty well. We're back to the 200 right here. This is the 5700s on the SPX. Let me look at the 5 minute on the 1 minute on /ES. We're at the 200. So let's watch this. Five minute, we're out still above the 9 on the body, but we dip down below it. So these $8 for the 5700s. Darvis or Darvas? Do. Bringing in the cheese. Jimmy's getting ready. Bringing in the cheese. Bringing in the cheese. Bringing in the cheese. Okay, let's get ready. I think we're going to rock it here in a second. We're at a Head and Shoulders. 5,700 at $7. Let's see if we can keep maintaining it. It is Friday, so you got to be extra careful. No, 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 no. We don't want to do. We can do it. We can do it. You can do it. You can do it. It's hard to say. I'm gonna draw this out in the head and shoulders and do my add-on. Right there. Fudge. 580. Nope, didn't give it to me. One more six. There, come on. There you go. Okay, I got one at 590. That's all I'm putting in this thing. $7 and $5.90. Show me some respect. $201.69 hold on the. We're at the 200 on the IWM. I'm in the calls on the SPX. We could get a double bottom. There it is right there. Now this has got to hold right here. Dadgummit, it's not. Okay. Definitely the bears are in control. No, there's a megaphone. We got a megaphone. Let's move that. Might have to add on more here. I didn't want to add, but we got a megaphone. Didn't hold my shoulder. Right there. Oh. Did I get any on me? Huge megaphone. So we got 1, 2, 3. Come on, you gotta hold. 4.70. Now I got 4 of them. Today I'm going to have a hamburger. Now let's get it up. Okay. Dadgum. Nothing's working here.
Fastest growing product. Their entry
Here's that young looking
from a
Asian.
valuation perspective, it's one.
Gotta hold this 1, 2, 3. It's just been a lot harder for me to trade here lately. Last month, five weeks. It's been very profitable, but it's been hard. So the SPY's about to hit my, is that low support? Let me see. I can't use that chart. Yeah, the bottom of the pivot point. It's got to hold. And that's the bottom of that megaphone too. On the SPY. I'm down 400 on the SPX. We're at 430. It's 16,000, almost 17,000 contracts at 450. The price. 3 black crows, 3 black crows. First one didn't hold. Second one, third one. We got 3 of them, 3 separate ones. Where's the SPY's at? Let me look at the SPY. So I got I was in the 569s on the SPY. They're now at 35. Damn. This is crazy. The 566. You think the war is coming in? So I'm watching the 566 now. I'm going to jump in these calls here real soon. Treasury yields could force Trump to slash tariffs. Fed Williams says the stability for the Fed to have well anchored inflation inspection. So is Powell wrong again? Come on. We bounced off the 50 here in the last 3 days, 4 days. I'm going to add a lot to this, and I think. We're at the 21. Let's see if we hold that. Come on, bitch. Poor 50. Well, they're not messing around.
Anytime, anywhere, on any.
The 566 are at 104. U.S. Postal, man, they're really something, ain't they? QQQ hit my support. Coin has a double bottom. I'm holding on to my SPXs here. We got to break the 9. They definitely flushed it out. I'm gonna have me a burger here in a second. Right now I'm in red because of this SPX. Didn't hold my megaphone. I really thought I had something here. A plaque on my teeth. I'll go brush my teeth in a second. God darn it. So let's test this out. $3.20.
Can you hear me, buddy? Anybody hear me?
Okay.
So we're at the bottom.
I'm full blown now.
I am watching, you can see my chart, I'm watching this PM low at 56.65. I think they're going to try to push it there. If they get it there with this RSI being so oversold on the 5 minute, I'm going to go ahead and jump in the 5700s.
God. There it is, right there at support. This is where we bounced up before. So we're going to find out now, big time.
I'm watching that PM low.
Let me look at the SPY. Might grab some SPY here. Yeah, SPY's hit the top of that low support. Funky?
Hey, can you hear me now? He's got me muted. You ready?
Dadgum, I didn't expect this.
I mean it.
The 565s. Well, I'll go out the next day. I'm going to go out the next day. The 12th. the 570s. This is horrible. May 12th. This is not an easy day. Not as easy as I thought it was going to be. Can I hear him? No. Is he talking? I don't think he's talking.
Yeah.
Oh, he is. Let me see here.
Can you hear me now, Jim? Jim.
I should be able to hear him.
Sorry, Ro. Jim.
I can hear you now.
Alright, now you can hear me. I've been talking this whole time.
Oh, have you? I haven't heard you.
Yeah, all morning. I just thought you were ignoring me.
No, hell no.
Yeah.
Did you do something on your side?
I just called the 5700 call when the ES hit that pre-market low just now. The guys in the chat room heard me. I don't know if they took it or not. They heard me.
What was your I had 563.38 on the SPY on the top of that.
Pre-market low for ES was 56.65.
No, I didn't hear you.
RSI is way over, so
That's what I was thinking.
she has to bounce there. There we go. Get some push up. Yeah! Give me that money. Go. Go into that next support zone. Get your heavy ass up off that line. There you go. Block money. Give me that.
I got in the SPY. And I'm still in the SPX.
I got in 5700s at 260.
I didn't hold my support on the megaphone. I was shocked. That's one heck of a sell-off.
You ain't, man.
We have a double bottom on the RSI. Usually when I see a double bottom on the RSI, below the 30,
You see that RSI bullish divergence on the 1 minute, on the 2 minutes?
I'm seeing it on the 1 minute. Yeah. Shows about the same. Slash ES, let me look at it. I got a lot of contracts to the SPX. I'm expecting a big day on it.
There we go. Alright, there's $100 contract.
SPY got 152. I'm up almost 200.
That is now a resistance zone, though, because we fell all the way through it, so support resistance. As hot as RSI is, I think we'll get another touch at it. You want to grab your money when you get to that next zone.
I got a lot of contracts on SPX. I ain't trading like this though.
Alright, keep buying these calls. I'll let you know when you hit resistance. You're there. So hold them or sell them, your choice, but you're at resistance.
We're at the 9.
And you've got a $100 contract that you bought when I finished it.
We're at the 9 right now. I got a lot of contracts to the SPX.
You're welcome, Prentice. I'm going from May's trader of the month because, you know, it's my birthday.
Oh yeah. That'll be my decision.
Uh-huh. Did you make money, studio? You did. Good boy. Thank you very much. It ain't the point yet.
This is nuts.
Did you get in that last trade, Drew? Good deal. Alright, so they let RSI take a breath, and then now they're trying to push it down into that next support zone at 56.56. If they can push it past the pre-market low. They really want to sell today.
Yeah.
But once you zoom way out and you look at the zones, you can almost see what they're trying to do.
Well, we bounced off.
Like yesterday when I called, they were going to try to take it to the top of the orb. Like literally, I zoomed out to the 5 minute, I could see the pattern that it was forming and what they were trying to freaking do by the end of the day.
Let's break out. I'll need a lot of money on these. I got a lot of money in this. What's your average on that S? You're flat right now? Even? No, what's your average? What are you, how much? You can private message me if you want.
Guys, this is why you always mark out your pre-market low and pre-market high. You wouldn't believe how many times they actually come in really handy. If you see my chart, this sucker bounced within 3 points of pre-market low.
Not today. Yesterday's. I added a lot. When we hit that 50 SMA on the hour, that's where I added 8 contracts right there. It even went below that a little bit. And we're at 390 now. I got 16 of these suckers.
Yeah, that's $140 contract from where you came in if you hit it.
I got 260. Well, I didn't get the low, but I got 260. We're at a double top right now. If we break that, we're going to go higher. Then I'm going to cook me a hamburger after this. And SPY calls. I'm up good on them. 137, now we're at 161, 160. Then we'll hit that top of that, the bottom of that megaphone. Damn it. Back to even. It's not an easy market today.
I mean, not a very cool.
Mm-hmm. Back to 158 on my spies. 160. And the 5700s are at 360 now. I don't know if we'll have a day like we did yesterday on that thing on the bottom. We break this triple top. We're getting close to a triple top right now.
Yeah.
I don't know if I should sell them here or just... I regret selling them yesterday.
If you look at the 2-minute on this, you've got a really good 1, 2, 3, 4, 5 touch trend line going up.
Yeah. I'm at the pivot point on the linear channel. Break it.
I think she's got some more in her.
We got a triple top also on that one, on the slash ES. Ascending triangle on the 2-minute.
There she goes. Alright, so top of your resistance zone on the S is going to be 5683.
I might charting it. I might start charting that ES like that. Budgie, what was the number you got? I got 5726 for a pivot point.
5683.50 is the top of this next, or the top of the current resistance zone that we're in. So if it breaks 5683.50, to 63 on the 2 minute. She just got within 40 cents of it and bounced back down. So.
God darn it.
Here's the trend line.
Shit.
I mean, you haven't lost the trend line yet.
No, but I went to 320 and I'm still holding on to these. We're going to see. We broke the resistance. But now we're hitting the 50 on the 1 minute. No.
Long bottom wick on the 2 minute. These tires are sitting in.
I mean, I can make some good money on this if this thing breaks past the 63 on the 1 minute. Let me look at the 2. I broke the 21 on the 2 minute. I gotta break out 56, 62, 52 is my number. Break it. $390, I'm up 640.
Yeah, if the 1 minute ES is above the 63, 63 is sitting right on top of that point I picked is the top of the resistance on that. If it breaks that 63, it'll run another 4 points before it hits any resistance.
Yeah, 63 is right on that megaphone line, which was support, and that's about where I got in it. My second entry.
If you break that 63, you got at least 4 more points because there's nothing stopping it after that until the 2 minute hits the 63.
It's a major resistance. I think, yeah, I think if we break that, we can go a lot higher. Better just sell them right now and be happy with what I got. Yep. This could be a $2,000 or $3,000 trade if it starts to move now. I feel good about it right here. Once we broke that megaphone support, that makes a whole bit of difference.
You got a lot of resistance at the ES 56, 89, 20 level.
I'm up $70 contract right now. I mean, these things should, yeah. My average, though, I'm talking about. I'm up $1,100. I just never know. I always sell them way too early and wish I was still in them. Yesterday would have been a $15,000 extra day. God, I want to sell them so bad. I got 16 of these things, so, you know, I'm $5,500 in the trade.
Yeah. We'll start scaling out and leave a runner. Ain't no rule that says you have to close them all.
No. Yes, I sent you a message. Yeah, I got, my lowest cost was $260, and I loaded 8.
I mean, that's pretty much the bottom. Are you talking about the 5700s that I was in?
Yeah, they went to $230.
Yeah, that was pretty close to when I caught it, because I caught it at 260. That's what I got in that.
Oh, you banked on 2 of my earlier entries. Good. I'm just caring. I just wonder about you. Anybody else in that trade that got in with me at the 5700s early? Richard, you in it? $430.
There you go. There she goes. The 5 minutes gonna run to the 200.
And I want you to think about, if you're even, just think about getting out. Not taking the huge risk of it running up. Unless you have the guts to hold on. Because I sold some right there at 430. Okay. I didn't expect that kind of pullback, but I got in it. I mean, it sucks. I think this was my third trade that I'm in on the SPX. I scalped it twice, and then this third time,
I kind of like big pullbacks, especially.
I do too, but not when you're in them.
Oh, no, not when you're in them, but if you wait, you just put 5 minutes on while it's happening, and wait for that RSI to hit 17, 16, 15. That's almost guaranteed money.
Yeah, I made a lot of my big money from the pullbacks, being in one and then just buying the bottom. I mean, like every 10 cents was $160 on that trade. Now we're pulling back to that megaphone, so let's see if this holds support here. Got to hold right here. I'm going to add, I don't have as many as I had, let's put it that way.
Let's see if it breaks through this resistance zone. Just now support.
I'm going to add on right here. So I got 349 and 320. That brings it down a lot more. As long as I hold that megaphone, I'm happy, but or that triple top.
Push at the bottom of my zone.
No. Not today, Harry.
Minute 15 left on this 5-minute candle. What I'd love to see is them hit the bottom of the zone and then give me a tweet above them.
Got some kind of hair getting in my eyes all the time. I don't know what it is.
Get a haircut, you hippie.
Yeah, I have to get a haircut. It might be an eyebrow. I think it is.
Seconds left on the phone.
I can't see. I used to have real long hair when I was younger.
That looks like a pusher button there. Knock it down.
We're back at my support, so we got to do something here.
Push it down the bottom of that zone. Yep.
SPY still at 156. My 570s.
I'm looking at 57.15, so I ain't too sure about this
I can't believe I've held these SPYs that long. We're still under the VWAP. Gogo must have really loved its earnings.
Did you see what QBTS did yesterday?
No.
50% after earnings. Went from like 680 to 1080.
It's up today too. It's up nice today. 983 to 1169.
They're actually freaking moving. Like, and RGTI, I guess just because they're quantum as well, they're moving too.
Yep. Well, Trump eased the
Chip restrictions.
yeah, or he's going to.
So this looks like a please button. I'm jumping.
Yeah, I've got 360 right now on mine, so I'm.
On the 5 minute, I see a please button.
I'm up 20 some $26 contract. Now I'm up another there's 370. Break 63 on the 1 minute. Do it now.
There we go.
I'm gonna make a lot of money on this thing. I got a lot more.
My contracts are at $35 a contract just since I've jumped in just now.
Yep. About 70. I'm up 80 on my last entry. I want to get up here at 60, 56.75 to the 200. Check out Springfield, Missouri's Humane Society. Yeah.
1 minute predicted is 63 on the S. That doesn't seem bush.
Think about selling with spies. Yes. No day to be playing around.
No, you better be down here today.
Yep. Yep. I'm glad I went out the next day on the spies because they're holding up pretty well. Up $23 a contract. I'm gonna turn that air conditioner off. And go cook a burger and come back.
Let's see, you're at the bottom of the support channel. Or support zone.
We can drop to 56.55.
We'll lose the zone, yeah.
That's right on the right shoulder line. The market wants to hear some AC/DC, probably. I've seen REO Speedwagon 5 different times. If anybody's ever heard of them before. AC/DC once. Def Leppard 7. Kansas, I think I've seen 4. Leonard Skinner twice. Black Sabbath 3 times. Beach Boys twice. Ted Nugent once. Iron Butterfly once.
My almighty. Even with that big ass candle, the contract didn't move but $10. That's no bueno.
What, the 5700s? I was going to say 5,700 moved 30. Pink Floyd once, Kiss once, Van Halen twice, Steppenwolf twice, see that better moved $40. The 5,700's on that one.
They're getting ready to push this thing back down.
Turn. Come on.
There's buyers at the bottom of this support zone, but they're about to get freaking overwhelmed, I think.
I'm overwhelmed. I'm going to turn that air off. It's getting too cold in here. I'll be right back. Now to get out of this trade here, I'm going to go have me a lunch, come back and reboot. Yesterday I did good after. Now these things are at 160, my calls on the SPY. And I keep playing around with that, and it's not broke, so I should sell them. Get both these up here. FDA approves 3 food colors for natural sources. FDA. British Airways buys 32 Boeing planes worth $13 billion. $164. That pink line's the VWAP. I'm very hungry. I've been up since 1. Not had a breakfast yet. Had a couple bars. Or had some Amos cookies.
Famous Amos.
Yep. There we go. Break it. Now see, we've got a bull flag here. No.
Oh, man. The lemon cookies are so damn good.
I had these little miniature Amos cookies.
That's what the Bud's Best are. They're about as big as your fingertip.
Yeah. Yeah. I'd say about a half.
They're like super mini Oreos, except for they got vanilla wafers and cream filling, lemon cream.
Man, come on. Quit playing with me. It's one of them days right when you get close to resistance, it wants to pull back. There's a lot of good chartists trading this today. Small scalps.
That's the bottom of the support channel right there where it just touched. 2, 3, 4, that's a 5 dead zone. Make it 6. The Pirates just got bum rushed.
Here we go, the right shoulder. This has to hold right here. A little bit lower, but not much. So it's the bottom of the bull flag. So we'll see if it's, I think it's about time for it to start doing something. $250. The 5700s. Come on, you beast.
I've got work every 30 minutes, so I'll be off for like an hour and a half.
Yep. Yeah.
Just had a tweezer up on 1 minute.
Get some at 250. I'm gonna make some money today. It was it's hard, but up $45. Now breakout. 1, 2, 3. There we go. Break. This is a triple bottom going down here. 1, 2, 3. 1, 2, 3. So it has to, right now is the 63. So I either sell them here at 310, be up $60 or we go ahead and we break on out. That's a sweet spot. Crickets. That was $100 right there on that breakout. Now we should have held, for it to stay bullish, we should have held the top of that sweet spot. So every chart has a sweet spot. This is called a bull flag. I talked about this one yesterday. And on that third time, that's why I called this down here. I said it was about ready to go ahead and do something. It has to do something here or it fails. So that's the sweet spot. And then we broke out. So that's a bull flag right there. If you're going up and you're pulling back down a little bit, that's on a good day, that could have a nice extension to the upside. On a day like today, it's Friday. You're fighting against the fat cats. They're all bearish, all of them. Tariff this, tariff that, tariff this, tariff that. They didn't want to hear UK got a deal done. Although it's a starting of a deal breaker. They want to hear China. And they've called out China almost every single year since Biden's been in office, and it ain't done shit. And it finally broke out when Trump got elected. And Wall Street loves China because they're a huge economy, and they've called, same as Europe. They've called Europe out for 20-some years, and it's never really done anything. Especially back during the Obama crisis, when we had that 50% pullback in the market. We were at 13,000, and we went down to 65. We had a huge pullback. I mean, and everybody was freaking out big time because they had their money invested in Obama. But also, they pulled the market back for 2 years. And then it really got pulled. Once he got elected, the market just crashed big time. Because, he came in with preaching about the fat cats and the jet planes and said you don't need to be traveling right now to Vegas and all this bullcrap. But he ended up being in bed with them because he printed all this stimulus money. And back then, China had a good run. Their GDP was 7%, 8%. Now it's only like 3 or 4. Eventually, China's going to break out. And I bet you China breaks out after they sign this trade deal. And it might take another 3 months, the middle of the year, before China, But now they're in talks, so that's a start. The idea is to set the premise of what they want to do for the next couple of months to come up with some kind of deal. So we might give in to them, and Trump will have to give in to them. He's going to have to give in to them real soon because he wants this market up. But it's China's the deal. China's the one. Once we start hearing good talk about that, this market's going to fly, start to take off. These are at 330 right now. So I could either sell them here. I got 250. I'm up $130 a contract on this sweet spot. Now we got a double top. And today's been like this. I mean, it hits a resistance and then it pulls back. This here trend line is off the megaphone. It's just triple bottom right here where I started buying into that trade. and it just failed on me, and it was miserable. So we came back right here and hit that same spot. As long as you stay above that megaphone, you're still bullish. But if we go below it, it can drop down to this other channel, to this where I called that head and shoulders at, where I jumped in at 250. So you either sell them here at 330 or 310 or whatever and get your $60. I'm going to try to get this thing back up here to this 200. That's my goal. I want to bring these calls back to $5-6. But again, you know, you got to look at them patterns. It's at the triple top right here. And I got pee. I've been drinking a lot of water this morning. We break that triple top. There we go. Now we can start building some momentum up to a double top. I'm going to go and put that price line just right across that double top. And that's going to be another resistance. So that double top, if we hit that, it could come back down and hit this here old triple top breakout. Once it hits that, because that's the way today's been. Does that make any sense? See how it hit that triple top, now it's pulling back. I mean, look at that. It's lost $60-$70 right there on that one candle. So it's a scalper's day. I'm so used to getting in these trades, and that's why I always get out early, because I can't trust. And then when I do get out of them, we have these huge runs, and I go, shoot. Yesterday just made me cry almost. We've had a lot of days like that in the last month and a half. Since we hit the bottom. Look at that big spike there. Boom. These were at 285 just a second ago. Now we're at 370. Now we're at a double top. So what do you do at a double top? You knock on the door and take profit. Scale out. So I'm selling, I'm going to get out of these trades at 370, 360, and leave just a couple, just to hold a couple, and then if we dip back down here, I'm going to add on again. Do you understand where I'm coming from? S does. And if it pulls back, I'm going to add on. I'm going to double down. I've still got some. I should have listened to a lot of people. Funky, Time. I've mentioned 5 or 6. Scale out. Hold a couple and let it run. Keep runners. Yoko. We had a couple good traders in here leave because they just didn't like, the politics, or they didn't like to be picked on. They couldn't handle it. I can handle it. But, like Bobby, he got a little carried away. He was more like an Antifa. I won't have that. But if you can buffer the politics out, it's a lot better for you. And just realize that people have different opinions. There's 390. There's my target almost. The 200. You too. Have a great weekend. There's $4. And some resistance here. The things are starting to come good now. I failed on the support today. I'm sorry about that. Funky came to the rescue. Here, let me get a better picture of this. But I was kind of looking at the same spot, but he definitely helped out. He waited. He had more patience than what I did. I was thinking about this last night. I always want to be in a trade. And I don't know if that's a good thing or a bad thing. Probably not a good thing. I'm addicted to this stuff. The time of day, I'm gonna go cook me a hamburger. It's almost 12 o'clock right now, New York time. If we break the 200, yes, we'll push up. Right now, we're respecting the double top. So you had the double top, right? And it came back and lands on the 9. I think little by little, we're definitely, there's less bears out there right now. You see one person already left the room, S. He knows that first hour and a half is important for scalpers, and the volume's a lot better then. You got people like me trading it. And I know traders that won't trade it until after that time, until after it's already established its pullback and started a good reversal. Because they can't handle this this early trading stuff. I love it. I make most of my money at this time of the day. But I had 16 of them contracts at one time, and still it ain't past $4. This last time though, 250 to 360, I'm just holding on to a couple of contracts just in case we do break. But I'm gonna go make my sandwich. Oh, I didn't have my face up. You could have seen my face today. I didn't even put my picture up today. Yeah. Sometimes YouTubers, you got to refresh that YouTube thing. Dow Jones, we're flat. The market's flat right now. Jesus Christ. Will you stop calling me? You're a female. Do that knife. You see how important it is to get out of the 200? Now watch this. I want to go pee and take a lunch break, but I don't know, man. I might want to buy these again. Get ready. Get ready! Damn it. This is the FBI. May I help you?
Hi, this is Brandy with Home Security Promotions. How are you doing today?
I'm doing great, baby. I'm sitting here trading stocks. You want to join me?
Okay. We are offering a new state-of-the-art wireless alarm system with a free doorbell camera. So are you the homeowner?
Yeah, I go to many homes. You need a roommate?
Perfect. Let me get my home security specialist on the phone for you. Hang on for a moment, please. Okay?
No, you can't. Don't tell me what to do. We're not married yet. Don't be telling me what to do. Only when you say yes, Jim, I'll be your roommate. Then you can, but not till then.
Count to 3 and trade with me, but count to 4 to make much more. China.
I gotta pee. Oh yeah. Oh yeah. Man, I gotta pee. Yeah, can you bring over my pee bucket, Nancy? The one with the hose on it right now. I think I might be here for a long time. Yeah. The 1 gallon size. Hurry up. It's not a good day today. I gotta go. I gotta pee. I'm gonna go turn on my cooker and start my mix and watch this trade from afar. Come on, baby. Break it. We're back to the top of that bull flag right here. So this is where it's got to reverse. Dadgummit. Come on. Come on, Mr. Yicky.
The last 2 months. Travel, you see it in some of the travel numbers. However, you do have summer travel coming up, and a lot of these airlines still think the second half of the year is going to be better. Cruise ships, they're also reporting optimism about the second half of the year about bookings. But right now, you're right, Tom. Coming off the end of last year, January, February, March, that was a slow quarter for travel in general. But Tom, those stocks got discounted quickly. Those stocks got discounted. Look at the charts on Delta, United Airlines, all these companies. Now it's hitting some of the travel companies. So, yeah, there are sectors, but remember something. Crude oil, down from where it is. Airfares, down from where it is. What does that do? Lowers inflation, right? Airfare prices are part of the inflation. So everyone's talking about inflation going higher, but yet the key metrics are all going lower. April 1st.
Exactly. They don't know what the heck they're talking about, Mr. Hickey.
It's going to show up in next week's data. It has to, Tom.
Yep, I think that's part of that concern that you and I have talked about repeatedly on the show is like everybody expects this really big jump in inflation. I just don't see it.
I don't see it either.
Even though you said that the consumer's still out there spending, but I think they're making better choices. But Joe, you start looking at earnings results so far, it feels like we've been appeased a little bit because some of the reports have been decent. Some have, given cloudy guidance, which isn't unexpected at this point. We come into a light week next week. We got Walmart. That's probably going to be a big one. Cisco also. Is that the key here? Is that, hey, as long as corporate results stay okay, the stock market can do better than maybe what a lot of pundits are saying that it's going to go lower.
Yeah, but I do think, guys, we need to be mindful of the fact that our Q1 earnings we're looking at right now probably only have maybe 5 to 6 weeks of data that would include, Liberation Day, not even that, though, a couple of weeks that would include the build-up, maybe the build-up for Liberation Day, probably a better way to put it. And those have been pretty good, let's be honest, about 75, 76% earnings beat rate. Sales, beat rates are only around 50%, so that's okay. What I would kind of key in on is that I think the earnings guidance, like I said, that's been pulled a little bit, but even coming into this quarter, remember expectations were pretty high around November, December, and those expectations dropped pretty dramatically coming into Q1 earnings cycle. We're sitting around 12% EPS growth year over year, and that's pretty good. Look, that's like I said, those are good numbers, nothing to sneeze at. But how much of that kind of takes into maybe some of that investor and consumer skepticism that is kind of a little bit more manifested, and probably we'll see that a bit more in Q2 earnings. So we really want to kind of revisit this conversation in the next couple months to see where we're at. I will say this: one of the things I'm really kind of keeping an eye on is the weekly flow of funds into like equity ETFs, whether or not to get a sense of whether or not this rally has some legs. So there's a few things, right? Number one, if you look at the dip buying that was prevalent back in that first, second week of April, that was real. Like you can absolutely make the case that retail stepped in at that point. Where we've seen a bit of a drop off is every week since. And you just have not seen that same type of buying interest. Where it is starting to pick up a little bit, and I think this is interesting, is you're seeing it a little bit more in company share buybacks. They're using the dip in the market as an opportunity to buy.
This really gets me about these people.
You might see some money management.
I dealt with 30 to 40% inflation during the Biden years. They didn't want to say a word about inflation. Now we don't even have inflation. And all they can do is talk about inflation. I want to know where they were back then. It was such kept secret. They didn't want nobody. They didn't want to bring the market down. They do on purpose. They're doing this on purpose, and we might not even see inflation. It's just weird. We had a big drop in the market right there. We're now all red. So I sit there and argue with them. You know why? Because we're printing all that free money. We're printing $14 trillion during the last 4 years. That's why they never brought it up. They're more mad about Doge than they are, getting them cut off. That's what they're mad about. Trump's letting the private sector invest. That's what they're mad about.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking Alphabet. Shares are down about 19% this year, off about nearly 7% just this week alone on the news that came out. Apple's senior vice president, Eddie Q, came out with some commentary about potentially Apple adding to their Safari browser some AI capabilities. Kevin, when you look at this company, the hits keep coming, whether it's the toll booth of taxes in regulation over in the EU, whether it's the potential breakup here of Google Alphabet. It just seems like they just can't get out of the way of whether it's regulators or more fines. It's just one thing after another.
That's our goal right here.
Right?
I agree, and these are not small gashes that they're taking out of Google. These are big hurts that they're taking out. I mean, it looks like search is under attack from AI. They reported Safari searches fell in April. Apple reported that. That's what kind of triggered some of the sell-off. I think the regulatory pressures, both from the EU and the US. But the good news for Google, if there is any, Tom, everything is priced in. This stock has been under pressure. It was under pressure before it dropped 7% this week. It was under pressure. So, man, it is getting absolutely discounted to everything is getting discounted in this name. So, yeah, you're right, Tom. It's tricky. Again, there is just the news flow in Google Alphabet just horrible, Tom, and just keeps the stock under pressure. And but the thing is, not small headlines, big, major headlines are hurting this thing.
Danger. $20 billion annually they pay to Apple to be the default on that search on their platform. But Joe, even with the 7.25% drop that we saw on Wednesday, the 2% rebound yesterday, I saw Morgan Stanley, JP Morgan, Evercore all came out and said, hey, buy this stock. They've got so many pipelines of revenue generation, and it's still the cheapest on valuation basis out of all the Mag 7s, and buy a lot.
Yeah, no, I mean, it's hard to argue against that forward PE of around 16. I mean, that's not even lower than the majority of the Mag 7. That's lower than the majority of the S&P 500. And you look at a PEG ratio, which basically takes your 3 to 5 year growth projections and then divides that by the current PE, you're looking at around 0.94, which anything below 1 is what a lot of investors will consider relatively inexpensive. So all of that has to be taken into consideration when you're looking at valuation. But you also need to take into consideration the fact that they're basically taking blows from multiple directions, and it's a company that right now, the stock is down 25% from its February high, and just kind of looking at the charts, it's not really showing that it's providing a decent bounce off these levels. You did get the bounce back on April 7th, like everything else, where we got down to about 140.5 before kind of rallying back to 165. Then you get the news out yesterday, as you mentioned, from Eddie Q. And remember, that wasn't just part of a Wall Street Journal interview or something like that. That was actually, Eddie Q as reporting or testifying, right, as for the Department of Justice. So this is more than just, hey, Apple saying it's pulling back maybe on or it's seen a pullback in its search from Google. What it is saying is that this is a bit more industry wide, and I think that's an important caveat to look at. Is that there just seems to be a shift away from traditional search more towards AI. And as Google has been a little bit slower in their ability kind of to adapt to that could continue to hurt search revenue going forward. So just something to be mindful of. What I think is important is that, what is the impact on future profits? So I don't want to get caught in this value trap where we start to say, well, it's cheap relative to, right? It's just something, is there a dynamic shift that continues to occur, and is Google going to be able to catch up? I think that's
go on, baby, break.
Going forward. Not for the next quarter, but right for the next 25 years.
Yeah, I think that's what, maybe why it's still down 26% from those all-time highs, kind of underperforming at this point. But Joe, you got an example trade here in this name. You expect some more volatility to continue as the hits keep coming, right?
Yeah, it's a diagonal. So it's basically looking at kind of a combination of a calendar spread and also a vertical spread. So it's basically buying the June 25 expiration, selling the June 20th expiration, selling the May 23rd expiration. You'd be buying the June 145 puts. You'd be selling the May 140 puts. You'd pay somewhere between 250 to 260. I think I showed you guys around 250, 255, or wherever it's trading right now. A couple things that I was looking at right now, the implied volatility percentile is about 35th. So even on a stock that's pulled back from 165 to where we're at right now, you haven't seen a big jump in volatility. So it's telling you that if you do expect the stock to continue to kind of pull back a little bit, any type of expansion in volatility will absolutely help a spread like this where you have that long volatility component to it. Since you're long the 145 puts and short the 140 puts, as you can see, there's also embedded a long put vertical spread that will expand in value and maximizes in value at that short strike. And I think that's something for the viewers to always be mindful of. Whether you're talking vertical spread, whether you're talking a calendar spread, or in this example, a diagonal spread, you want to move to that short strike when you are, when it's a debit, right? When you're paying money for that. And this thing will absolutely expand if it gets to that point, if it gets to that 140 point. That's kind of where this thing maximizes its value. So a couple other things to be mindful of. If it does kind of pull back to that April 7th low, that takes it right back down to that 140 level. This doesn't really have to get that far in order for this thing to break even. It basically needs to pull back $1 or so where it's at right now. Couple other things, RSI. RSI, now this one's a little bit interesting if you're looking at it from a charts perspective, because you are seeing higher highs and higher lows, or at least higher lows at this point.
God, come on, man.
We also have seen, difficulty for the stock to kind of get back over a certain level. So if it does, even if the stock just kind of meanders here and just drifts slowly back down towards that strike, this spread can do fairly well.
Yeah, bringing me back to my market maker days. I always wanted to be short that strike
Market maker.
that the stock was going to at this point. But let's break down this example trade Joe brought us. Going out to the June 20th monthly cycle, so 42 days to expiration. Buy the 145 strike put out of the money to the downside by about $7. And then in the May 23rd weekly options that expire in just 14 days, sell the 140 put. $5 wide bearish put diagonal here, paying roughly, we've got 240 debit on there. It's trading closer to 250 right now, but the debit you pay is going to be your risk. So $240, $250 per spread on that one. You need it to move lower because this is below the current share price. Kevin, you got plenty of time on this one, so you can have some gyrations in the stock for a little while. But you have some, duration in this position, but it's definitely a bearish look, trying to take advantage because, as Joe mentioned, if the stock does start moving down, you expect implied volatility, especially in those near-term options, to start to expand a little bit.
Yeah, that's what really, the Vega component is one of the larger Greeks in this trade. Because he's doing the 145 strike, which is $7 out of the money, what it does is, you've got 2 out of the money options. You still got, a traditional shape of a put diagonal, but the theta number's not as big as you'd like. It's less than $1 a day because you're both out of the money on both. But the Vega component, that's 12 Vega, that's got a nice jump to it if you get that jump in implied vol. And you, like I said, you need that movement in this name because you're long. A 145 put. You need that movement. Like I said, you're short about 17 deltas, Tom. So this is one that you look at, and it's a not as aggressive as you bought it in the money, but the trade-off is you pay a lot less for it.
Yeah, I think that's key because we talk about vol dispersion when buying diagonals typically, and that lowers the price entry point. Volatility is relatively flat on aggregate across those 2 option series. Why it's cheaper is because of the fact that it's $7 out of the money to the downside, that long 145 put. All right, great look at the put diagonal there in Google Alphabet if you think it's going to go lower over the next month and a half or so. And thanks to Joe Mazzola, head trading and derivative strategist at Charles Schwab, for joining us. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in NVIDIA. The chip stock has rebounded about 6% this month, but is still in bear market territory. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Break it.
Trade brilliantly with Schwab.
Let's
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
And
Best
being
of
in the
all,
now.
you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today. Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Andy Swan, co-founder of Lightfolio. Happy Friday, Andy.
Yeah, happy Friday.
All right, so NVIDIA shares up, about 29% over the last year. It's run into some problems.
This really
AI
sucks.
doesn't seem like it's as hot as it was. Growth rates are starting to come down, even though they're explosive. What kind of data do you have here on NVIDIA?
So I've got 5 contracts at $2.
Rates that NVIDIA had at some point, the law of large numbers catches up to you. But, when I think about NVIDIA, I just think about overall, when you look at the way the world is moving right now. And I'm not talking about just business. I'm just talking about the entire world. Where is the money flowing? And without question, an enormous percentage of the money is flowing into AI and generative AI. So, if we look at IT budgets across enterprises, and these are large companies, but I think you can tease this out to the smallest companies in the world. Everybody's doing the same thing, and they're overwhelmingly prioritizing generative AI spending as their top spend in a unprecedented way, even ahead of security. And so this, for us, underscores the massive tidal wave of cash and wealth that is being shifted towards exactly what NVIDIA is the best in the world at, and that is producing generative AI and empowering those structures. And so, NVIDIA at this point, I think, is the recipient of a massive tidal wave of cash. I think if we look at, it versus other semiconductor stocks, we do see AMD kind of creeping up in terms of web visit growth. That shows us that when NVIDIA runs out of inventory, or if NVIDIA gets too expensive for somebody, AMD is the next one that they look at, and AMD is starting to catch up in some way. So they're a good second place bet, I think, here. But when we look at NVIDIA, really the question isn't, will this company grow? I think what Wall Street's wrestling with is how fast will the company grow? And that's a pretty good position to be in. It's the type of position that we saw out of Amazon and Netflix in the early days of the multi-decade trends that propelled those stocks. I think NVIDIA's in the same spot here. If you're a short-term trader, yeah, you can make the argument that Wall Street got ahead of itself and that the growth rates are already priced in. But if you're looking long-term, there is still clearly one winner from a
I need 163
of cash that is coming into this space.
Andy, I wonder, because the numbers coming out of CapEx from all the big hyperscalers didn't drop off at all. Matter of fact, it increased, right? The question is there a Palantir moment in NVIDIA's future? Is there where they stop selling to hyperscalers and sell to everyone, every single person, right? Is there some moment that takes this stock back up to crazy, popularity levels again? Because it seems like just complacency breeds contempt on this name, and they're so used to it being good that they're bored with it. When the numbers keep coming in, they've got a Rubin chip sitting in the future waiting behind the Blackwell chip that they claim is sold out, and all the numbers just keep getting better. You've got good news out of, pulling back the Biden laws about who they can sell to and changing the H20 chip for China. There is some good news, but is there that moment coming, Andy? I guess that's what I'm asking.
Yeah, I think there is, but I think it's probably a little ways out. They have been absolutely inundated with orders, the kind of gold rush that, even the genius executors at NVIDIA, and I do think these are some of the best executive team potentially in the world, even they couldn't have seen coming what happened. And so they're playing catch up in terms of every product that they make sells out before they can produce it. They are very good at reinvesting in technology. They understand that they have to stay ahead. They've proven that over, well over a decade in terms of innovation. And so I think eventually this company is the best bet for a company that comes out with, like you said, that kind of mom and pop chip that allows every Apple laptop to be as powerful as the data centers that they're selling today. Is that 1 year, 2 years away? Probably not. It's probably 5 to 10 years away. But if you're going to pick one company that's going to be most likely to achieve something truly revolutionary and truly democratize these capabilities, you'd have to put your money on NVIDIA, not just because they're the leader right now, but because historically they have shown an absolutely impeccable approach to innovating and reinvesting the profits that they make in the next generation of chips and technology. I think they'll continue to do that.
Yeah, I want the Jetsons, and I think NVIDIA is going to be right in the mix there, if not leading the charge here, Andy. But you look at this on a longer term. I mean, NVIDIA's had a spectacular run at this point. Here's a 3-year chart. I mean, the stock was under $11, 2.5, 3 years ago at this point. So it's had a good run.
$11.
Valuations have come down as stocks pulled back about 24% from its all-time highs. Are investors missing out on this name right now,
yes.
Andy, or is this an opportunity according to your data?
Yeah, I think it really depends on your time frame. I think if your time frame is, 6 weeks or 6 months, then anything's possible. It's a highly volatile name. There's geopolitical reasons that investors may get in or out of the stock. I think if your time frame is 1 year, 3 years, 10 years, then every single day that the stock is on sale is an opportunity, and that's the way to look at it. And you just dollar cost average into one of the best companies in the best spaces with the best technology and best executive team in the world, and just buy it, put it away, and don't think about it. I think it's really just a matter of time frame. There's extreme volatility in this name, along with all of the Mag 7. We've seen that. That will likely continue for the foreseeable future. But long term, when you're an owner of the best assets in the world, you can sleep pretty easy at night just adding to your position.
Maybe it's Amazon from 20 years ago. Who knows, at this point. Apple from 20 years ago. All right, great stuff, great data as always, Andy. Have a great weekend.
You too, thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down NVIDIA. Kevin, as I mentioned, still in bear market territory here. They got earnings on the 28th, so we got to keep that in perspective. How do you want to look at this one from an example trade?
Yeah, you have to keep that in perspective because of the strikes you choose and the series that you choose, right? What you want to do is set yourself up to have this position ready for the earnings event. And here's how you would do that. Remember, May 28th, you said, Tom. What I'm doing, I'm going up to the June 6th expiration. So I'm going past the earnings date, and then I'm selling next week's, I'll start over. I'm buying the June 6th 117 call, so basically an at-the-money call, Tom. Then I'm going out and selling the May 16th, next Friday's 123, which is in line with the expected move of about $6. So 117, 123 call diagonal, right? Focusing on after earnings and then next week. And then what the plan would be is to extend duration one more week and then into the earnings event, Tom, and that would chip away. Now, here's a problem. This is a bit expensive, and for a $6 call diagonal, you're spending about $6.55. But if you think about it from a way that we teach it, which is you're going to be able to extend duration, chip away at that net debit, and that June 6th call is not going to lose its premium because of the earnings event. So buying the diagonal, Tom, past the earnings event, spending about, it was $6.55, now it's about $6.25, so it's less as the whole market is backed off a bit. But Tom, this is one you got to be a little careful. Like you've mentioned before, there's 2 break-evens on this trade.
Yeah, let's break this one down. June 6th, 28 days to expiration on that one. Buy the at-the-money 117 strike call. And then in the near term, May 16th options that expire in just 7 days, sell the 123 strike call. So a $6 wide bullish call diagonal, paying roughly, we've got $6.30 debit. If you pay $6.30, that's your risk, $630 per spread. On this one, anything above maybe 118 is going to be potential profitability on this one. But as Kevin mentioned, this is one of those trades where, hey, I have 3 opportunities to roll or adjust that short strike on the 123 strike call, creating credits. And remember, Kevin, I think one of the key takeaways with this one, yeah, you're paying more than just a little bit more than the width of this call diagonal. So you have 2 break-evens on this one. If it goes maybe above 145, 140, you're gonna start coming down, but maybe just 30 cents or so. But at the same time, you get to roll or adjust into that earnings option series on the 30th. That actually, you've got high implied volatility, so that should give you a decent credit as long as it's trading at or near 123, right?
Yes, and remember, you're long Vega. So that June 6th implied vol is probably going to creep a little higher as well with the earnings event. So it's not, implied volatility in those back options isn't going down. It may not go up substantially, but it's not going down either, Tom. So I think the vol will hold here, so you're not at risk of the Vega going down. But yeah, this is still a bullish trade that can be taken off if it reaches 123. But you can also extend duration and really chip away at that debit.
Yep. As you get closer to expiration over the next 7 days, maybe roll or adjust that if the market's open. You do have some assignment risk on that 123 strike call over the next week also, so keep that in mind. But the idea here is it grinds higher towards at or near that 123. That's when those roll or adjustment values start to expand in price. So if you look at the call diagonal there, in NVIDIA. Let's take a quick break here. When we come back, we're going to take a look at Boeing. The aircraft stock is at 10-month highs today.
Come on.
Amid new plane orders and a price target hike. Stick around.
Triple bottom here. Man, this is really not a good market for me today. I'm gonna start looking for a vacation. Maybe in July.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Boeing, let's get a quick market update. It's starting to weaken here a little bit. The S&P 500, the benchmark, now down 0.2%. Dow Industrials off nearly 200 points now, nearly 0.5%. NASDAQ 100 off nearly 0.2%. The Russell 2000 off 0.4%. So we're starting to weaken here in the afternoon, but it's been choppy trade. S&P 500 down about 0.6% so far this week, and you can see there from the heat map starting to turn a little bit more to the red.
It
We have
is.
some outliers. Tesla actually up over 4.5% today. So there's the markets. Let's get into a discussion about Boeing. Stocks had a good week. It's up over 4.4% on the week's view play board.
Excuse me.
Price target hike today. Let's bring in George Tillis, senior markets correspondent here. George, finally, we're
I
getting
got
some
hiccups
headline news. It's
on that
positive
sandwich.
for this stock that relies on headlines. And we're seeing some upside here for the stock.
Yeah, it's actually a pretty nice move for Boeing today, but it's actually a stock that's higher by close to 10% year to date. So obviously there's something going on with the stock. It's hitting you at least year to date highs.
Flights are cheap.
And you have to consider, what's going on negotiation wise with of course tariffs and exports, and Boeing is the single largest exporter of our country. So with that said, it's a negotiating tool the Trump administration is using. And effectively, I think Trump.
I can't believe flights are this cheap.
Not only because the F-47 program was allocated to Boeing, which is the next generation
darn it.
Air Force fighter jets, but at the same time, Trump is also talking about Boeing and the proudness of Boeing when it comes down to negotiations with other countries. So for what it's worth, it's a win for Boeing company. They did secure another contract with British Airways for 32 jets, a mix of 777s and 787s. These are long-haul flight jets worth about $13 billion. So it seems to be that, if countries want to negotiate with the United States, Boeing is going to be part of that negotiation. And I think, looking at the stock itself it's very telling. Like I said, year to date, it's up close to 10%. And they do still have about 6,300 unit backlog, which is still tremendous for this company, and their defense business as well, which is about 30% of the total sales. Seems to be in play as well, considering that the Department of Defense budgets will probably be reconciled with over $1 trillion in defense spending going forward. So that's still being ironed out in terms of all these debt ceiling negotiations and of course next year's fiscal budget. So that's another catalyst to certainly consider with this name.
George, this is a company that has you mentioned the backlog of orders, and the orders keep coming in because, whether you want to admit it or not for anyone, the 737 MAX is one of the safest, quietest, fuel-efficient planes out there, and that's why all these companies want one and are waiting patiently. Now, what Kelly Ortberg, remember, he's only been the CEO since August 8th. He's an engineering background. He lives now in Seattle, where the main hub is. They need to be able to increase production, which brings in more deliveries, more free cash flow, secures up the balance sheet on this name, George. As I think they're going to be a key player in trade deficit talks. If you have a trade deficit with the U.S. and you've got the Trump administration pressuring you, what easier way to do it than buy Boeing planes, right? They're tickets, and they balance out a trade deficit. So I think there's a lot of tailwind here for Boeing, George.
I agree with you, Kevin. And like I said, and you also mentioned, is Boeing is a premier manufacturer. I mean, you can see what's being manufactured. You can see the planes flying in other countries. So it's something that can be used as as political capital, but also as a negotiating tool for other countries. I mean, they're going to get a good product, and the United States is going to get what they want, which is essentially some capital account surplus or trade surplus, at least in aircraft positions. So I think the other thing is quality. The 737 is not going away in its current form. It's only going to be improved upon. And that's something to consider. And, Boeing is, and we talk about this company a lot, and this is a tough one to trade. One of the things you got to keep in mind is that, they do move, the analysts move their earnings estimates around quite often. And I did notice that the last time we talked about the stock, it was the earnings estimates for this year were negative $1.49. Now, they came in with a better than estimated earnings last quarter when they reported earnings about a month ago. They lost 49 cents versus over $1 estimated. Now the earnings are cut back to $1.73 in terms of losses this year, but they actually moved the earnings estimates forward or higher in 2026 to $4.18. So it seems to be that the analysts are starting to price in better outcomes, at the very least, moving into the back half of this year and next year. And look, the stock is moving higher this year. And even in the last 5 years, despite the volatility, it's still up over 50% in 5 years. So that's still a good return on investment from a shareholder standpoint, irrespective of the multiple challenges that the company's faced in the past 5 years.
Yeah, it's been choppy. Over the last 2 years, low of 113, high of 267. So it's been choppy. All right, great stuff as always. Thanks to George Tillis, Senior Markets Correspondent here, breaking that down. They got 30 orders for the 787 from IAG, British Airways. They're going to announce over 50 planes between Airbus and Boeing. China Airlines ordering 10 777s. UBS raised the price target. So seems like good headlines, Kevin. Finally, for once, Boeing's got a raft of positive headlines. So I looked at a strategy that if you think it's going to continue to move higher, grind higher, this takes advantage of it. So going out to that June 6th weekly cycle, so 28 days to expiration. So you got a month in this position. We're going to buy an unbalanced broken wing call butterfly here. We're going to buy the 190 call one time. We're going to sell 2 of the 205 strike calls, and then buy 1 of the 210 strike calls. So you're in essence in this strategy buying a $15 wide bullish call vertical, offsetting some of the cost by selling a $5 wide one with that same common 205 strike where you sold 2 options. Paying roughly about a 530 debit for it is what we got up there. It's trading closer to 570 right now. Stock has moved higher, but the debit you pay is going to be your risk on this trade. So if you pay 530, it's $530 in risk on this one. You break even 195.30 to the upside if you pay 530 on it. Kevin, pretty straightforward here, call butterfly, where you can take advantage of maybe that grind higher, but still offset some of your costs as opposed to maybe buying the vertical.
Come on, baby, we need you to break out.
It is a more complex trade because you're buying one vertical spread, you're selling another, but they're not equidistant, right? You're buying a $15 wide, selling a $5 wide, and that's what gives you that flat line that's above the profit line. Now, the risk on this trade is the debit paid because it is a directional play. You're long about almost 25 deltas on this trade, Tom. So you're buying basically at the money, selling 2 out of the monies, buying 1 more further out of the money, but it skews to the bullish side. As you know, the risk is always on a trade like this, debit paid, Tom.
Yep, and the max profitability on this, as we mentioned, is at or near that short strike where you sold 2 options on that. It'd be a max profitability of 970, which you're not going to get because the stock would have to pin right around that 205 strike. But I think one of the key things is when you unbalance a butterfly like this, you've only got that 1 break even. So if you pay 530, 195.30 to the upside, and even above 210, if you do get that maybe 2 standard deviation move where the stock just explodes to the upside, almost a double in profitability on that one, even if it does explode to the upside. But what you want on this is what is a grind up towards the 205 level over the next 4 weeks. So good look at the unbalanced call butterfly there in Boeing. All right, let's wrap up the show here. That's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Turn it.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Yeah.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast
Back to
series breaks
the
down
top part of that
investing
support
styles,
again
including growth, value, income,
on the
and more.
SPY.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
Take a left here, please. I'll be right back. I'm going to go put my laundry in.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
We just can't do it.
Schwab.
Schwab, a modern approach to wealth management.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome to Extra Investing. Happy Friday. Good afternoon. I'm Alex Coffey, and joining me today is Kevin Green, Senior Markets Correspondent for the Schwab Network. KG, as we take a look at where equity markets sit, I kind of pitched today as a bit of a sleepy day, but I think I'm underselling the sort of intraday chop that we've seen. It's been kind of action-packed. It's just been contained. What's your thoughts here halfway through the day?
Yeah, I would agree. It's been contained, maybe a little bit of light volatility when you're looking at market depth, which really means that orders really can move these markets one way or another. I would say it kind of looks a little bit heavy, though, to the downside, Alex, if you're kind of looking at the advanced to declining stocks. We started off fairly strong, especially with the market breadth, but we've been weakening ever since here. We only have a couple of sectors in the green so far, even though it doesn't seem like it's that much of a drawdown to the downside here. So we'd like to see some buyers maybe stepping in, try to get some opportunities going into the weekend, but once again, it just seems like it's really soft right now. It seems like we're right there on a ledge, and maybe we're trying to maybe explore more of the downside here, just given the kind of environment that we are in, and maybe we have a risk-off type of tone going into the weekend. But what do you think about these markets overall? What are you seeing in the price action?
Yeah, I think it makes sense. I guess if I build on what you're saying, I think that it's been a heavy day. Breadth isn't very strong. That said, there's just enough strength in the right places to kind of keep this relatively balanced. But I don't know how firm the rally you're seeing in like an Apple or an AMD or an Amazon really is today. If you do get another flush to the downside, I wouldn't be surprised to see some of these names that are green right now maybe join the party to the downside. That said, if you do see some of this volatility start to dry up, buyers step in and kind of establish some positions, it doesn't take much to get a lot of these currently red names green as well. So I would be shocked, I think, if we closed here, because I do think it is relatively fragile one way or another and ready to make a break. But all in all, bigger picture, you got to be impressed with the bulls and what they've been able to do. I don't think there's any way to really spin the last month as bearish, other than maybe in the context of the greater move itself, which is still, in my mind, a downtrending one, perhaps even a bear market. But it's been an impressive counter-trend rally over the last several weeks. What are your final thoughts before we get to some of these stock movers?
Yeah, I would agree with you. I think getting above that 5,700, 5,750 level on the S&P 500 would really kind of knock the bear thesis down pretty substantially without having any type of really weakening economic data over the next couple of months here. I agree with you. The price action seems like it's holding up. Hasn't been concentrated. You have seen market breadth taking place, and that's once again another good sign here for the bulls. Is it still a counter trend? I think it is. I mean, you can still consider it to be a counter trend, but this is one strong counter trend rally. And if it is, then unfortunately, I think the move down would be fairly aggressive. Just the technicals, especially when you're looking at the weekly charts and the longer dated charts, seems like it indicates that maybe a bottom has been forming here. Even a healthy pullback to the 5,400 level would still be technically good for this market. Maybe wash out some of the froth. Until we really try to, maybe attempt all-time highs by the end of this year.
Yeah, I think you can logically make a technical bearish, trend argument still, but you need to see some bearish movement sooner than later. Otherwise, I think it becomes harder and harder to argue that case as things just have healed. Like, it's hard to really make the case that they haven't. Volatility, much more normalized, low 20s. I think that more accurately reflects the uncertainty that's out there than, volatility in the 30s, 40s, 50s. But also, we're probably not in an environment where we're going to go back to, a 12 VIX anytime soon. So it feels pretty fairly priced. And then you look at where the market is, pretty mid-range for the year, maybe on the higher end of that range, but it's a big range. So you feel like you're taking risk regardless of what you establish here. So unless you got conviction or a long-term time horizon, maybe not the time to size up positions just yet until we find out, a little bit further where that next move is going to be. Let's get to some of these movers, though, all earnings related. KG, I'll give you the first crack at it. Trade Desk is one that we've talked about a lot over the years. Did so many things right for so long. Goes head-to-head with the companies like Meta and Alphabet. But they just surprised the street so dramatically to the downside last time around that was this just one of those situations where it was almost impossible for them to disappoint?
Yeah, I mean, I don't know if it was impossible. The last quarter that they reported was pretty bad, right? And that's why we saw that aggressive sell-off to the downside here. I think we had a fairly low bar, and then you have a little bit of optimism that ad spend, for the most part, is not really falling off a cliff. I think that was one of the narratives that we were seeing in the market because of the economic uncertainty, maybe slowing type of growth. Do we see a pullback in CapEx spend? Do we see a pullback in ad spend? That might have impacted them in the previous quarter. It seems like this quarter that's not the case. They actually did exceed the street's expectations for revenue as well as EPS. Operating margins look pretty healthy, going in the right direction, maybe seeing a bottoming there. Free cash flow looks fairly good, and their guidance was above the street's expectations when you're looking at adjusted EBITDA as well as the revenue guide. So looks like the business is holding up for now. This was also a pretty big short seller as well. You had a lot of positioning to the downside, structured positioning to the downside. So I think this is not only enthusiasm, maybe new buyers coming in, but also those shorts being squeezed out.
Let's talk Pinterest. I don't think it's too far removed from kind of the same marketplace of digital advertising. I've long said, Pinterest is an interesting name because I think their pitch to advertisers is a very good one. Their issue, different than many of their peers within this kind of greater social media space, is growing users and expanding its demographic reach.
Got a lot of flags.
To me, and I will get your thoughts. 80% of users outside the U.S., but only 20% of the revenue. Seems like a pretty big mismatch.
Yes, it is definitely a mismatch. You know what's also very, just the price.
New low on PLTR.
A really nice pop in the overnight session, but it has given a lot of this back. So maybe some of that is being rolled off here. But when you're looking at the revenue for the quarter did beat the street's expectations. Adjusted earnings per share came in a little bit light here. Monthly active users grew about 10% on a year-over-year basis. When you're looking at the U.S. and Canada, that grew around 4%, and the average revenue per user also grew about 5% on a year-over-year basis. But once again, maybe a little bit of a low bar. Now, Pinterest has been very volatile when it comes to its earnings, but they have been showing that artificial intelligence can be implemented within their platform as well. And I think that's where you're seeing maybe some of this, some of the bright side here, the ad revenue, the targeted spend that you're seeing from enterprises. And it seems like they're putting that this AI really to work to be really more specific as to who it is getting certain advertisements. It looks like it's working out for now. And I think the street was actually pretty excited about it.
Talk to me about Expedia. Obviously disappointing numbers, some commentary that I think aligned with what we've heard from the greater travel sector in recent weeks. That's weighing on sentiment, no doubt. But I look at this chart, and I know you're going to go through some of the numbers here with us as well, but it seems like buyers stepped in kind of where they had to keep this kind of bullish hope alive if you were bullish this stock.
Yeah, I mean, this is actually a pretty key area of support around that 150 level. If you kind of look at a daily chart, pretty much since April, we've had buyers really kind of stepping in once we violate those levels, and that's exactly what's happening here today. It seems like there might be maybe a bigger institutional buyer that finds value at this particular level, and why we are seeing a bounce to the upside here. Revenue did miss the street's expectations, coming in at $2.99 billion. Street was looking for $3.01 billion, so that was about a 3% growth on a year-over-year basis. The adjusted earnings per share estimate actually did beat, or the number did beat the estimates out there. But when you're kind of looking at the commentary, slower travel demand, obviously you're going to probably see some impacts for cross-border travel from the north as well as from the south to the south as well. And that is also potentially going to eat into margins. They mentioned that on the conference call, which is the reason why we saw that move to the downside. But the defending of 150 for this stock, I think, is actually pretty telling here, Alex, that some people may perceive some value here. We haven't seen a further breakdown, at least on an intraday basis. Maybe it can try to rally and recoup some of these losses.
Have we watched sort of peak vacation rental by owner? Are we switching back to traditional hotels now? I mean, I see their Q1 numbers say their Expedia brand room nights were up 7%, but they use the adjective modestly to describe Vrbo's performance. Airbnb's certainly been volatile. Has that whole desire to rent homes and Airbnb and everything like that hit kind of peak excitement, and we're on the downtrend now?
I think you have seen a little bit more of a resurgence of enthusiasm for hotel stays, right? You go somewhere and somebody takes care of everything for the most part for you. I will say, though, Vrbo has been a very tough business for Expedia. It hasn't really been a really shining spot for them, so it just seems like it's tough.
Oh, it's 1 o'clock, 10 Eastern time.
Really trying to right-size that business. It seems like there's also some operational inefficiencies with that business unit just as a whole here. But you are probably seeing a little bit of slowing. And once again, it's about travel here to the United States. What's actually very interesting, if you look at travel data just on an industry basis, Mexico is actually seeing a surge of travel. It's just here in the United States, you're seeing some pockets of weakness. And so are we maybe losing some of the luster post-COVID for these Airbnb style apartments and rentals, I think that might be the case. But I think you're seeing probably a little bit of a broader slowing of travel just in general.
Yeah, and if you are traveling and the budget's tight, maybe you use these buy now, pay later services to finance some of it. Although it doesn't seem that's happening at Affirm, despite the numbers that were kind of in line revenue-wise, not enough to keep the party going at Affirm. Under quite a bit of pressure here today, KG, down 13%. I know we were trying to break these numbers on market on close yesterday, but just how they were released was having a hard time parsing through them, but we got more of that picture now.
Yeah, it reminded me of Block or Square or XYZ, whatever company you want to call it these days, when they release earnings here. But when you look at the numbers, I would say that they're a little bit mixed. The commentary was light. The adjusted earnings per share did beat the street's expectations. They came in at a penny gain. She was looking for around a 3-cent loss. Revenue came in line with expectations, coming in at $783 million. That's around a 36% increase on a year-over-year basis. Gross merchandise volume did beat the street's expectations, but when you're kind of looking at the guidance moving forward, it did come up a little bit light. They had a revenue guide for fiscal year 2025, midpoint. Their guidance moving forward, midpoint was sitting at around $830 million. She was looking for $841 million, and then the forecast, depending on the estimates that you're looking at,
go make me another tea.
Lighter than the street's expectations. And then they talk about the potential credit risk. Now, they did make mention that they have done their own internal stress test in the event that they do see credit starting to widen out or deteriorate, and they do believe that they're going to be able to hold up. It might be a little bit more of around a 10% hit when it comes to their adjusted EBITDA if they do have a credit event here, but I think the market's getting a little bit concerned about the credit profile, and rightfully so. What is interesting, though, is their 0% interest loan product continues to see rapid adoption. And there's a lot of companies that might be going towards that method or that model here if we do get a slowdown. So keep your eyes out on that. I mean, once again, kind of risky, but it has been an attractive product offering for a firm to attract some of these bigger companies like an Apple and what have you in order to have access to their platform.
Yeah, and it does seem like a business that's really, really going to hinge on constant expansion of its loan growth. And so if it does start to have credit concerns and that starts going the other way, going to have a really, really hard time making the bullish case, at least during those moments for a company like Affirm. But ultimately, I don't think we're there yet. It's just sort of speculation on what the economy's trajectory may or may not be, and Affirm's role in that as we go forward. KG, we're going to take a short break. We'll catch back up with you in a couple minutes, but Rick Ducat's going to stop by. We're going to look at some of the winners and losers of the week, particularly Disney and Alphabet, two stocks going opposite directions. We'll chart and trade that next.
Golly, man, sucker. This is not a chance today. The way this market's working. It ain't breaking. Yep. About time that you break. Let's do it now.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk Our team of passionate traders ready to tackle your trading questions, no matter how complex.
Yes, it is.
24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
We're back at a buck.
Welcome back. It's time to Chart and Trade. Chart Master time. Rick Ducat, lead market technician for the Schwab Network, here to help out. Looking at some winners, looking at some losers. Well, one winner, one loser. Let's talk. Starting with Disney for the week, one of the better performers. The stock roaring to the upside after earnings. Did it do enough to change this technical malaise that it's been in?
Well, maybe would be my one-word answer here. And the reason I say that is because we've had a nice, sharp rally here to the upside that took us above all of our moving averages. But the thing that really makes me say, possibly it is the start of something new here, is that we have pushed above this green horizontal line. You see kind of this was a key high point for price a few times. It was where the site of where we had a large gap up around that area after earnings. And now we have made our way back above that point, for now holding on above this level near 104. So we are up about 32% or so off of our low points that we had here during our tariff news related turbulence around 80. But now we can see that price has also pushed into RSI is pushed into the overbought area. So momentum is entering that threshold above 70, giving us a further bullish signal to consider here. The next stop potentially could be these lows that we established after we had our gap to the upside and then our subsequent breakdown. 108.40 is where that pink red line comes in here.
So obviously, perhaps too early to clarify for sure if we've seen a transition of trend, but a lot of things starting to improve dramatically. What else do we got here when we're looking at some levels? You obviously mentioned that green dash line. I know you like to look at volume as well. Looks like we were able to cut through that point of control with relative ease.
Yes, and by another measure, what you're saying is a good observation, because we passed through our heavy volume area. We also broke above our blue linear regression line, our line of best fit there. So we had two important metrics that we crossed above, and now that gives us a supportive area to watch. 100 to about 103 or so includes those two things that I just mentioned, as well as our purple 252-day exponential moving average, our longest term and most significant of our three moving averages on our chart today. So we can see now that price is entering within this rather small volume node here near about 106, but volume starts to pick up once again near 112, happens to line up with that +1 standard deviation channel. And one quick further point here as we look at our 5-year chart. Heavy volume near the low end of a long-term chart suggests, oftentimes is interpreted that it's a potential significant low point here. So we had a big rush of trading at depressed levels. Simply put, a lot of people think that means a bottom is in for now.
Yeah, and one thing too is I think we remember these 5 years, and we remember this run up to 200 some a share and the subsequent fall, and think that there was this dramatic setback for Disney. But the reality is the run up and the fall, they were the anomalies. This has been a stock that's sort of been in this 90 to 120 level my entire career. It's a blue chip, income generating, kind of consistent stock. It's not a stock that goes from 100 to 200 typically. This was atypical around the launch of Disney Plus and then COVID uncertainties and things. So sometimes putting that in perspective, seeing those longer term charts, I think does do it some justice. But we're looking at an example trade real quick in Disney. Obviously been a loser in the longer term, but a big winner this week when we take a look at it. And we're looking for that to continue. Rick gave us the reasons why this could be something more sustainable, breaking through some of those key levels, seeing some of that momentum pick up in the favor of the bulls, looking at a bullish strategy, buying a call vertical, all of it going out to the end of the month here. So
ugly day.
30th. No earnings
market
which we just had them.
where I like to trade.
$4 wide spread. $2 in debit means 2 to 2 or 1 to 1 risk reward. Risking 200, max profits 200, 106 the break even. Need the stock to inch its way higher, get above 108 and stay there by the end of the month. Now we shift gears and we take a look at Alphabet, which longer term, beautiful looking chart, big time winner, one of the Magnificent Seven, obviously struggling alongside a lot of big tech so far this year, but notably struggling this week as some news headlines really weighing on the stock.
Yeah, it's a bit of I guess a reset.
End-of-day bounce. I'm looking for one.
Picture. But, we made new 52-week lows recently on our yearly chart here. We took out these previous lows that seemed very significant at that time. That August 5th downfall there we saw, or excuse me, post after August 5th, we had another significant low that we took out this time here and hit 140.53. Now we have moved below our 3 moving averages that we follow. We can see that the orange 63-day was a resistance point a few times here during recent sessions. So that is maybe perhaps one point to keep an eye on. If we can push back above our medium length moving average here, that would be a more positive sign for the bulls. But see as well, very heavy volume on this large red candle we saw the other day that brought us back down to our channel. We held on at our channel, old resistance became new support here, but really perhaps a bit of a disappointment.
That thing go
couldn't
to
stay above
65
those old highs.
cents.
We didn't take out the recent highs near 170 as well.
Yeah, this seems like one that, depending on your time frame, very different pictures. Maybe longer term, sort of sideways on that 1 year, kind of down over the last 3 months. But you could make the argument, even with that pullback this week, it's still sort of in that short-term recovery mode. But did it change enough just how dramatically it did sell off this week to kind of put ammunition, I guess, or the balance back to the bears?
Well, actually, what catches my eye is that we did have this rather small volume node here, but that's about where price held on. Price made a higher low, a series of higher lows if you want to go back even further here. And so we're kind of hanging on at a key support
125
area here
now.
that roughly, matched
Look at
up
that.
with kind of this area as well. So
It dipped down to 65 cents and then it ends up at 125. I don't think I would have had time to grab that 65, but we want it to break the 200 now. It has to break the 200. Seems like it's getting power. It's got 125. Here's my desk 10 years ago.
Happy Friday, and I agree. I think an important name and an important story today, which is the reports coming out of Reuters that the company plans to release a downgraded version of their H20 AI chip for distribution to China by July. This, of course, is just another push for NVIDIA to try to keep that exposure in the competitive and growing AI market outside the U.S. At the same time, the company has to continue to fall in line with those U.S. restrictions on the level of advanced chips that they're shipping. The U.S., of course, restricted exports on NVIDIA's most sophisticated chips back in 2022. Concerns over military applications. The H20 was introduced and exported in 2023. And the H20 chip is not as fast as a lot of the AI model chips that NVIDIA has, but it's very competitive. And one of the things it does very well is help those AI models create those answers. U.S. officials told NVIDIA last month that the product would require an export license. It's unclear how many, if any, of those licenses the U.S. will give out. NVIDIA's CEO, we know, has visited Beijing since then, probably to try to really show that growth importance to the company in China. The changes from the original H20 are probably going to include things like a reduced memory capacity. Big name companies, Baba, Tencent, ByteDance, all big names that order these H20 chips, and it's worth noting. China accounted for almost 13% of NVIDIA's total sales last year, so a very important revenue stream.
Raw sugar.
No doubt about it. And I'm hearing that story. It sounds like a positive update, but you look at NVIDIA, and it didn't even really move that much on the news headline, and it's been weak all morning into the afternoon. So a little bit of weakness, but of course we know NVIDIA jumped quite a bit earlier in the week on some of those AI diffusion rule headlines that came out. Jeff Pierce, you have a great weekend, and thanks as always for stopping by. The latest in NVIDIA and this new potentially downgraded H20 chip available for China. Rejoining us, Kevin Green, Senior Markets Correspondent for the Schwab Network. KG, I want to get your thoughts. I mean, this is, in my mind, this is the most important name in the markets now. Heavily traded, quite a bit of volatility, huge market cap. It's got the recipe for interest.
It does, but it also has the murky outlook when it comes to the regulatory nature of shipping these chips, and I think that's just one of the big headwinds that it has in the near term. And yes, they make this adjustment to the H20, but who's to say that the U.S. government's not going to put further restrictions on this new model out there? We have seen these kind of red lines being crossed several different times, and unfortunately, that's going to have an impact when it comes to the company's sales. When you look at NVIDIA, though, you talked about the price action, at least for today, being a little bit weak. But let's pull it back. I mean, the price action, if you're looking at the weekly chart, has looked pretty well, but it's been a little bit more disjointed when you're looking at the daily. But the weekly is actually very interesting because we have this like bull
got a volume spike here on the SPY.
We're in a bullish uptrend over the last 3 years. We do have a consolidation pattern taking place. It traded down to as low as $80, and now we're hitting the upper end of that channel. Now, the big question is, are we going to see a breakout to the upside? That breakout probably would be confirmed at that 120, 121 level. And the next area of resistance is going to be 124. But if you look at the daily chart, I think the daily chart actually is very interesting as well, because there is some gaps to the downside that could potentially be filled here, Alex. And I think that's going to be the key thing to really kind of focus on. You'll notice this gap that we had back basically in April 30th all the way to May 1st. We had a decent little gap sitting at around that 110 level. That gap basically went from 109.5 up to around 111.5. And so that's an area that kind of focus on here. And then when you look at the price action over the last 2 weeks, outside of the price action we saw 2 days ago because of this diffusion rule, it hasn't been really that great. So it still seems like this is a little bit heavy when you're looking at the price action just alone here. And there might be a pullback opportunity, especially hitting this resistance level that we talked about on the longer term time frame.
Yeah, so how does one, I guess, look at those two almost opposing technical pictures and kind of put them together? Is it important to look at a time frame that is closer to the time frame of the type of trade or investment you're going to make? Because, I mean, this multi-year bull flag that you're talking about here, KG, I mean, if that does break out, we might be, I guess if we're just looking at technicals, we'd be talking about a multi-year breakout, would we not?
Yeah, and that's what the technicals
Yeah.
are fine, but what's really hard is trying to time a breakout of a flag pattern, no matter if it's a bullish one or a bearish.
1, 2, 3.
So that is where you kind of have
Mr.
to do that
Green.
balance, not only just the technicals, but also looking at the price action on the daily chart, which once again kind of looks really weak compared to some of its Mag 7 peers. And then you have the perceived risk that is out there. So it depends on the time frame, but if you're looking for a small pullback, if you're looking for that gap to the downside to be filled, there's opportunities to really do so. And so I actually have a trade example here that's looking for a pullback. And this is a very short-term trade, Alex. It's out of the money, so we have to be mindful of that. But this is actually May 16th, 110 puts. Buying one of those for a 70-cent debit. So the max loss in this trade is going to be $70. Max profit is up to $10,930. That's if the stock goes to zero by next week with a break-even point of $109.30. This trade is really trying to capitalize on any type of meaningful pullback and any type of spike
I got it.
volatility that could actually juice this.
He might not see it,
We
but
do
I
have
see
some
it.
risk over the weekend when it comes to the China-U.S. tariff talk.
Past the
and
50-day.
literally sitting at the heart of that in a lot of ways here. So this is really trying to target for a move to the downside. A pullback doesn't mean that the stock has to get down to 110, but you would like to see an aggressive move back to the downside here over the next couple of trading sessions in order for this trade to be profitable. But be mindful that it is out of the money and the theta
That's
decay
4 months.
will increase every single day that we do not see a drop to the downside. So this is kind of one of those really speculative trades for a downside move, but it seems like the downside, even if you look out another week or even 2 weeks when you're looking at the options chain here, Alex, seems like downside potential is being underpriced given the environment that we're kind of in when it comes to this thing.
Okay, so this is a fun one. This is a little bit different than some of the examples we often talk about, and I think that the picture alone that we just had on the screen, that risk profile, that's a very alluring one. You're telling me I can do a strategy that can pay out tens of thousands of dollars and I have $70 in risk, okay? So talk to me about this a little bit more. Obviously, I don't think anybody thinks NVIDIA is going to be zero by the end of next week. So we'll chop off that max profit. But still, the idea that you can really control this risk, reflect a directional move, and in some ways have undefined profitability, so be this the long put or the long call, you understand why this is a strategy so many cling to. Talk to me about the realities of it and the management of it, because you see that break even at 109.30, that's at expiration. I think a lot of traders who do this type of a strategy don't actually intend to carry these all the way to expiration.
Yeah, exactly. What you're really trying to do is just get the move in the direction of the trade, not really for the stock to actually hit $110 by the end of next week. But if you have a pullback, let's say $2, $3 over the next couple of trading sessions, say by Tuesday, this will get closer and closer to the money. That will also probably spike implied volatility. Implied volatility increasing actually then has this premiums increasing across the board when you're looking at options. You're looking for a very quick and swift move to the downside in order for this trade to be profitable, but you have to understand the risk. Out of the money, kind of really far out of the money, right? $6 out of the money at this point. You're going to have theta decay. So each and every day, if the stock stays where it is right now, this trade will lose money up until expiration. So there's risk rewards with every particular trade. This one is trying to capture a low IV type of environment, an area of resistance when you're looking at the technicals on the weekly, a gap to the downside when you're looking at the daily chart, perceived over the weekend risk when it comes to China and the tariff policy here, and you're hoping that that may go wrong, and maybe we do see an equity pullback.
That's not funny.
The stock's going to do the same, and if that happens on a Monday or Tuesday, let's say $2, $3 to the downside, or even $2 to the downside, this would actually would actually be profitable, and you might be looking more towards a 1-to-1 or even a 2-to-1 risk reward ratio. So not keeping the trade on, trying to take a profit once it hits a certain threshold, say $1 or $1.20 or $1.40, whatever that threshold is. Try to capture those gains and look for the next trade.
Here's the last question for you with that, is it's sort of dynamic, I imagine, too. If it happens in 10 minutes from when you put the trade on, maybe that profit target's a little bit smaller. And if it's, you've been in the trade a little bit longer, maybe you look for a little bit more. Is that how it works for you, or is it a number in mind for you that you're looking to make when you put these trades on, and you're kind of married to that idea?
Well, this one would be like really like a 50% take profit level. So let's say we do have an aggressive pullback to the downside here today or right now. A 50% move in premium would be something that would catch my eye as far as trying to take profits and look for another trade. And this is a trade too, Alex. We have to be mindful. This is a trade that you're speculating on this, going into it thinking that you will lose the full premium. It's very highly speculative. So this is not something that you go all in on your portfolio in. This is something that hey, I can put $70 to work. Let's see what happens. Maybe I get a 2x trade or 1x trade on this. Take my profits and move.
And maybe the actual gain is that small exposure. It's all relative, right? Maybe this is a big trade to someone else, but it's a small negligible trade to someone else. But depending on where it falls, if you put on a small trade, maybe it quells that feeling of FOMO, of that needing to be involved, and it allows you to kind of be involved in a risk-defined, controlled way, and quell some of those feelings, as we know the movement in the market can bring up. KG, appreciate it as always. Really enjoy having these conversations and picking his brain. We're going to take a short break. When I get back, Diane King Hall is going to join me with the latest on the tariff headlines. There are always some, so she'll have the latest right after this, as well as the state of streaming with our guests. We'll be right back.
Let's break the 200.
Whether you're an experienced investor or just getting started,
We finally hit it.
Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more.
Being in the now.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York
Nicole,
Stock Exchange. Catch me
I
on
love
the
you.
Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to welcome in Diane King Hall for the latest on
Where's Jenny?
the tariff and the news items surrounding trade policy. Diane, there's always headlines, so I'll give you the floor. Let us know what's going on.
Yeah, look, and a lot of these headlines now come on social media, Alex. It's a new day and age where we kind of get the information from there. You had President Trump posting on Truth Social earlier today about potentially lowering tariffs on China. He floated the number of 80%, but many still see that as essentially the equivalent of an embargo, and that's what Treasury Secretary Scott Bessent said the current level of 145% amounts to. So essentially what that messaging sends is a proposal to lower those tariffs on China to 80% down from that 145%, signaling a possible de-escalation. And we know that that's what Bessent has said going into this meeting. That is the expectation, moving towards a de-escalation. Obviously, that's still significantly higher than many tariffs on other countries that the U.S. has hit with tariffs, and much higher than where we know this new U.S.-UK deal at 10%, seen as the new baseline. His post on Truth Social also suggests optimism from President Trump. There was a post saying many trade deals in the hopper, all good, great ones. So
Yeah, well, let's do something about it.
Optimism heading into this weekend.
Zero tariffs.
The Treasury Secretary Scott Bessent, along with U.S. Trade Rep Jamison Greer, are headed to Switzerland.
I'm just almost too far out of the money for these things to amount to much.
China's Vice Premier leading the conversation on that side, but many industry watchers, analysts that I talk to are not expecting a concrete deal to come out of this. Obviously, this is essentially just the first stage of official talks. When Bessent had even said in an interview on
We broke the 200 EMA now.
this is the beginning stages. We know this is going to take some time, but we have also seen the pressure on both sides of the two
Let's go.
economies as a result of this. Essentially,
You're just too far out of the money.
between the two, there's been pressure in the U.S., pressure on China. China put out their latest export numbers, and you saw a dramatic drop-off in April to the U.S., down more than 20%. At the same time, you can see that they've been diversifying here in the U.S. As we know, GDP contracted in the first quarter, so there is some pressure on both sides. So both sides do, really, it's clear, need to come to the table and are coming to the table. And the framework that it's being looked at as is this is essentially establishing some stability and, taking down some of the heat in the rhetoric that we hear from both sides.
Rhetoric?
It's kind of symbolic, more narrative, and more like sort of a good faith. Like, look, we're working towards a deal. We're working towards negotiation. But the
Look at my
reality
towels.
is 8%, 140. It has the same impact. It makes it very difficult to do business. So,
But if I go check them now, they're not done yet. They say they're done.
progress, hopefully coming sooner than later. Diane King Hall with the latest, and I'm sure they'll be
Diane King Hall. That's a cool name.
Weekend. As we shift gears, we want to welcome in Stephen Kent, Media Director for Consumer Choice Center, to help us set up the state of these streaming stocks. So we heard from Disney earlier this week. Now, a lot of Disney's excitement, I think, was more of its parks and things, but even Disney Plus, I think, had subscriber growth, so that had to be a decent sign. What's your general synopsis of the state of this particular sector at the moment?
Well, my general take is that a 7% boost for the last quarter, we're talking about $23 billion, is nothing to balk at. This is a good time, particularly to be Disney. They've had a really strong showing on the streaming platform just in the past couple of months. A really great reception among fans of Marvel, of the new Daredevil series, and Moana 2 hit in the last quarter, which has, done very well for Disney. They're probably going to continue their march since, I'm a big Star Wars guy, and the new show Andor has been doing so well in bringing people back into the fold at Disney Plus. So it's a good time to be the House of Mouse.
As we look at these names, it's been, at least for a while, at least from a consumer standpoint, seemingly you're subscribed to Netflix, and what else do you subscribe to? Is it still Netflix and everybody else?
I would say that it is still Netflix and everybody else. I don't think that paradigm has changed much at all. After that, you just try to pick what kind of content that you prefer the most, and there's a very unique ecosystem on Paramount Plus, and there's a very unique set of offerings over on HBO Max. So I think it really depends on.
We're at $1.
In the future, when we look at
We've had such a good move, and they've hardly moved at all.
Things like Netflix have had in the recent year, it seems to be live events and sports is sort of this next kind of bastion of content that these companies are trying to break into if they weren't already associated with them. You saw it with Alphabet and YouTube TV buying Sunday NFL Ticket from DirecTV. We saw the, Christmas related NFL specials with Netflix. If these type of companies continue to, Amazon with NFL and Sunday, they continue to make efforts into that, what do these legacy companies still have that is bringing value to shareholders?
Well, they always have popular and reliable IP. That's something that Disney always has to go back to the well on. But, to your last segment's topic, this whole subject of film tariffs coming from the Trump administration, the mere threat of it is incredibly intimidating for anybody backing any of these stocks, and it's got to make companies like Disney, like Netflix, shake a little bit in their boots. There's been a lot of efforts to feed the streaming machine by taking film shoots abroad. 75% of Netflix catalog is technically foreign produced, and one of their big pieces of entertainment offerings before they started pivoting towards live entertainment was South Korean film and television.
They keep getting new highs for
that particular streaming platform because Americans happen to love it. And so a lot of them are going to be looking at their cost of production, how they relate to union policies.
Now I'm at my resistance.
Streaming anymore if John Voight actually gets his way in pushing Donald Trump towards pursuing these tariffs, which again, we don't really even know how they would be implemented because film and TV is still in the product of a service and less of a product that is a consumer good.
Yeah, exactly. And I think that the initial response kind of reflected maybe how it might try to work, which was you saw Netflix see a little bit more of an impact than maybe a Disney, where maybe Netflix is perceived, and correct me if I'm wrong, to be buying the finished product from maybe a South Korean producer, where Disney is largely producing content, they just might be doing it in other jurisdictions. Am I wrong with that read-through? Or is Netflix truly producing these things, just maybe producing them with some of these other, international partners?
No, I think you're right, and it kind of goes back to John Voight's set of proposals that he offered to the president, which, the FCC might actually take up this idea that he's proposed of returning to FinCEN rules, which would basically use the FCC to stop streaming companies or TV networks from owning the content on their platforms. That's the model of streaming today. That's where we basically saw Netflix in an initial period of downturn when all of their competitors started taking their IP and moving it over to their platforms, like your Paramount, like your Disney. And this proposal from John Voight would take us back 40 years in terms of how we handle FinCEN policies, and it would make a dramatic difference for how the streaming platforms have shaped up their business in the past decade.
Yeah, what would that impact be? Like, let's talk Netflix. Obviously, Disney has its own IP and catalogs, and it monetizes them well beyond just its streaming platforms. But Netflix, I imagine that would weigh on margins tremendously. I mean, if they had to license every single thing on their platform as opposed to, produce it themselves, is that even viable?
I don't see how it is. I mean, this would absolutely crush this business and make it incredibly hard for it to grow and continue meeting consumer needs. I represent the Consumer Choice Center. We tend to favor an abundance agenda, and streaming and entertainment is absolutely in that category of something that we expect as consumers, an abundance of options and content. And studios have absolutely been able to do that by taking their film shoots to the UK, to Ireland, to Hungary. And now you've got the advocacy for state tax credits expanding to a MAGA tax credit for films, $7.8 billion of a federal tax credit that Gavin Newsom would like to see the federal government tack on top of his state tax credit in California to try and make it even cheaper. But all of these things are really going to accomplish nothing at the end of the day if the business of Hollywood is completely restricted by the business of unions.
Interesting times we live in as this is ever changing, and we'll see how it unfolds. Appreciate the insights and the clarity that we do have. Stephen Kent, Media Consumer Choice Center, with some thoughts on tariffs and its potential impact within the streaming and media sector broadly. Coming up next, under 30, we're going to talk Lyft post earnings with George Tillis. We'll get his thoughts as the ride-sharing stock makes a pretty nice jump here on this Friday.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the best way.
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest.
Carl's Way is the best way.
I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
She's a mean Asian.
Modern approach to wealth management.
Opportunities don't stop when the market
Yeah.
falls. So neither do we.
Jasmine tea's about the
Gives you
nastiest.
round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from
Nasty.
trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Next Gen Investing Under 30 time, looking at Lyft, making a nice sizable leap here on this Friday. George Tillis is here to help break down what's causing that movement post-earnings. Senior Markets Correspondent.
Good question, George.
Friday, George. Is this as simple as, hey, there was a plus sign ahead of earnings and they were expecting a negative one?
Yeah, there's a couple of reasons, Alex. We talk about this a lot. If you look at the earnings per share estimates for the quarter, they were expected to lose a penny. they ended up making a penny. So, anytime we're around that break-even level on an adjusted basis, and you beat, you do see movement. But you have to keep the context in mind that earnings for the same quarter last year were around 15 cents. So that's over a 90% decline in earnings, irrespective of the fact that it was a beat. They did miss on the sales. They came in around 1.45 billion versus 1.47 billion. That was still higher by 13% year over year. So the beat right around that break even creates this volatile move. And then if you look at the underlying elements behind some of the aspects of the report, $750 million share buyback. So if you look at the balance sheet of the business, it's around 1.98 billion in cash. And that 750 million is certainly the amount of money they have available in cash to make share buybacks. But in the context of the market capitalization as of the close yesterday, around 5.5 billion, about 14% of the move today is a function of that share buyback. So that's why you see this, move, which is now over 20%. It's part of the earnings, which came in ahead of estimates from an adjusted standpoint, and then the share buyback was another primary catalyst, I suggest, for the additional movement we're seeing back to the upside. Now, some of the analysts, for instance, Oppenheimer, they've held the $17 price target on the stock. They have an outperform rating. Goldman Sachs now increased their target to $20. Part of that has to do with the fact that the earnings per share estimates are still rising on a forward basis. $1.12 is estimated for the full year this year, $1.39 next year. So the stock is trading at around 9 times next year's earnings. Those are improving metrics. Then the share buyback is another catalyst for the movement.
And it looks like that share buyback was one of the cited reasons activist hedge fund Engine Capital is calling off the guards a little bit here when it came to its activism within Lyft. So perhaps that can explain it, because I'm looking at this space right now with all that's going on with autonomous vehicles and where Lyft's role in this place is. Is it really the best time to be buying back your shares? You don't have better things to spend it on in this growth, business that ride sharing and autonomous vehicles are?
Well, that's a good question. I think Lyft has done, what they can do, particularly since their rideshare business is second to Uber. But effectively, you could make the case that Uber and Lyft really have a duopoly in rideshare. Now, Uber is moving into other areas like autonomous technologies. Uber Eats, Lyft is a sole, rideshare company. They have actually made other mobility, strides, and that includes electric bikes and e-scooters. So in essence, unless they, make an acquisition or become acquired, there's really not a lot they can do with the cash they have. And I can see why the hedge funds and the activists were all over this, because close to $2 billion in cash relative to $5.5 billion in market cap as of yesterday, that's a significant percent in cash that's just sitting there, earning a risk-free rate of return in Treasury. So I can see why the activists pushed for the share buyback, and they got what they wanted, and they got a nice return as a result.
Yeah, and it does seem like a name that could be an acquired type name. I've thought long maybe a Dash partnership could make sense. Maybe a Tesla comes in. Well, we actually had Mark Giorelli on from Morningstar earlier this week. He said Amazon was who he would think could step in. So I thought that was pretty interesting as well. So we'll ultimately see if any of that ever happens. That's all, just speculation. We have nothing to suggest that that's the case, but perhaps interesting. George Tillis, have a great weekend. Thanks as always for joining us here on Next Gen Investing. And the same to you, the viewer. Have a great weekend. We'll see you on Monday. The watch list up next.
SPY broke the VWAP at my resistance at 565.08.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn
There we
tips
go.
and
Let's
tricks
go.
to
We broke
navigate
it.
Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers.
Technical analysis with Washboardjim.
Every trading day at 8 a.m. Eastern, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
In the biz.
Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern
Schwab.
approach to wealth management.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange.
Sour grapes.
Breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
I'm going to be right back.
Schwab Bank
Go check my
Investor
laundry.
Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors
right
like
back.
you. With unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees.
Richard.
And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in
I'll be
one
right back.
convenient location. Moving funds between your accounts is easy. Cash moves
We
to your
broke that
brokerage account
resistance.
is
The
available
next one
in
here is
seconds. That means you can stop
566892.
waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Friday afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. We've had some back and forth action throughout this day, but we might be able to say we're up 12 of 14 trading days. The first 2 days were down, and next 2 days higher, and a lot of that is from the trade tariff talk, all that. 9 trillion bond maturity wall, that's something we're looking at. Investment opportunities in today's climate, we'll have that for you. We'll take a look at Canada's growth situation is struggling and how a zero capital gains tax could turn things around. And we'll explore small caps, looking at those, why still offering strong growth potential even in a volatile market. In our panel discussion, we'll break down Warner Brothers earnings and examine how streaming providers can navigate the current market challenges. In the meantime, we take a quick look at the markets. 2 hours left in the trading day, and here you go. Can the S&P squeeze out a gain by the closing bell and or for the week? 5,667 is where we stand. We're up 4 points, just up fractionally in percentage terms. The NASDAQ 100 up 14 points. The Dow Jones Industrial Average at 41,301, down 62 points. The Russell 2000 is down as well, just fractionally at 2025. Oil and gold are both higher. Gold's up $41 at 3,347, and oil's at $60.89 the barrel. The VIX is at 22.24. The 10-year bond yield 4.37%, and Bitcoin 103,620. That is up 1.8%. Great to see that for the crypto folks. So there you have it. That is what's going on in your big picture. And we take a look at the big picture with Adam Coons, Co-Chief Investment Officer at Winthrop Capital Management. Thank you for being here. So some of your thoughts, big picture here.
Yeah, I mean, it kind of feels like the market's getting a little bit exhausted with this narrative over the tariffs. So obviously we had a big week with the Fed. That turned out to kind of be a nothing burger, which is what we expected. No rate cuts, and really just this narrative around wait and see. And so I think that's going to be how markets are going to be reacting for the next several months. As you know, the Fed really isn't going to take any action. We'll see some things here and there from Trump on the tariff front, but probably going to be a lot of what we saw, coming out of Europe and the supposed deal that really seemed like there weren't a lot of changes or really concessions. That 10% tariff is still there. So I think that's going to be the market, at least through the rest of the summer.
I think a lot of folks are concerned at this point about what goes on with China talks this weekend. And, if they really get started, Scott Bessent's involved, and that certainly brings a vote of confidence from our country to show how serious we are. At the same time, it's unpredictable what could happen in this conversation.
Unpredictable.
It's a lot of history, right? I mean,
that's a great word.
You know what I mean? It's just there's so much history in this, so, this could be a wild card.
It could be. I mean, there's obviously a lot at stake as well. And so I think, a lot of people are talking about how the ports are either empty here or overflowing in China. And I think that really, states the case that, we're looking at, okay, what do tariffs mean for the U.S.? But I think we need to look at the other side of this and what do tariffs mean for China, and the fact that if we're not really seeing these imports come in, they have a lot more to lose right now.
Right.
And so, that could drive the narrative from Bessent and how these negotiations go, because what we've kind of felt out of the Trump administration is, having that heavy hand because they feel like they have the upper hand. And so one worry, as you're saying, is going into these talks, if they come in with that type of tone, that may not work well with China this time around.
Tell me about what you're looking for in the world of bonds. That's something on your mind.
It is, yeah. I mean, coming into this year, we definitely were taking a defensive tilt. Bonds, fixed income were a way to do that. And for us, when we're investing, we really look for places where what we say asymmetrical risk to reward, meaning, there were more rewards for the risk you were taking than that risk, right? So if the way I look at it for bonds is that there's three scenarios. Either interest rates stay exactly where they are, and I'm happy to collect, above 5% type yields in fixed income if nothing changes in interest rates. If you did see interest rates come down, which obviously we know that Trump is pushing for, that would lead to price appreciation of my bonds. The only scenario that doesn't work is if we see rates go dramatically higher, and we think that's a really low likelihood. So that's why we...
Okay, let's break this next resistance, and we'll hit the 200 maybe. If we can break 5,66892. Oh shit, they're at 70 cents. I don't know. I don't think I'll have a chance with this one.
It has been. It is extremely volatile.
Unless we get that big bounce at the end of the day, but man, they're so far out.
Similar index as the VIX, so it's the volatility on bonds.
If I should sell it.
Right.
And so,
Move up
yes,
and
'cause
try to
we got
get
below 4% there for a
better
moment.
deal.
You know, kind of at the beginning of the year.
This
And then
is
as these
horrible.
tariffs started to roll out, you saw
Last 2 days have been hard on
go
me.
much higher. So you're right. We have seen it tick higher.
So I've stayed in this all the way from the bottom. And we're still not getting anywhere with it. They're losing money. So I'm thinking about God. Last couple of days. I gotta look at something. I'm gonna clean this up. I'll have to do some different planning here because this ain't working out. I called something that in my video. Let me see if I did that. Much. Or we pull back and we hit that 9, right about where I got that alert set. So we're going to, or the 63. So we're going to use the body of that candle that we had last week, right around 550, 36, for a low possible support. If we hit the 550, I think that'll be a very strong buy. And we got to break that 21 on the weekly, and we'll take this to the daily time frame. We're at 556 this week. The daily would be breaking at 200, so I want to lower this 575 down to the 200 SMA. And we're going to remove that, and I'm going to put that right there at. We're $3 off. We're about 572. $2 off. Area. 250. If we can break 572.50, we'll go higher in this trade. If not, we'll consolidate back down, and that low support will be right around 555.82. And we could have, you know, a little consolidation, but we did break a major resistance level here, and then we'll show you what it is. It's that 200 EMA. So let's put a line right there, and if we can stay above that 260-212 area, I think that'd be a good catalyst to keep this thing bullish. Today we hit my bottom support. This coming week to SPY. We'll probably, like I said, we've had a good run from the bottom that I called. If you go back and watch my videos that I did, I went back about 3 weeks ago, support. And I tried to ring this out, and I didn't get to. I thought it was. I think, so you got to really pay close attention to this, and we get a small pullback. This is the SPX to the 63. This thing still stays bullish, right at 55.11.32, and that'll be a great buy signal, I think. We need to come back a little bit and consolidate. We've had a good run, and you don't want to get caught with your pants down on this one right here. You want to be ready for it, and if we do pull back to the body of that candle on the weekly, And you go back and you look on the weekly and see You what didn't come last close. week's body was on that candle, and that could be a solid support to run this back up for a double top breakout. So that's SPX. And we got a resistance level to break right here at the top of the body of that candle right there at 5709.35. And like I said during this video, it ain't going to take no time for us to get back up and run up and hit those resistance levels. And we closed at that 21. So this is very important resistance level. We broke past it. All of them. All of them. QQQ broke past it a little bit. But every one of these is at a resistance level. And they were oversold. And the fat cats have been totally wrong about this here tariff deal and this recession crap. So don't get too hyped up with CNBC. Them dogs on there are trying to rip you off. Now look at the volume spike here on the SPY. See that? That's huge. So we get another big volume spike, that means we're going to have a breakout on this stock. So let's go ahead and look at the watch list. But let's take this to the 1 hour or to the daily just to see if I can find a pivot point on the daily here. And it'll probably be that 9. And we're going to go with the body of that candle right there for the low possible support to keep this thing bullish. And that's 55.65.33.
55.65.
So one good red day this week is going to be a very strong buy signal, if we get it.
We're close twice.
But for right now, we're at that 21 here, even on the weekly. So let's bring this to the daily. Where are you? Right there. Now this thing could run up easily and hit that 200 for a hard resistance. Once we pass the 200 on the daily, this becomes very strong resistance level.
So we didn't break resistance.
That's at 57.47.42 area. So we're close to that resistance. So remember, jot that on paper. 57.42, 47.42. 57.47.42 resistance. And we could shoot up to the next resistance idea. But that's going to be your hard resistance to break. That's why I'm looking for a consolidation. And the pivot point is going to be right around 56.40 area. 56.39, 55, somewhere in that area. 56.39.55 keeps this thing bullish. And that's a $40 drop. So pay close attention to this coming week. And that'll be Wednesday. We'll find out what Powell has to say. But the earnings have been good, in my opinion. The only thing bad about the earnings is these CEOs don't have enough guts to call out a guidance. And I think that's disgusting and disrespectful to the traders, because they don't know what the hell they're doing, for one thing. And this is the best time to really focus on the market, because what Donald Trump is doing is making it open.
No, I didn't do too
for you
well.
to become real rich here in the next couple of years. He's more bullish president when it comes to business than any other president we've had. Now, the fat cats, they like that free taxpayer money coming to them. They're going to have to come to coalition that they're going to have to spend some of their money. And they want that stock price to go up to be able to do that. So let's get on looking at the watch list. Now, I'm going to make this short and sweet.
No,
So
I
I'm just
didn't
gonna go
know. I
through-
made it for an hour. Well, the last 2 days ain't been my best. I've been green. But this trade here is going to cut me back if I don't get out of it okay. Right now it's at 50. It's just not going to, it ain't going to have no chance. Unless I load up a ton of stocks. I'm too far out now. So, change of plans. I'm crying about the SPX. I ain't in nothing besides that, so I'm gonna get. I'm just gonna wait until the end of the day and make a big old, try to make my 1,000 back. That sucks.
One of us is made a gross error.
Yeah, cricket's all right. Yep. I agree. This will be my fourth losing trade this year. That ain't too bad, but still they've been big. Okay, well, let me readjust. I'm going to still hold this, just win or lose it. And I'm going to move up to this 56.75s. Or the 56.70s. Yeah, it should. It's a real tough day for me. I didn't think it was going to be this kind of like this, but I knew it was Friday. I said it yesterday. I said, be careful Friday. But you'd almost think that we'll get some good news over the weekend. I was hoping we'd get something good out of the meeting with China. But it's not going to be, it's going to just be an understanding meeting. This is what we got to agree on, and then we'll work on it. So we'll stop the tariffs, we'll cut them in half, then we'll work out some kind of deal, and then we'll cut them quite a bit. Yeah, you gotta love it. This bald-headed guy said he was a market maker. I'd like to get some of his inside scoop. You know he's got some secrets out there.
Higher inflation because oil.
Francisca says she'll be back in 30 minutes. What are you going to do, honey? You going to make some lemonade? You gonna go pick up the kids? Oh, well, the kid naps. Ah, very good. Soap opera. My mom used to watch the soap operas. You don't get no more reality than you get right here with me. Did you know I'd like to paint? I'm going to put one of my paintings in the room. One of my favorite ones. Let me see here. Oh yeah. Here's one that I did. This one here. Watch your balloons blow away.
I cannot accept that course of action.
You will accept it.
Nothing for you.
You'll accept what I tell you to accept.
You're pushing your luck, little man.
I'm laughing too.
Let's start with just a U.S. market perspective. So
Today's cleavage day, and I did not have a good day, honey.
And look, it's a pleasure meeting you, and thank you for having me on the call. So look, just overall, the obvious, gorilla in the room really is tariff wars, right? And so there's going to be a significant amount of market volatility on a go-forward basis until that gets resolved. And I think, part of the education that maybe Canada has done a poor job of is to educate, sort of American citizens and the American public in general of Canada's importance to the U.S. So, if you look at...
Tesla broke 300 today. That's a big deal.
You have to break that bucket up into two. You have to look at, who's your customers and who are your vendors, right? And so if you look at it from the perspective of, who buys American products, Canada is by far your largest consumer. Canada buys more American goods than China and the UK and Germany combined,
right?
Okay.
And so there is a very
I'm thinking about doing this
linear
again.
relationship there. So, what's good for the U.S. tends to be good for Canada. What's good for Canada tends to be good for the U.S. And so until, that solution comes to a resolution somehow.
Why investors shy from Canadian growth?
Long-term decisions. And I think, everybody's waiting on that. And because of that, I think there has been a significant, hesitancy to
Another half hour.
In growth stories, and in some ways even in American growth stories, just because we don't know what direction everybody's going in. Right?
Because there's no growth in Canada. Exactly. They're socialist.
Canada, and what seems to be a better relationship between Mark Carney and Donald Trump, hopefully we can get that to a resolution much sooner than anticipated, right?
Yeah, I mean, a lot of folks, when they look to invest outside the United States, you're saying Canada could be a place, and if the tax situation improved or the levies were lifted or something, there could be a lot of startups or a lot of potential for investors there?
There could be, and so that's already happened. So capital gains taxes have already come down. Right now, we have a 50% capital gains exemption tax, which means if you make $100 in capital gains, only 50% of that gets taxed, right? So you're already getting a bit of a benefit. The hope is that we can get it all the way down to zero. That was a lot of discussions of that during the election, and the whole idea of capital gains as a taxation is sort of a foolish tax, right? So if you look at Canada in general, and probably the same thing for the U.S., capital gains tax makes up about 3% of total taxation. But what it ends up being is a gate to limit capital from coming into the country. Like, nobody wants to invest in something, take the risk of investing in something, and if you make money, well, the government takes a big piece of it, right? And so, getting rid of that tax is probably the single best thing Canada can do, and probably a lot of other countries can do.
No, that's right. No reason to force a trade, Jimmy.
This new administration,
the 56, 70s, I'm watching.
Business friendly, will go down that path.
So you're talking about Canada a lot because you're concerned about our own GDP here at home and feel that if things were better with Canada, things would be better for us, I presume. I mean, because Canada's not our #1 investment place. U.S. investors don't wake up and say, hey, I can't wait to invest in Canada today. You know what I mean? So, they're looking at Chinese stocks, they're looking at Europe, they're looking at Japan, they're looking at India. So U.S. investors don't wake up and say, I want to invest in Canada today. So, maybe Canada Goose or something, but I'm not even being facetious. I'm just being the opportunity for investment. There's not a ton of ETFs that go to Canada, but you're looking at it more on the economy side of things, that we're one, and things could flow better, and that ultimately will help U.S. investors here at home.
Right.
That's how I'm taking it, right?
Well, no, the way you want to think about it is because we're your single largest consumer, because we buy most of your goods, at the end of the day, we're the ones that basically help create.
Okay, get ready.
Jobs, right? Because American companies are
I'm going for it.
Canada. We're buying those goods, so you're getting those as revenue.
The 56, 70s at $3.
You're using revenues to effectively employ.
Should have got 270, but
good wages in the U.S. And the U.S. is still a consumer-driven economy, which means the richer the U.S. is, the more money that gets spent on things, right?
This is an economy story that you're giving me, and I appreciate it, and I recognize it, and I
appreciate you, honey.
I also want to get from you, and I thank you for that. I also want to get
You're welcome.
from you a key investment story today. What if someone asks me today and said, I spoke to Jay Bala, I saw you had him on. What did he say I should invest in? What should I do with my money today?
Just give it to me.
Sure, that's a great question, and so we do get that question a lot. And and what we always have said is, look, in periods of volatility like this, and we think the volatility will continue, these are the times where
I might have
want to take a step back,
stop doing my beach trades for a bit,
and just go through your basic checklist, right? Do you have exposure to the 3 basic asset classes? Do you have exposure to equities, to fixed income, and alternative investments, right? The 60-40 model it's evolving. It's not dead yet, but it is evolving and it's changing, and alternatives is becoming a very serious component of that. And people need to start looking into it if they're not already. And it's one of those segments that it's a bit difficult, and so we always advise people.
That little thing in her ear, she hears me.
Some advice, even if you are a do-it-yourself investor, to effectively outsource your alt sleeve. But because of that, because it is a non-correlated asset class, and because it's a very large market at this point, it makes a lot of sense for people to start integrating that as part of their portfolio, particularly during times of volatility like this, because it helps dampen that volatility.
Right, understood. So instead of having stocks and bonds, make sure you have some alt investments in there. In fact, saying that they should become a core holding, not just a side bet or a side thought, right?
There'll be peace.
Yeah, understood. At this point,
The
now, we see
valley
this volatility in
for
this market at home.
me.
Do you think that there's opportunity when there's pullbacks here at home?
Yes, sir, ma'am.
Look, I still think North America will continue to be a very strong economy on a go-forward basis. I think once we get these tariff wars and tariff issues resolved, I think we'll be back to a very good growth story. And so, look, it's a matter of time. So, at the end of the day, I keep a close eye.
He's
on
one smart
sort of
fella.
Policy and way things will be going. But I do think as there are pullbacks, it's definitely a good time to start increasing your position to
Let's go.
like Canada, like the U.S. and Mexico.
Yeah, understood. Well,
Understood.
it's great to see you. And really, when people think about the breakdown of the
I love it when she says that.
portfolio, what we always knew was the way and how it worked, and that has to evolve too. As you're saying,
Honey, let's take a nap together.
adding
Understood.
like private credit, some alt investing in there as well. Jay Bala, thanks for being with us today. Appreciate it. Thank you. Still ahead, we're taking a look at small caps. Now, you don't need small caps to grow. You just need a few, the whole group. You just need a few, the ones you picked in a volatile market.
God darn it. Well, that dropped off fast. Fallen wedge, don't stop. Oh. We're back at 3. Fallen wedge. We're back to support, which was resistance. Then. Do 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 do. Okay. That's the way the day's been today, man. You think it's going to break and it doesn't. $5.75 and $3. $3.75 and $2.75. $3.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of
They were at $3.90.
the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. We welcome in Brandon Nelson, Senior Portfolio Manager at Calamos.
Would you interview me, baby?
With us. So you're always trying to find some ways for folks to make some money. In the meantime, managing that risk, of course, and, you know, watching the principal. And you think there can be some real great finds in small caps.
Let me tell you about my sneaky snake trading strategy.
Yeah, absolutely. The truth of the matter is, if you want to find big winners, you have to look in the small and micro cap buckets. Those are the under $5 billion market cap buckets. Even if small caps are lagging large caps for long periods of time, like the last 8 years or so, interestingly, that's still where you find the biggest winners. And so I think what happens too often in the minds of investors is that they can be very dismissive of small caps as an asset class. They say, oh, you know, they're all just hanging by a thread, you know, on the brink of bankruptcy. You know, they're not profitable. They need the Fed to be cutting. They're too cyclical. And so a lot of investors and advisors just dismiss the group. And I think that's the wrong approach, when in fact that's where you find the most big winners. And so it really comes down to stock picking and, you know, picking your spots. Maybe the average small cap stock is more cyclical and has worse financials, but there are gems all over the place within the small cap universe, and it's really our job to try to find those gems.
Yeah, Brandon, I used what you wrote in the notes saying you don't need the whole small cap group to, you know, outperform or do great. You just need to find some winning small caps and doing your homework and using strategies that are proprietary to you and your team. In fact, your fund is a top-rated fund, right? CTSIX is a #1 small cap growth fund. Pretty impressive.
Yeah.
Thanks for the plug.
Work like that. Yeah, no, but why? How is it that the team is managing to find these winners?
Yeah, we take a lot of pride in finding these winners. We have very proven processes. We've been doing this a long time, you know, coming up on 29 years for me.
Oh, 29 years, shit.
But we have
that beats my record.
A very sound approach with a lot of rigor to our processes. And so we're trying to find stocks that have a sustainable growth profile, where they're not just a sort of fly-by-night growth entity that's only going to grow fast for a quarter or two, but something that has really strong sustainability of growth. And then matching with that, we want to find stocks where the growth is underestimated. So the companies have a knack for not only growing fast, but have a knack for meeting and exceeding expectations, putting up clean earnings reports. Because if you can do those two things, even when the macro is sour, or even if the small caps are lagging large caps, if you find stocks with those characteristics, fast growth and underestimated growth, you should be able to find big winners in the portfolio. And there might be some times when you're feeling a lot of market tailwinds. When that's happening, the market's really embracing that sort of approach. And then there's other times where the market maybe isn't embracing it as much, but you know, the company-specific strength is so strong that it still makes that stock at a minimum sort of mediocre. And so that's sort of the theory. Worst case, we're mediocre, but in most cases we should be a lot better than mediocre. In 2024, just to answer your question about, you know, what drove the strength there, it wasn't because small caps won. They lagged large caps by over 1,000.
Golly, man.
And yet we still had top-notch performance because we found so many of these big winners that had that profile I just described, the fast growth.
This is up and down, up and down. We're getting a lot of that price volatility now.
As they were executing throughout the year.
So I was at 350. Now I'm at 310. It was 285. Now 295. We got to break to 50, and I got to go use the restroom. So I'm going to take my phone with me, just in case. And then we'll stop out it. I'll be right back. We got 16 minutes to power hour. I kind of took the fallen wedge here, just thinking we'd break the 50, but we haven't done it yet. And I was at 390. I could have sold it and made $227. Now I got 6 of them.
Raw material. A few.
Come on, baby, break. We're at 330. My average is 288. Break the 50. Do what I say. Everything going my way. They're trading. The market makers are good today, I tell you that. I got a two-headed snake. Uh-oh, uh-oh. Everything going my way. $390, baby. Let's go. Does anybody see the Head and Shoulders? Can anybody take my chart and draw the Head and Shoulders in? 430. Profit, 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 profit. Does anybody see the head and shoulders? All I'm hearing is crickets. All I'm hearing is crickets.
Affirmative.
Come on. Everything's going my way. We're going to move that down. Do you see anybody see the shooting star? Inverted hammer. Head and shoulders. Yeah. I'm making my money back. Well, I'll tell you, little fella. Here we go, 420. Randy. Okay, I'm getting out. Unless we go higher. Anybody see that? Look at that. This is a lesson to learn. So let's talk about this here chart. In case you ever get in this situation again, you can see it up on the monitor, you people on YouTube. So you want to you don't want to know in advance what you're doing here. Okay? So you want to look for exit ideas before you even take the trade. So we have a fallen wedge with a double bottom and a higher low. I called this trade out right there at the 200, and we broke out of the wedge. And pay real close attention to this. This is a perfect pattern to watch. So this is called a fallen wedge. If you can count to 4, you can make a little bit more. But we hit it 5 times here. I'm going to call this 1, 2, 3, 4. That's the sweet spot. So we broke out of it. We had a higher low, which is a double bottom off this wedge. When we broke out and hit the 50, it came back and hit the 200 on top of that wedge. So that old resistance now becomes support. And that's where I added on the 200 right there. This thing got up to 490 from this, when I took this entry on the double bottom, all the way up there, hit 390. So when it came back and hit the 200, I jumped back in. That's the top of that resistance line of the fallen wedge. And usually that's the time where you want to take the trade. You always have snake, breakout, pullback, boom. And then I recognized the head and shoulders. So that was my exit idea. As I started getting close up to it, and I noticed this thing right here is a inverted hammer. But we went ahead and double topped up here to tweezer top. Now see, you could get back in the trade off the 63 and the 200 EMA right here, maybe. We're now back at 330. But once I hit that right shoulder the second time, it's just like coming down here on the head and shoulders. An inverse head and shoulders. See that wick right there? So you got your head, you got your left shoulder, you got your right shoulder, and your right shoulder the second time. And it reverses to the upside. Here you've got your left shoulder, your right shoulder, and your right shoulder, which is just the opposite. And then it bounces off the 50 and the 200 right here, and the 63. And it was 330, so now it's at 370. And if I'd have bought 3 of them, I'd be up $120. And there's another head and shoulders right here. Left shoulder, head, right shoulder. Same thing, you hit that shoulder line and it stops. So that's called a head and shoulders. Second time, second touch. Bam, out. So I had 288 average and I sold them. What'd you do? Put bird? Oh boy, that one's a good one. That's a good one. I saved the other one, but this one's better. I got to save that one. It's a funny one. Oh boy. I can't take it. It's too much. I gotta say, this is what we're laughing at, people. I gotta show YouTube this. I know, Jim, you're mocking the Pope. I love the whiteness. Oh boy. That's a good look. It'll be peace in the valley for me. Wear it to church Sunday. That piss off my liberal friends. You can't be doing that. Yeah, you're right.
That's disgusting. You can't be mocking the Pope like that.
Look at the breakout on that 560, baby, from 330. I'm making it back, Jack. Double top. Double top's your next pattern. I'm going to start a different strategy next week. Double top, baby. Oh, man. God, turn it 710. Jeez. 288 to 710. Big son. God. Frickin'. Frickin'. So I sit in a trade all day long and I get screwed. And I said, it's like my theory, man. Stick it out. And I talked about what I was going to do. I was going to roll it up to a higher level. And I got closer to the money. Then 5700s only went to 85. Where these jump, they're at $9 now. From $3 and $2.50. Look at them suckers. They're going to go to $2,000. Here we go again. Was in a great trade, and it's 840. The 570s are now at $2. So that would have been, if I'd have held on to them, I'd have made another $400. That's so funny. The girl, Sparks, the girl sent me a I owe Y for that. That means I love you, baby. You're fixing. You're giving me a sense of humor. Sparks. You got out at 8? Good job. Unbelievable, ain't it? How many did you get, Richard? Were you able to make your money back? That's good. I made mine plus. I just had to take the loss. Well, remember the fallen wedge. It came in handy this time. All them other resistance levels were just hitting trend lines and not holding. Finally, when we broke, that made the difference. What was resistance now becomes support. I'm gonna put up a new chart in here. I'm gonna see how this alligator chart looks on here. I used to trade this chart a lot. Alligator. Where's the alligator chart? Linear, Bollinger Bands, Williams. I better have it in here. See how these are different moving averages right here. Oh, Williams alligator. It's not going to show. So that green line, the jaws start to open. It runs up, then the jaws start to close, and the green line pulls back to under the blue one, and then it pulls back up, and the green one's back up on top again. Now this one's pulling back. That's on the 1 minute. Let's look at the 5 or the 3. Kind of hard to tell. Let's go to the daily. Or an hour. I gotta pee again. To the daily. Yeah. We're coming back down to the 200 here. End of the day scalp. Coke. I'll be right back. I go get my towels.
Yesterday before the bell. When you're looking at that, I saw you were able to raise your outlook going forward as well. What led into what was a successful quarter for you guys at Appian, and then also the confidence to hike things going forward?
Yeah, we feel strong about this quarter. Our adjusted EBITDA of $16.8 million is a nice follow-up to last quarter's $21.2, and it's really showing the earnings potential in this engine that we've built. We feel great about that. But the main revolution, and we're also doing good business in the federal government despite the disruptions. We're up sharply in terms of billings there. But the thing I'm most pleased about is coming off of our conference last week. We had our annual conference. We dropped a set of new AI-related, agent-related functionality, and it's got such a wave of momentum right now. Our AI usage is up 7.9 times year over year, and we're getting incredible feedback from our customers. I think we've really found a way that we can bring AI to work and make it valuable for our customers.
Along those lines, I think there's been some chatter that maybe kind of peak AI hype happened, but maybe that was more with the hardware build out. Sounds like momentum is only picking up from the software side of things. Do you think that's safe to say?
I think we need to reset our expectations around AI. I don't think it should be about giant leaps of creativity and improvisation, not in 2025 anyway. I think AI should be boring. I think we should use AI for regular jobs and expect it to do regular work with superhuman efficiency. And that's what we do when we put AI into a process.
I think that makes a lot of sense, and if we're looking for ways that companies are being able to monetize and use this technology nearly immediately, it seems like that's where the successes have been. We've heard companies like Walmart, of course, talk about that, and that's obviously a company that could utilize those efficiencies. But I want to come back to something you talked about, which is sort of the government contract and kind of, I guess, what has been perceived from the outside looking in as maybe a little bit more of an uncertain environment going forward with the cuts that were hoped to have been, I guess, found by Doge. As someone who has that, a company that has that relationship, what has that perspective been when you have a little bit more of a viewpoint in?
Yeah, well, there's absolutely volatility going on in the federal government. I can see it out my window right now. I can look down into Washington. We are on the Beltway, and we've been here for 25 years, and we understand what it means to do business with the federal government. There's never been a time like this. Doge has overturned a lot of old traditions. And it's not just a destructive force, it's a movement. Doge wants modernization, wants efficiency, wants positive change as well. And we're working with them in multiple agencies. And look, it's a major variable, and I don't think anybody can predict where it's going. But we started this year declaring cautious optimism. And after a pretty strong first quarter of federal business, we're going to stick with cautious optimism.
Matt, I'd also imagine, too, you're in the business of trying to make processes efficient. Sounds like what Doge is trying to do. Feels like you could be an answer for some of those things, but that'll tie into my questions as we go into AI again, is I think that's where so much of investor, understanding and concerns are for so many businesses. But
got another flag.
Your perspective on what this may mean for jobs.
Prepare ye.
That's always a worry when new revolutionary technologies come through. You talked about doing things at superhuman efficiencies. I think many's first response to that is like, well, what does that mean for me?
390. What time is it? 2:29.
Yeah, I look at it this way. For any new piece of technology, I ask, does this make an individual human being more powerful? And AI clearly does. It makes us more efficient.
5670s at 410.
It extends our capabilities. And so while it is going to reshuffle some jobs, no doubt about that, it's also going to make us all stronger. And it means we're going to be more productive, and the jobs that we inhabit are going to be more powerful jobs. It's not going to cause unemployment. It's going to cause
5675s are at 245.
That's an optimistic view, and I think it's one that many share with you. What is something that Matt
215
and Appian are
Here we
looking
go.
forward to, and whether that's the shorter term or the longer term for both your business and maybe the outlook for the entire AI landscape?
Well, we're thrilled about deploying agents this year throughout business processes because we believe that inside of a process, an AI agent can be far more effective than it can be running on its own. It's a bit like an engine needs a car in order to get anywhere.
We're at the 200 right here.
Tracking or delegating.
I'm going to move them up a notch. No, I'll leave
Guardrails that you get, all that structure that process gives to AI is a necessary component to get AI to really get to work. So I'm excited about deploying this functionality across all of our customers. I'm also excited about the AI conversation.
I'm going to move them up a notch.
Moving from one where it's characterized by hyperbole to one where it's characterized by results and real numbers.
5670s.
Well, we're excited as well, and we hope to have you back to see how things are unfolding as time goes on and AI continues to evolve going forward. Matt, thanks so much for joining me, and have a great weekend.
220.
And we'll catch up soon. That's Matt Calkins, CEO of Appian, off the heels.
This is a risky trade here.
For the company. Coming up, we're going to discuss the latest headlines in the world of crypto, particularly with Coinbase, as Owen Lau from Oppenheimer is going to stop by, and we'll get his earnings takeaways right after this.
Calls. Ooh. 220. Off the 200. Off the 200. With a hammer. Jim is taking a risk now. $270, baby, yeah! 290. $320, baby, here we go. 310. Bingo. 3.10. What else can I get? I got 310. 310.
Trading at
340.
is now powered by Ameritrade.
360.
Traders even
Damn it,
more
come on.
to sharpen their skills with tailored education. Get an expanding library.
380, 390.
Webcasts, articles, courses, and more.
Yeah, I'm going to take it here.
All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals.
Yay, 420.
And more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Now for a look at the crypto space, particularly Coinbase. I'm pleased to be joined by Owen Lau, Executive Director,
Head and Shoulders,
as well as Senior Analyst at Oppenheimer, with the fun job of covering companies like Coinbase and digital assets and crypto. So Owen, first off, thanks for joining me. Happy Friday. We got the earnings takeaways from Coinbase. I got these huge printouts of all your heavy-duty research. Why don't you give us the kind of headline takeaways from your perspective?
Yeah, so first of all, thank you for having me, Alex, and happy Friday to you too. So the headline is, you see many headlines about they missed this and they missed that on revenue. I felt like they printed the bottom line EPS at $1.94.
$1.94.
$1.94. So I would say this quarter was broadly in line with the analyst estimate. The one thing which was surprising, or maybe
that looks like
than expected, was actually the guidance. I felt like the 2Q second quarter guidance in terms of the subscription revenue and also the trading revenue were a little bit below the expectation. So that's why I think it explained why the stock is down.
Falling wedge, head and shoulders. Head and shoulders.
Also, maybe why it appears to me, correct me if I'm wrong, you adjusted your price.
And called it right here off the 200.
$10, $279, and your most recent now at $269. You do keep the outperform stock rating on the company. Is this just still one of those companies where it's the best in breed in a growing industry, and that's regardless of the setbacks that it may have, it's still the best of the bunch?
You're exactly right. We adjusted a little bit down because of the weaker than expected May trading volume so far. Now we have 7 or 8 days trading volume. It has been going down from April. So the trend has not been their friends so far. But I would say this is mainly driven by the macro factor, in particular on tariff. When you look at the trading volume over the past 2 days, it skyrocketed from about $1.7 billion every day, like in the first 6 days of May, to around $4 or $5 billion over the last 2 days, when we saw the escalation of trade war narrative coming out. So what I would say is, it can turn quickly in terms of trading volume. If we see more de-escalation, the trade or maybe the trend can reverse, and you will see the stock to go back up. So that's why we maintain our outperform rating. And you're right, this is still one of the leading crypto exchanges in the world.
So Owen, as we stay with Coinbase, but we shift gears slightly and we look at this acquisition that was announced as well, it looks like an expansion into the derivative space is going to be the goal of this Deribit, I believe it's pronounced, acquisition. What do you make of this? You think this was a shrewd move, or are there question marks around this one?
So 3 key points I want to make here. Number one, this is the largest M&A deal in the crypto history. It was like a $2.9 billion deal. The second point is, look at the structure of the deal. Coinbase only spent about $700 million in cash, and they are going to issue $11 million in shares. So if you go back to like 2-3 years ago during crypto winter, they were laughed at being a public company. Now they're reaping the benefits of being a public company and can issue stocks to make one of the large, or not one, this is the largest M&A deal in crypto world. The third point is, you're right, they expand into the option trading that complement with their existing spot and futures trading. So it will help them expand internationally and offer one-stop shop to offer spot and derivative within Coinbase. So those are key points.
Oh, and as we take a look at this entire industry, so much optimism after the election of Donald Trump, with this thought that this new administration was going to be more favorable to crypto, at least from a regulatory standpoint, and perhaps that just means clarity and maybe less, hostile in that regulatory clarity. But then also, we've seen so much volatility in the overall markets, yet I look over at Bitcoin and it's done all right. How much do you think that's done to improve sentiment around the crypto industry as a whole?
If you look at the fundamental, you're definitely right. We have the most pro-crypto president, administration, Congress, and even the SEC. So now they are moving into the direction that we are going to have more regulatory clarity. The Senate and the House passed
Senate and the House?
Stablecoin Genius Act and also the Stablecoin Act already in the committee. But they hit some roadblock this week. I believe it will get resolved at some point. But still, the trend is still moving to the favorable direction longer term. So the key point again is we just need to get the tariff de-escalation so that people can get more get more into the risky assets to kind of like maybe the Bitcoin will try a new time high.
Good stuff, Owen Lau. I appreciate it so much. I hope you have a great weekend, and we'll catch up soon. The hard work done for the week, Mr. Lau. Have a good one. That's Executive Director and Senior Analyst for Oppenheimer. Coming up next, we're going to catch up on the commodities with Phil Striebel. He's going to talk dollar. Nice move this week. Bonds as well, as they seem to be relatively stuck in a rut. You see the equity markets oscillating around. It's actually exactly unchanged. We'll be right back.
Doo-doo.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the only way.
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
$19 more minutes left. 19 more minutes left. Let's call it a day. 19 more minutes left. Hey.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab.
He had
Branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Alex Coffey with equity markets sort of limping into the final turn. We're going to look elsewhere. No one better to help us with a commodity check than Phil Striebel, Chief Market Strategist for Blue Line Futures. Phil, happy Friday. Thanks for joining me. Let's just go around the horn here. I'll throw an asset class to you. You give me some thoughts. Let's start with a big one. That's gold.
Oh, gold. So, I mean, it's essential when you're looking at the gold market to, because of the volatility, to kind of take a step back and understand the dynamics and the main drivers of the market right now. The tariff negotiations, they've been going on, and the market is starting to get some kind of sense of relief because of that. Now, when you get progress on the tariff negotiations, it acts as a headwind because people rotate back into risk assets. The second thing to monitor is central bank demand. I mean, we've seen China, they've added for 6 straight months on central bank demand with the gold market adding to those reserves. And finally, the ETF flows up about 7.1% year to date. So if those can continue to develop, you're going to see gold futures move higher. Now, before you interrupt, there is also that problem.
Before you interrupt.
We've seen some volatility get to the downside in that market. And it's
Who is this guy?
Dollar has a 95%
Before you interrupt.
correlation. Manage money, the participants, they just aren't there. And then finally, the Federal Reserve, they're not giving us any love by cutting interest rates anytime soon.
Yeah, gold is a
Yes,
tough
they
one,
are.
right? From a trading standpoint, it's like a heartbreaker. But from an investment standpoint, it always just seems sort of like that break glass, all-weather asset, and it's certainly performed that way as of late. So it's a tough one. Let's talk the dollar, because the greenback's typically a risk-off asset as well. But in some ways, it's been the culprit of the risk as of late. What are your thoughts on the dollar?
Yeah, the dollar.
Before you interrupt, let me finish my poem here.
Still up from investors. We've seen the dollar index treading water around the 100 level. Could continue to break down. At one point, the euro currency
Okay, get ready.
was going to start a decline, but the market had.
Before you interrupt me, sir, we're getting ready to break. These are now at $2 and $2. 190, 185. Position yourself with a falling wedge. 165. Right about now at 150. $1.50. 125. Okay, we're at number 4. If you can count to 4, you can make a little bit more. The 5670s at 120. Calls. Scalping. Lotto. Oh, no. No. You're not supposed to do it like that. Okay. Jimmy's in trouble again. Do. 36. 36, 24, 36. Danger, Jim, danger. We're under the 200. Uh-oh. 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 Can we get more? The crowd's going wild at the sports arena. We're at 150. If you got them at $1, you're really looking good here. Uh-oh. Oh. That wasn't nice. How dare you? It's 2:40, 3:48, so I got a couple minutes here. Let's go. You can do it. Bring it to $2. Back to even. If you're in this trade, you can get out now. I'm a little bit below I'm 3 notches out of the money, so I don't look good. Which way, America? We want to go up. Back to even. Come on. 140. 135. Oh yeah, that's not. Break it. 175. There we go. Now. 190. Thank you very much. Thank you very much. Thank you very much. 180. I'll take it. I'll take it. End of the day scalp. That's 3 of them. I'm one cold dude. Don't mess with Bimbo. We've got 9 minutes left and I'm done for the day. Turned out to be a great day after all. Well, it's definitely, wasn't that fun this afternoon. Thank you for the compliment, Josh. The crickets are sounding.
Not a bad end of the day.
Nothing for you.
Pity just lost his trial. Nothing wants to hold today. Them 570 calls them next day, they held pretty good today. Could have got out of them with $2 from 137. And they're still at 150. I almost thought about swinging them, but I didn't. Get back in them and swing them. We got 4 minutes left, Rob. Be careful.
Important. 1.2 trillion in revenue from our companies selling to the Chinese consumers. I know we always think it's the other way around, but that number represents more than 4 times the size of the trade deficit that comes from Torsten Slok of Apollo. And the S&P 500 as a whole generates about 6.1% of its revenue from selling goods in China or to China consumers. So look, it behooves both countries to find some type of resolution. Hopefully, I don't think that's going to happen this weekend, but at least hopefully we're starting some make the legwork move in the right direction.
Yeah, I think we, regardless of how big of the deal with the UK was or not, it does seem that we have a roadmap now, maybe a blueprint for what these deals might look like.
1 minute left.
And what we can look forward to perhaps unlock.
So, let's do a little summary for the week when the bell rings here. 5-day summary. Not an easy day, that's for sure. I keep thinking yesterday was a tough one. It was in the morning. We had that big bounce, that's what it was. Today was a tough day, but it was a good payday. So, 5-day, 1 minute. Monday, Tuesday, Wednesday, and Thursday. Where's the 5th day here? Well, what the heck? Five-day, 5-minute will work. So this was Monday, Tuesday, Wednesday, Thursday, and Friday. Wednesday was Pow Pow Day. We did very well on Pow Pow Day. And then yesterday is when I got stuck in that trade. And that's the 5-day, 1 minute. This big knife right here, or this big knife right here. Then we bounced off the 200 and it run on up on the 1 minute. So that played like a charm. Then the end of the day pullback. Then today again got stuck in the trade. SPX. Doesn't look that bad here, but it is. Don't look that bad at all, but then we went sideways for most of the day. Then bounced off the 200, run it up. Then the pullback here took a couple good trades late in the day. Then things added up. So eventually, all in all, we opened up on Monday at 56.54 and we closed at 56.59. So we were only up $5 by the end of the week. The Pow Pow news was the same old stuff. Nothing. He said nothing that meant nothing. He's behind the curve. So the market took it well the next day, and then we pulled back today. Trump came out and made a deal with the UK. Market liked it for a bit. We created new all-time high, new high for the week. But then we end up closing right where we opened up, more or less within $5 on the SPX. So the gap down day was a good day to get in the trade. 3 black crows on the 5-minute. And yesterday we had, I'm trying to figure out what kind of pattern this is.
I'm not really for sure what it is. I've never seen them before. It just looks like a backwards ascending triangle. You have a resistance that goes across, then you have lower lows. And that 63 always comes into play. Then for the next hour and 15 minutes, 5, 10, 15, 20, 25, 30, 35, 40, for the next 45 minutes, we had a good little run up. Respected the 9. So we had that big run up yesterday on the EU news, and then it ends up pulling back and consolidating. So the moral of the story is we didn't gain much this week if you were a swing trader. Now Tesla's got that news coming out on it's already broke 300. So this is, to me this is a big deal. Tesla broke out with the all-time high this week. Not all-time high, but recovery high. If you look at the 90-day 1 hour. So we went, let's look at the 30-day high. So it's definitely a 30-day high. We broke out of the double top, triple top right here, which was resistance. And I had 301.44 chalked out to break today, and we went to 307. So we get above that 300, and that 300 is a chalk line. If we can gain respect above 300, I think we can take this back up to 320 to 350 by the end of this month, and get up to about 350, maybe even higher than that, on June 6th, when they come out with robo-taxi. That's a big deal. And the video, I showed you the bull flag on the video. I think this one's about ready to start breaking out again on the weekly time frame. Trump is setting relief on the AI chips. Biden put a tightwad on them, where they couldn't sell them to so many to China and Russia. Well, I think Trump will end up lifting them when we make a deal with China. And they'll probably go back buying our planes. I don't think they can build planes. So that'll be China. We'll get back up here to the double top again at 150. Once we break this resistance line here of the 21. Now on the SPX and the SPY, I did a video on the SPY, and I'm going to show you something here on the weekly time frame, and I said it would be hard pressed to break this resistance this coming week. If you go back and watch it, it's the 50 SMA on the weekly. See, we tried to break it last week, and then this week we created a doji, a spinning top, and we stayed within that. So that's a harmony, and I think we can go ahead and break that to the upside next week and break past that 50 SMA. Once we break the 50 SMA, we're definitely going to shoot up higher, and that's with the SPY. So that's the 50 SMA on the weekly we got to keep an eye on. SPX the same more deal. We got the 50 SMA, and then we had a doji this week. So that doji's bullish, and we did crack above that 50 on the SPX today, or this week, yesterday. So if we can build a body above that 50, we're going to start shooting up higher. If not, we'll keep it within this here channel right here of that body, and we bounced off the 9 this week, and then we held the 9 on the weekly. So that's good. That's good. We consolidated this week's what we done. And earnings have been great. Signs of inflation are none. The unemployment, the employment rate's good. Jobs are being created, not government jobs. Now, the people at the IRS that are working at their IRS are pissed because they have to go to work now. They're not happy. They got a real cush job. Anybody that works for the government, they got a real cush job since COVID. And I think COVID was all about that. I don't think it was about saving the people because more people died under Biden than they did under Trump. I think it was about just keeping government workers at home. But they went on for 5 years working from home, and then they finally had to go back to work. So they're not happy. They're not. I work with them. I know. They are not happy. They had it made. You know, something went wrong in their life, they could fix it and still get paid for it. But when you're at work, you got to stay at work. You got to be clocked in. You got to, it's a lot more, get a lot more done, I think. But you're unhappy because you're forced to do what you had to do and you loved it before, but now you don't. So I see him. I eventually see him keep whining and grinding and eventually getting their way back, getting back their way of working at home. And there's a lot of DEI hires in that period. So we got the IWM. Now, remember where I showed you support was on the IWM on the weekly? It was right down here. And we've already bounced up on the weekly on it too. So we've had a good rebound on these indices in the past month and a half, month and a week. And you just got to see where we are. We're going to clean this up so you can see it. Here we broke the 200. So our next resistance is going to be the 21 on the weekly. And that's right there. I mean, that's right in that gap in the body of that candle. So it could go higher than that. We could end up back up here. But that 21 is going to be your resistance for now. Maybe the bottom of that candle right there, right under the 63. And as long as we maintain the 200, that's on the weekly. And so it had a nice bounce. I called this out a week ago. I said, we're at resistance. We got a headed snake. We got, there's the shoulder line, and we hit back and hit that shoulder line. Right. Well, this is what I like about trading with Funk. He looks out, and he's drawing what's the most consistent touches that are on here. And right now, that body, all them wicks, that's a shoulder line of a three-headed snake. And we were down at them COVID lows. And COVID was a lot worse because we had a government shutdown. And we were in a recession, believe it or not. They don't tell you that, but we were. Just the government jobs, they kept their own salaries, and that's what kept us going, was the government workers were still at work. They didn't get hurt at all. They actually benefited from it. But private sector is the one that's got hurt the worst. The middle class and the lower class. But we were back down at that support level on the weekly, and here's the QQQ. Same thing here. We're closing in on that 200. This is when I wrote that song, Double Bottom, and we've had nothing but a 40% run to the upside in 2 years. And that's very unusual. It's very, very, very unusual when the market only runs about 7% per year. That would have been 14%, but we ran 40. So the pullback was necessary. It just was. I mean, it's nothing natural, needed to happen. So they had to come up with an excuse, and they're using tariffs as an excuse. We're not going into no recession. We'll be back up here at the top by the end of the year. Once we clear China, we'll be back creating new highs in the market. My opinion. But the fat cats wanted this pullback, and they're probably loading up, like some of them have been saying. Not a one called this pullback here. A month later, they started saying it. There's one came out yesterday. Oh, we've been buying since a month ago. And I said, well, where were you a month ago? Why weren't you talking about it? You were talking about a stagflation, depression, and recession. And they're just keep using. I found one thing out about, since I've been trading, they always come up with something. It was AI for the run, and we got way overbought. Stocks up 5, 6, 7, 8, 900,000, 2,000% in a short period of time. MSTR is a great example. 1326 back during COVID, and it ran all the way up to $543. This one split, it was at $2,000. Nvidia was at 10 something, 1081 in COVID, and we're up 153. We're still way overbought, but Nvidia is a different. AMD was at 54.57, and it ran up 500%, almost 500% in a year and a half. That's way overbought. Now we've come back to a solid support. This one here will be good to go long, back up to 132 this coming year. AMD, when they make the China deal, this thing will fly. And what else? SMCI. SMCI was at 370, and it ran up $122. So how many thousands of percent is that? That's quite a bit, right? That's a lot. That was way overbought. And now we're consolidating at 31. Still 370 to 31 bucks. $32 is still a big percentage. Almost 1,000%, 1,100%, 1,000%. It's still way up there. Still overbought.
But when it was at 122, it was up a lot more than that. It was up like 4,000 or 5,000%. That's why I was freaking out so much on these runs. I said, dang, stocks don't run like this. They just don't do it. And some of you traders ain't been around that long, maybe a year or two, half a year, and you're going, wow, you know, we're way oversold. We're not. We're way overbought. Tesla, we called out at 110, down here at $100, and it ran almost 450%, 460%, and that was way overbought. Now we're back at solid support. We could go lower, you know. That one dude that called out 228 was right on. I laughed at him. But he nailed it. I mean, I don't know how he did it, but he did it. Let me see. I might know how he did it. That's how he did it. Fibonacci's. Look where the 38, 68, 62% pullbacks right on the 200. So that's probably what he was looking at. The 200 EMA and the 200 SMA. That's probably exactly how he did it. Just put the Fibonacci on there and said, that's how we're going to pull back to that lower support, that third support on the Fibbies. That's right on the 200. 38%, 62% pullback. But I was happy when we pulled back and hit the 200 there on the, you know, this one hit the 200 EMA and bounced off of it. So right now we're at a 50% pullback from the run. So 50% is a good pullback. I was laughed at when I called this out at 160 and we ran all the way to $2,000. But back then, we've had a split since, but it was back here in this area here. It was right around $168, right when he came out and showed that that truck of his. But back then, there's a lot of negativity. Everybody wanted, we're not going to EV, we're going to gas cars. And then when Biden took office, he put so much money into EV, he put hundreds of billions of dollars in the EV market of your tax money that was wasted. They could have done stock splits and share buybacks and all, you know, they could have done it on their own, but no, we had to use tax money. And it caused us to be in added 14 trillion debt to our budget in 4 years. We were already over budget, and then that other 6 to 7 trillion didn't help. Plus the 2 trillion that we were over budget for the 4 years, counting the 7 trillion that he printed besides the other 8. So that's the way it is. We just went through a lot of liquidity.
to get out of here. I wish everybody the best. And we'll catch you all later. Have a great weekend. Watch out for my videos. Great week. This Rob was kind of missed. We missed you, Rob. But you came in and saved the day during Power Hour. And then Funk. We owe another Funk stuck it out for another week. He went back to work, but he was in here calling trades out. I like working with Funk. Magnificent. Thanks for all your laughter, Sparks. It really made my day today, seeing me dressed up like that in a Pope outfit. It put some smile on a lot of people's faces. I went ahead and bloasted it on StockTwits and in other rooms. So we'll catch you all later. Again, thank you very much. Mother's Day. Don't forget about Mother's Day.